We have been deeply innovative. We now have a market share and market leaders in the Indian market. But having said that, overall, if you look at the consumer AV business had multiple headwinds, and hence it is the reflection in terms of how we have performed in the past few years. But I think we've been pivoting significantly to enterprise security, and that's the work that has been happening behind the scene for last 3 to 4 years. And by doing so, 40% of our business mix has now moved to enterprise security, which is significant because that's where the growth is happening as far as cybersecurity business is concerned. So what you can anticipate from our side is to continue to invest and continue to pivot to enterprise security. And then what you need to look at is not just global, but Indian context as to how the enterprise security business is growing. And you can expect that we will start seeing that growth as far as our business models are concerned as well.
Okay, all right. Hi, Vishal. Good morning and good to see you. Ben, let's put it into numbers then. Last couple of quarters, you've been doing a quarterly run rate of close to around 80 crores. I recall a few quarters ago, you even hit the 100 crore per quarter mark. Do you see that happening yet again at some point of time during this year or next? Do you start moving to that 100 crore per quarter quarterly run rate?
Great to see you, Nigel. See, basically, when you look at it, we don't give a guidance in terms of, how we're going to do in the short term. But what you can anticipate and expect is that we have had multiple of our cybersecurity enterprise stack, which has just been made and rolled out into the market. And we're extremely bullish in terms of how, we expect them to perform. And we want to make that change in terms of getting from our current micro and SMB segment into mid-market and the lower end of large enterprises. So that's been our focus. The second is about, going into government business, Atmanirbhar Bharat, Make in India. We are the only large cybersecurity product organization from India, and then want to make the global footprint. So all these things are definitely going to, yield the growth that we are anticipating. I'm not going to give you a color in terms of, when we are going to reach 100 crore on a quarterly basis and so on and so forth. But clearly, you can expect us to grow faster than the average increase, the run rate that is there in the enterprise security product market. And that's really how we're positioning ourselves, right?
So how much, what is the increase you're factoring in the enterprise security market?
So we are right now at around 40% in terms of our global our revenues, split between consumer and enterprise.
Correct.
We were 20% just 3 years back. So you can see the growth that is happening. Generally, the enterprise security product business is growing at around anything between 12 to 15%. You can expect us to grow higher than that growth rate in the coming quarters.
How much higher? 1.5 times, 1.2 times, 2 times? I mean, what is the outpacing you're looking to do in comparison to the industry? Quick Heal versus the industry on the enterprise side of things?
No, we don't want to,
what have you done? Okay, what have you done in the past?
No, so we have grown on. Look, basically, when you look at in terms of our enterprise stack, we have now grown at the pace of the industry, and that's because we have been building this product for the last 3-4 years. So we have been on par with the industry. Now is the growth because we have introduced the products, we can grow faster than them.
All right. What about, the payment terms of the enterprise business? Because I look at it, your debtor days are at 165. As you were building that business, because it's an enterprise business and not a consumer business, one assumes that maybe payments come a lot later. It's reflected in your cash flow from operations as well. 2018, it was 94 crores. 2021, it was around 99 crores. 3 years later, 2024, last year, cash flow from operations were just about 18 crores. So with the enterprise side of things improving, does that have a further bearing on your working capital? Can you give us a sense of what you're targeting in terms of working capital days receivable?
I think a lot of the headwinds that we're seeing in our collections are largely from our consumer business, because obviously the impact aftermath of COVID and how the degrowth has happened in terms of overall adoption of laptops and adoption of paid antivirus. Our collections and our DSO in enterprise business is better as compared to our consumer business. So in fact, it is going to give us relief in the long run in terms of how our collections can improve. So I think we are in a better space once we start seeing a better enterprise mix compared to a consumer.
All right. And what is better? At what level does, do things start looking a lot better? Are you looking at 50%, 60%, or 70% contribution from enterprise? In the last 2 years, you've doubled from 20 to 40. And because you're saying that the pace will grow much more than what it has in the last 2 years, do we see that hit the 50% mark in this year, maybe 60, 70% over the next couple of years? What's your aspiration here?
Yeah, I think you have to just look at our past to see what our future holds. So we will definitely we'll do better than how we have performed in the last 3 years because of the way in which we have been investing and releasing the products. We look at our product range into 3 categories: Horizon 1, Horizon 2, Horizon 3. Horizon 1 is what is our current cash cow and our core. We were deeply pivoting towards our Horizon 2, which are the products which are in the market, and Horizon 3 investments which are currently going on. You are anticipating the DPDP bill and its positive impact in terms of widespread adoption of cybersecurity and privacy-related aspects for the body corporates. We have a product which will solve that problem. And so clearly what we are seeing is that we will do that pivot. So I think the way you are putting it, that's exactly how we see it panning out going forward.
All right, Vishal, tell us more about this DPB. I think it's data protection bill that you're talking about, right? How does it, I mean, what kind of an opportunity does it throw up for a company like yours? If you could give us, you're focusing more on the qualitative aspects rather than quantitative aspects. So if you could give us some color on that front, because that's going to be the big focal point, the data protection bill.
Yeah, I think, before we talk about the business, I think it is, extremely opportune time that given the way in which India is digitizing and the India digital stack is becoming a benchmark for other countries to follow, I think it is important that we also set the benchmark in terms of how we build cybersecurity standards, in terms of how it is adopted within the industry and the government. We have seen that whenever any data protection acts have come into different parts of the world, there has been a marked adoption and increase of cybersecurity awareness and implementation, including privacy. So we expect that the same thing is going to happen as far as when the enforcement happens, because the bill is already active. We have seen the IT minister talking about it being released for consultation for enforcement. So we expect that within the next 5 to 6 months, it will start getting into implementation phase. So clearly from our point of view, because we are well positioned and we are giving to our customers a complete end-to-end enterprise security stack. We just are not one product vendor. We are not just an antivirus company anymore.
Right.
We are a cybersecurity company. So that pivot has already happened. So we provide that as a holistic solution. So once this happens, we will start seeing a widespread adoption of the solutions that we have. And that obviously, can create a significant impact in terms of how we see our growth.
All right. Thanks a lot for joining in. We hope that, you join us more often and we get to understand a lot more about your business. Data protection, security, like you said, is extremely important. But more important is the way you are positioning your company. The street is expecting a lot out of you. Let's see whether, you'll deliver going forward or not. You all have tall targets as well. If you just take a look at the way, the Quick Heal stock price has moved over the last 12 months or so, it's more than tripled. Over a 225% gain is what we've seen. Today, it's up around 5%, but a longer term chart tells you that a lot more is expected in the price at least. Let's see whether the company goes ahead and delivers on that as well. Vishal, thank you for joining in. Take a short break, come back, get you more on the markets and individual stocks on the other side.
Creator friendly.
This is India's election headquarters,
As the verdict emerges, the markets will react.
bringing market movements into sharper focus with the most authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned. things not looking very good for the ruling regime at this juncture.
Of course, things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Well, at the top of your screens, you will see that all the indices are doing well, mildly in the green for the frontline indices. The mid-caps doing well, and the mid-caps have 2 sets of stocks which are doing a lot better. One are the metals, the other are fertilizers. So let's see what the second half of trade brings for the frontline indices and a lot of these stocks. From Nigel, me, the entire team, thank you for watching. That's a wrap on this edition of Chartbusters.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour. Hello and welcome to Trading Hour. I'm Sonal Bhutra and with me is Surbhi Upadhyay. Surbhi, good morning. Well, we did see some highs in the morning. We've come off those highs, but still, markets are managing to be in the green. A lot of outperformance coming in from the broader markets for sure. Beat chemical names, a lot of them doing really well. So some possibility of a recovery that some of the brokerages are talking about. And fertilizer names, they are just going one way after the expectations from the GST Council. But of course, that is something that we'll get to know only over the weekend.
Absolutely. I think we're wearing, absolutely well-balanced colors, red and green, and right now the green is winning. And it's a good-looking screen, actually. And why do I say good-looking? Better than yesterday, or even better than this morning, because when we opened out, it was an extremely narrow start with only a handful of bank stocks moving higher. Now, banks anyway are doing okay. The Bank Nifty is still outperforming. But other stocks have started moving on the upside of the screen as well. Reliance would be a case in point. It's up about 1.5%. There's ITC, which is now kicked into the green. There's Lever. Some of these consumer names are doing well. There are a couple of metal counters that are quite hot as well. Hindalco, Tata Steel, Coal India. So short point is that it's a more diverse market today, even within large caps. You're seeing more contribution come through, and the mid caps have recovered. The mid cap index is actually looking quite good right now, 0.7% higher on the mid cap index and a very healthy advanced decline ratio. So yesterday, remember, we had that pause. Mid cap market was selling off. Buyers are back today, and there's ample green on the screen. Let's get the advanced decline lines going. There we go. That's pretty healthy. Almost 1,700 stocks advancing right now, Sonal.
Oh, yes. So, again, we did see some profit booking. And again, mid-caps are back. They're taking all the attention from the large caps right now. But of course, as Surbhi was pointing out, some of these large caps are also participating. The likes of Reliance and some of these FMCG names as well. But we've been talking about individual names. So let's talk about an exclusive. Anil Agrawal, founder and non-executive chairman of Vedanta, says he's optimistic that demerger will get completed in this fiscal year. Adds that he expects a valuation of $1.2 billion per metric ton for steel assets. Listen in.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also. Steel, we are one of the best prime location of a steel asset, which is in Jharkhand, near Bokaro, is in the Bokaro. We have a proximity of all the raw material, iron ore and the coal. We are proximity of all the railways. We are proximity of all the gas. We have put this asset on the basis that if we get 1.2 billion per million ton, we have a 3.5 million ton of plant, which at the moment we are producing close to 2 million. 3.5 will be by end of this year. Total debt on the Vedanta Resources. Vedanta Limited is the subsidiary of Vedanta Resources. All put it together, the total debt in the company is $12.5 billion, which is not even 1.5 time or 1.2 time of the profit what we made. As far as the total debt on the top is concerned, we have the trophy asset on the top, which is, we own the largest copper deposit of the world called Kankola Copper Mine, which is on the top. And we are looking, people are looking forward from us. Would you like to dilute some equity into the KCM? We haven't thought anything so far.
Okay, that was a big interview of the morning. Vedanta co-founder Anil Agarwal saying that no plans of reducing stake in the company and the demerger of creating 6 listed entities is well on track. Well, speaking of big corporate voices, here's another one, and this is coming in from the banking sector. SBI Chairman Dinesh Khara is expecting 14 to 16% credit growth in FY25, with margins being steady at just under 3.5%. He was, of course, in exclusive conversation with us earlier in the morning. He says that excess provisions, which are already there in SBI's balance sheets, will help meet the ECL norms, expected credit loss norms, as and when they kick in.
We are hoping to see the credit growth in the range of about 14 to 16%. And we expect to see very broad-based growth in credit, right from SME, agriculture, retail, and also in the corporate. As far as we are concerned, our domestic NIM last year was 3.43. So I expect our domestic NIM should be around the same number. See, as far as ECL is concerned, first and foremost, I would say that over the period of time, the loan book of the banking system has improved significantly. So if the ECL comes, perhaps whatever competition was done, maybe about a year back, banking system would be much better. And we are certainly much better as compared to where we were last year. So I think from that point of view, we don't expect any kind of an impact on us as far as the ECL is concerned. MFIs are concerned, well, of course, I think the rural went through some challenges at some point of time, but now we are seeing positive trends. But yes, of course, we do hear from MFIs who are having a loan book that there were some challenges. But I think as far as we are concerned, we don't see any kind of a stress.
Okay, that's the word coming in from SBI, but let's stay with financials. Kotak Mahindra Bank and City Union Bank, they are doing well on the back of positive note coming in from brokerage from Macquarie. Macquarie has also downgraded SBI and other NBFCs. Abhishek Kothari is joining us with all the details.
To begin with, Macquarie has written on financials. They have upgraded Kotak Mahindra Bank as well as City Union Bank to, outperformance from neutral rating that they had earlier. They said that these stocks have underperformed in the last 12 to 24 months and valuations are cheap and risk reward is favorable right now. They have downgraded SBI to underperform from neutral after the recent outperformance that the stock has seen, as well as the fact that, there is upcoming ECL provisions or regulations which will kick in. Decline in return ratios, that is ROA and ROEs, as well as possible equity raise. Amongst NBFCs, they have downgraded Bajaj Finance, Chola, as well as MMFSL from neutral to underperformance, given the fact that outlook for loan growth is on the weaker side. They expect fall in ROEs, that is return on equities, and as well as the fact that there is a delayed, cut in interest rate cycle that they expect going ahead. So on insurance, they remain cautious on the overall insurance space. However, they have upgraded SBI Life to outperform from neutral, as they believe that it is less affected by the EDI, regulations that have come in. So they expected to deliver sector-leading VNB margins at 15% plus. Valuations in that context are reasonable in their view. So their recommendation with respect to target price, which has been increased, is for Kotak Mahindra Bank as well as City Union Bank, SBI Life and Bandhan Bank, while they have cut the target price for SBI, MMFSL, Bajaj Finance and Chola Mandalam as well. The Bajaj Finance target price is a huge cut to 6,600 from 8,100 that they had earlier. Back to you.
Okay, got it. Abhishek, thanks for that. So, yeah, lots of very interesting calls from Macquarie. But there's also a call from Motilal Oswal. Motilal likes DCB Bank, is it?
Well, after 5 years, Motilal Oswal has upgraded the recommendation on DCB Bank. They have upgraded it to buy from neutral, increased the target price to 175 from 155 that they had earlier. They say that business growth has remained steady and valuations are reasonable. So operating leverage will start to drive the ROE recovery for the bank going ahead. They expect 19% CAGR in revenue over FY24 to 26 with stable margins and steady loan growth as well. Talking about about loan growth, they expect recovery in loan growth and anticipate improvement in operating leverage as well. So they estimate 21% profit growth on a CAGR basis over the next few years. So they estimate ROA and ROE to reach 1% and 14% by FY26. So current valuation of price to adjusted book value of 0.7 times in their view is reasonable for the stock. Back to you.
Okay, all right, Abhishek, thank you so much for joining us with all those details. DCB Bank, the stock is up 4% in trade today. We'll do one thing. We will slip into a short break now. When we come back, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned for that. On YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity, and low self-esteem.
In India, you see a lot of gum disease, which is also promoted by things like tobacco and supari.
Poor oral health is linked to serious systemic issues like heart disease, Alzheimer's, digestive problems, bacterial pneumonia, pre-testing.
Welcome back. Let's put the spotlight on the commodities space. Like we told you, some of the metal stocks in the equity side of the market are also running higher. I think Manisha is looking at copper. So let's find out what's going on over there. Manisha, what's the latest?
Thank you for that, Sudhi. Well, a couple of metals which really seem to be doing well and have stronger fundamentals and perhaps more upside from here on are zinc and copper. Both of them trading off their recent lows, and copper especially is now off its 2-month lows. When you look at the last 1 month in sense of international copper prices, we've done an all-time high of $11,000 a ton. That was in the month of May. For this month, we have seen a low of around $9,500 a ton, currently trading at around $9,800 a ton. So we've seen a very sharp decline from its highs, but some recovery from the lower side as well. Well, there is contradicting fundamentals that we are looking at in sense of copper, but the support clearly seems to be coming in from the point that China has left its interest rates unchanged today. That is on expected lines and is expected to be supportive as well. If you look at the China data itself, that has been quite uneven. On one side, the property sector continues to be on a lower side. New home sales, property prices, investment in sense of property, all of those numbers are on the weaker side. But on the other side, there are some supply situations as well. If you look at Chile's Codelco mine, the supplies there have declined. China's smelter output cut at around 10% also seems to be telling you that the refined copper availability going forward can be a bit of a concern. But then again, if you look at the inventories in China, they are at a 20-year highs. And if you wanted to buy copper today, it's at a discount of $130 a ton as compared to copper 3 months ago. So there are various factors in movement right now, but the markets do believe that a bottom perhaps in case of copper is done. And from here on, you could be looking at some consolidation, even gains.
Okay, consolidation or even gains, and this has been the hot commodity, right, this year so far. Thank you so much, Manisha, for joining us with all those details. Well, we'll do one thing. We'll get into another break. When we come back, we'll put spotlight on a whole host of stocks that are buzzing around in trade today. Stay tuned for that. The insurance regulator has proposed that policyholders be paid a higher amount where they surrender their policies before it matures.
The insurance regulator has in its board meeting approved the final regulations. Now what the regulator is considering is the point on special surrender value. New draft again bringing uncertainty on that entire topic of surrender value. The business could become very unviable for these life insurance companies. The regulator has said the surrender value will be kept at elevated levels.
Cancer.
If your teeth, the way they meet, what we call occlusion, is not proper, it can lead to other damage, to the joints, to the gums. We have bone loss around the teeth.
Use a soft brush, destroy your brush, don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
Has picking up. The last year we had almost 6% of our turnover from the export. This year we are planning to almost almost increase our export to coming from the 2 times. Last year we have 70 crores. This time we are planning for 150 crores in the export market. Revenue growth last year, the way we have done crossed almost 23%. We have the revenue growth. We will maintain the same momentum this year also. Last year we had around 20% operating profit margin. Maybe it will be coming to around 25 in that range.
Of course, in the budget, the thing to watch out for would be how much of the money is left in the hands of the average household. So consumer durables, and consumption and consumer discretionary side of things, whether it be your two-wheelers or whether it be your health, pharma, and all of these things will see some sort of, extra attention than what these sectors have got so far.
I apologize for the grief that we have caused. And I want you to know we are totally committed in their memory to work and focus on safety for as long as we're employed by Boeing. So again, I'm sorry.
You said you've listened to the whistleblowers. Have you directly spoken to any of the whistleblowers?
I have not directly spoken to any of the whistleblowers.
Do you think that'd be a good idea to do that?
Yeah, I think it would.
I'd recommend it.
Yep.
You've got 32,000 machinists. These are American workers who work for you. These are Boeing employees in the Pacific Northwest. You're in contract negotiations with them right now. 32,000, that's a lot of them. The last time that they got a contract was 16 years ago. Do you remember the terms of that contract?
I don't. It was a very long contract.
Yeah, well, they got one.
Welcome back. You're with us on Trading Hour. Now let's put the spotlight on a couple of stocks that are in focus, starting with Sun Pharma. Sun Pharma is actually one of the biggest losers on the Nifty today. This after the company's Dadra facility received a warning letter from the US FDA. Ekta is joining in with more details. Ekta, so what is the issue with this Dadra plant?
Well, the Dadra facility has received a warning letter from the US FDA. Now, the street is not that surprised about it simply because they had already received an official action indicated status from the US FDA in April of 2023. This was based on the December 2023 observations which they had received. They had received around 6 observations at that point in time in terms of an inspection, and the observations themselves were telling enough for the street to assume that, this particular plant is probably going to face some amount of regulatory hurdles. So that escalated to an OAI in April of 2024 and now has been issued a warning letter. Now, the good thing is that with the warning letter, the production of the current, the current drugs does not stop in the facility, but the new approvals stop till the remediation is complete. With an import alert, the production completely stops. Now, the street is assuming that it's probably not going to escalate to an import alert simply because generally the trend has been that you receive an import alert directly without a warning letter, and it's been around a couple of months since the OAI, and if in case they were to receive an import alert, they would probably have already received it. Now the plant itself is important because the API for Revlimid generic is manufactured from here, but the overall contribution is expected to be mid to single digits or mid to high single digits, not too much in terms of a total contribution to the US sales. But one will have to see whether or not this escalates. On a larger scale, for Sun Pharma, remember that the Halol facility is also under import alert at this point, has regulatory issues. It's under an import alert since 2022. And the Mohali facility, which was under the consent decree, which is a plant that they received from Ranbaxy when the acquisition took place, did also receive a non-compliance letter from the US FDA recently. And hence both those plants are under the regulatory scanner, and Dadra now joins the list.
Okay, all right. So Sun Pharma and Focus, the stock though is down around 2%. Thank you so much, Ekta, for getting us all those details. Well, some more stocks in focus. Minda and C Info Systems, they are gaining after brokerage firm Goldman Sachs has initiated coverage on both the stocks with a buy rating. They've also initiated a coverage on Tata Technologies, but with a sell rating. Sonia is joining us with all these details. Sonia.
Well, thanks a lot for that. As you rightly pointed out, Goldman Sachs put out a very interesting note where they have two buy calls, one coming in on Uno Minda. Now, Uno Minda has been one of the strongest, companies and stocks in the auto ancillary space, and Goldman Sachs has initiated a buy. They have a target price of 1350. They talk about how the company is really well positioned for growth in India's auto component industry. They also say that the company is benefiting big time from the shift in premiumization of SUVs and, premium motorcycles, EV scooters, etc. So, Uno Minda is a big beneficiary of that. Currently, Uno Minda has 50% market share in the auto switches segment and 40% in four-wheeler alloy wheels. They also like CE Info Systems. They talk about how they've initiated a buy with the target price of 2800. The company is well positioned to benefit from its leadership position in the automotive navigation, mapping devices and connected vehicle space. But the stock that they are bearish on is Tata Technologies. They've initiated a sell call on that with a target price of 900. They say the stock is trading at very uncomfortable valuations of 50 times forward PE, and the fact that, the large concentration of revenues comes from Tata Motors and JLR. So they haven't really broadened their portfolio a lot, and that seems to be a big negative. Going forward as well, they say that it may become harder for them to broaden their customer base in future. Back to you.
Okay, all right. Thank you so much, Sonia. So, Tata Technology is lower by 1.5%. At the same time, Goldman Sachs has been very positive on Persistent Systems, both of them catering to the EV space. But thank you so much, Sonia, for joining us. Well, the other stock that is on our radar is Office Space Solutions. The company listed just a while back. It's been around 20 days. And this is the first earnings that they've reported after listing. It was a good set. And the revenues, they went up by 44%. The EBITDA was up 35%. The profits came in at 1.3 crore rupees versus a loss of 13.7 crore rupees, and this is the first quarterly profit that the company has made in a long time. So that is something that the street likes for sure. In terms of the segmental breakup, their co-working spaces and allied services, that is done well. The revenues have gone up by 27% there. The construction and fit-out projects, which is around 23% of their overall revenues, that has done really well, up 150% on a YOY basis. Losses, they have been continuously reducing in last couple of financial years, 17.8 crores this year, which compares with around 42 to 57 crores that the company has been making all this while. So good, looking good in terms of numbers. The outlook is positive according to management as well, and they do indicate that the occupancy in FY24 was at 71% and the break even at these levels as well.
Okay, really Office Space Solutions is absolutely bursting through today. Very, very excited on those numbers that came in the quarterly update. Let's take a quick break. We'll come back on the other side and talk about market technicals. We'll have Apurva Sheth from Sanco Securities joining in with a couple of trading ideas.
Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity, and low self-esteem.
In India, you see a lot of gum disease, which is also promoted by things like tobacco and supari.
Poor oral health is linked to serious systemic issues like heart disease, Alzheimer's, digestive problems, bacterial pneumonia, preterm delivery, and cancer.
If your teeth, the way they meet, what we call occlusion, is not proper, it can lead to other damage, to the joints, to the gums. We have bone loss around the teeth.
Use a soft brush, destroy your brush, don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
Has picking up. The last year we had almost 6% of our turnover from the export. This year we are planning to almost almost increase our export to coming from the 2 times. Last year we have 70 crores. This time we are planning for 150 crores in the export market. Revenue growth last year, the way we have done crossed almost 23%. We have the revenue growth. We will maintain the same momentum this year also. Last year we had around 20% operating profit margin. Maybe it will be coming to around 25 in that range.
Of course, in the budget, the thing to watch out for would be how much of the money is left in the hands of the average household. So consumer durables, and consumption and consumer discretionary side of things, whether it be your two-wheelers or whether it be your
Welcome back. You're still tuned into Trading Hour on CNBC TV18. Well, one stock that we've been talking about last couple of weeks has definitely been Nvidia. It has ascended to the position of the world's most valuable company, unseating long-time tech titan Microsoft. The chipmaker stock surged by 3.2% on Tuesday as well, elevating its market capitalization to an unprecedented $3.34 trillion. CNBC TV18 Shireen Bhan caught up with Shankar Trivedi, the Senior Vice President of Enterprise Business at Nvidia, on their journey towards this triumph. Listen in.
The shock and awe story of Nvidia, Shankar. I mean, today the most valuable company in the world. For most of us, the big breakthrough moment as far as generative AI was the ChatGPT moment. But for you and for the folks at Nvidia, I mean, when did you start to think that this was on the verge of an explosion?
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, where did Nvidia come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and, major ISVs. It takes a long time to build a market.
All right, so that is the big interview that you definitely want to catch. The full conversation comes up only on CNBC TV18 at 7:30 p.m. today and 9:30 p.m. again tonight. Let's move on now. The GST Council will be meeting this Saturday for the first time since the Lok Sabha election. Sources have said that the council is considering levying tax on spectrum allocation in the telecom sector, alongside discussions to reduce taxes on supplies collected at source for e-commerce companies. Timsy has more details on this. Timsy, take us through some of the key issues that perhaps would be before the council.
Well, that's right. It seems to be a full plate for the GST Council, which is likely to meet on 22nd June. Sources say that the council is likely to clarify on issues with respect to GST levy on spectrum allotment to telecom companies. Council could say that GST levy on payment of license fee, spectrum usage charges applies on the due date or the payment date, whichever is earlier. And in case of installment payments or deferred payments, GST should be discharged accordingly. Similarly, a clarity is likely for the highway builders. Sources say that under the hybrid annuity model, a builder is liable to pay GST at the issue of invoice or payment receipt, whichever is earlier. In case there is an interest component on installments or the annuity payable by NHAI to the builder, even that will be taxable. Council is also likely to issue clarification on a plethora of issues, including taxability of reimbursement of shares as ESOPs, also providing clarity on the corporate guarantee provided by related persons. Also, clarity is awaited on wreck and salvage values in motor insurance claims. Clarity is likely to be extended on whether there is a clear decision on extended warranty provided by manufacturers to the end consumer. Several proposals of the insurance sector, such as supply between lead insurance and co-insurer, on transaction of ceding commission between insurer and reinsurer. The council is also likely to reduce the rate of TCS collected by e-commerce operators for supplies made through them from present 1% to 0.5% and a lot more. Let's see what all does the council take up when it meets on June 22nd.
Okay, it is going to be an important one, and we'll keep coming back to you, Timsy, for more updates on the outcome of the GST Council meet as well. Thank you for joining us as always with all those updates. Well, before we talk more about technicals of the markets, just a couple of stocks that came on my radar, and they are at the day's high. They've surged from those lower levels. RT Industries, well, the entire chemicals pack is doing well, but RT Industries is one of them which is doing well and is at the day's high right now. The metals pack also is making a comeback. We have Nalco, which is surging. It's up around 3%. Vedanta, we had that exclusive conversation with the management where they indicated that the demerger plan that is on track. That stock is surging up around 6.5%. Bata as well from the footwear space. That stock has made a comeback today. So that too is higher by 1.27%. So some of these names which are doing well in trade. Otherwise as well, broader markets are in focus. But let's get in Apurv Sheth from Samco Securities joining us for a quick technical check on the markets. Apurv, good morning. Thank you so much for joining us. Well, you know, it's the mid-caps which are powering through again. Nifty now is consolidating at the 23,500 mark. What are the charts suggesting? What are the next important levels to watch out for?
Thank you for inviting me on the show. Good morning. So Nifty has managed to trade consecutively for 4 days in a row at an all-time high. So this itself shows that the markets are well in control of the bulls, and although the bias is positive, but we are not seeing a quick move or big sharp moves on the Nifty. So the focus is now on Bank Nifty, which has managed to cross above the 78.6% retracement of the entire fall that we had seen from 51,133, which was the top on the exit polls day high. So banks are likely to be in focus, and we would like to have a bullish call on Bank Nifty. So 50,500 is a stop loss that one can keep, and the short-term immediate term target would be 52,000, and slightly longer term target would be 54,000 on Bank Nifty.
Okay, all right. That's the Nifty Bank. Any other stock trades, Apurva?
Yeah, sure. So our first trade will be from banking space itself. So Kotak Bank is something that we like. So Kotak had a sharp fall last month in April after the RBI diktat. So from there on, it seems that the gap is likely to be filled, and Kotak Bank can touch 1850 levels pretty soon. So 1730 will be my stop loss for Kotak. And another pick is from the fertilizer space. So entire fertilizer space is buzzing, and out of that we have picked GSFC, which is a PSU stock, and the stock is currently trading below its book value around 0.76 times, and it has quite a few good holdings like GNFC, GIPCL, Gujarat Gas, etc. And the stock is also fundamentally as well as technically looking good, so it's forming a double bottom, and our targets for a medium term perspective on GSFC would be 319 with a stop loss of 230.
Okay, GSFC up 9%. The entire fertilizer pack is doing well. Thank you so much for joining us today and giving us those technical picks and the outlook as well. We'll do one thing, we'll slip into a short break. As we do that, let's hear out some important market opinion coming in from Krishna Sangvi of Mahindra Manulife and Manish Santalia of MK Investment Managers.
Financials would have been a natural port of call considering the ownership pattern. So that's where some money gets taken out to invest somewhere else. See, let's look at macro picture of economy. I think all sectors are interlinked. So we have this concept of profit pool participation, where some sectors lead the earning growth, some sectors lag it, but net economy keeps on growing. A lot of capex announcement which would have happened earlier are possibly likely to continue. So it's going to be more of a valuation call, and that's where the thought process comes in, is that as and when some of those capex cycles which was initiated some time back starts getting played out. See, what's the end game of capex cycle, right? End game of capex cycle is higher manufacturing, which creates income for people who are employed. So it's job creation. It's some Indian factors of production being paid out as a part of this cycle.
Overall, I think the direction remains positive. Only thing to watch out for is that for the next 6 months point of view on a fundamental valuation basis, the Nifty 50 looks to project another 5 to 6% or 5 to 7% at this for the next 6 months. So the main action is going to be in certain sectors, the broader markets as a whole. I'm not talking about the extreme small caps or the micro caps, but yeah, the mid caps and the largest mid caps or relatively, decent market cap mid caps are the areas where the action was likely to be. I think direction remains positive. Overall, I would say that in terms of the IT space, we would reckon that the second half of this year or the first half of next year, clearly there should be some sort of pickup in the IT space in India. Pharma and all of these things will see some sort of, extra attention than what these sectors have got so far.
I apologize for the grief that we have caused. And I want you to know we are totally committed in their memory to work and focus on safety for as long as we're employed by both. So again, I'm sorry.
You said you've listened to the whistleblowers. Have you directly spoken to any of the whistleblowers?
I have not directly spoken to any of the whistleblowers.
Do you think that'd be a good idea to do that?
Yeah, I think it would.
I'd recommend it.
Yep.
You've got 32,000 machinists. These are American workers who work for you. These are Boeing employees in the Pacific Northwest. You're in contract negotiations with them right now. 32,000, that's a lot of them. The last time that they got a contract was 16 years ago. Do you remember the terms of that contract?
I don't. It was a very long contract.
Yeah, well, they got 1% wage increases over 8 years. 1% over 8 years. You got a 45% increase just last year, and you're making $33 million. Do you think maybe these folks deserve a raise?
Oh, they will definitely get a raise.
Good. Good.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, every Indian CEO that I knew was either going to be watching it.
Welcome back. Here with us on Trading Hour, we have Manish Dangi from Mosaic Asset Management joining us on the show right now for some perspective. Manish, always great to have you on. Pleasure. So even the market has had to digest a lot. The fact that elections are finally over and the fact that the rate cut expectations, I guess, both in US and in India, they're getting pushed back. But equity markets don't seem to be complaining at all. So what do you make of things as they stand right now?
So equities dial, of course, is that the margins sort of stay super high, both in US and India. The profit margin in US are sort of near all-time high, at least 20-year highs, 13% or so, if you look at MSCI universe. Something similar, you could say, it's like a post-2007-8, we haven't had this sort of margin. So, I mean, equities dial is largely about margins. I know as a matter of fact, everywhere the rate cuts have been pushed out, but I don't think sort of bond market watchers sort of think of terminal rates at any different level than what they were thinking even 3-6 months ago. The transition from relatively buoyant economy to rather slower in US is there, but it's sort of relatively slower than what many people anticipated.
Okay, so it's been slower than what was anticipated. Manish, good morning. I was just reading one of your write-ups. It's been a while. You wrote it around 5 months back, which said most overrated story in India is the India routine consumption story. I wanted to understand what are your thoughts on that right now, because everyone's talking about consumption coming back, be it in the rural areas, or maybe some push towards more spending and more consumption. Do you think still the long-term story remains overrated?
So sort of I'll try and link it with political outcome. So there aren't too many obvious learnings or messages from the political outcome in India. But if there is one, and that is that, there is some distress in below median population. And if we were to amend that, and this government has been sort of pretty deft at it, I'm assuming that incremental actions would be taken to heal that part. And which is why actually, if I were to sort of take off a cyclical view, which is like next 1.5 year, I would not be surprised if the bottom of the pyramid, or I won't say bottom, the median person's consumption, would actually get a little bit of a perk up. So there are two parts to the point that I would have written. The structural story of India, that India is a great consumption story. Once you contextualize to the rest of the world, it isn't sort of any significant. It's just that the cyclical part of it, that we've had a pretty depressed consumption over the last 2 years. I think, that should begin to revive. Especially rural folks, would see sort of more sort of wallet share being spent on, or rather bigger wallet as well as more wallet share being spent on consumables, particularly staples.
Manish, so what should the portfolio strategy be going forward? And I also wanted to get your view on the way bonds are behaving in trading, because we're finally getting close to this all-important global bond index inclusion, right? India making the cut. And we've already seen that rally play out. So on bonds, is there more left to play? Or do you think the best of it is probably in the price at just under 7%? And on equities, I mean, what are the kind of returns you would expect for the rest of this year, given the fact that we are, already at all-time highs?
So there is sort of clearly a case of Achhe Din as far as bonds are concerned, and perhaps it's sort of a secularly good run. Bond market participants have had sort of a very bad 15 years, that the booms were short and persistent bearish markets sort of, which led to the situation that income funds, gilt funds, long bond guys never made big money. I guess, we are given demographics, given the fiscal orthodoxy, and now that we have an assurance of similar policies over the next 5 years from Modi government, it's likely that we would enter in longish bull market as far as bonds are concerned. So almost everything is coming alive, both on the macro side as well as demand supply. So one, of course, is this 28th of, a lot of money starting to come in. But I kind of think, that for the foreigners, India's story is actually a bond story, given that they are out there struggling for many other things, not just the transient inflation that they have right now, but, potentially high fiscal deficit and such like. I guess India offers a great opportunity, a mid-yield opportunity for a foreign investor. So I think the drought in Indian bond in terms of flows will end. You will have many, many billions of dollars sort of starting to come in India, already which has started. And I think I've made this point to you folks many times that I won't be surprised in this cycle, bonds head to near 5%, and which is sort of very, very significant. And once I tie this to asset allocation, given that, as you said, equities are very pricey, you have an earning yield of just about 4.5% in India, very depressed. I don't think, people should expect any significant, risk premium as far as equities are concerned. So a better place to hide incrementally, of course, is bonds, not equity in India.
And this is a time when we're talking about equity markets doing really well, and bonds as well, seeing a lot of flows, the JP Morgan bond inclusion and the other aspects of the bond market as well. Manish, I wanted to understand your outlook on metals. Our colleague was just telling us that copper is off those 2-month lows. It seems like now it has bottomed out in terms of prices as well. Will we continue to see an uptick in metal prices? And is this something which is a structural story, considering that we hear a lot about capex, not only domestically, but globally as well?
Yeah, so it's less of global and more of China. I think, how dislocated the whole macro dial has become and how divergent each economy is sort of advancing. You had sort of severe Europe recession or slowdown, so to say, 1.5 years ago, and US sort of continued to do really well. China, surprisingly, had a very, very depressed outcome post-COVID. But, what is likely is that while US heads to sort of severe slowdown, if not recession, China actually is prepping itself up for a potential stimulus. And the growth is sort of reviving there, fairly decently. And that is what the metals are proxy for, I guess. I kind of think that oil will tell you a story of global growth, but more specifically incremental sort of growth coming from US, whereas copper tells you a story of, it's an insider of China. And it's telling you that oil is relatively getting better as far as China is concerned. So, apart from the general stories like EV consumption and all the new age businesses, which consume a lot of metals, I guess that as a macro, China would potentially do much better. And that means that, you'll have two divergent trends, at least until it's very evident that US is in deep recession, that metals would do better versus oil.
Okay, so money is to be made in the bond market, maybe not the equity market for the rest of this year. I'm going to remember that one. Let's see how it plays out. Great perspective as always. Thank you very much for joining in, Manish. You have a good rest of the day. Well, with that, we'll take another quick break, come back on the other side, and we'll get you more on the markets.
It in person,
either owning a team or at least supporting a friend's team.
And so it's a passion, and I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. Yeah. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, whether it's Satya or me, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League cricket here, and I'm part of the San Francisco Unicorn team, and so it's fun.
So the Hyderabad Mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, I mean, rather than, in this case, the Mafia, this is all about a passion, and cricket's a global sport. And actually the funny thing about sport just brings together people like no other activity. And, just the amount of excitement, but now we have to go win it all, right? I mean, we've just got to the, Super 8s, and unfortunately, the India-Australia match, I have a board meeting on that day, so it's going to be...
Big conflict.
No, the board meeting is going to take priority, but, I'm going to perhaps sneak a look now and then at what's happening.
I would imagine. The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think...
Welcome back. Well, a day after the US government filed a lawsuit against Adobe, the company's chairman and CEO, Shantanu Narayan, spoke exclusively with CNBC-TV18. He termed the US government's case as misguided and promised to fight it in court. Speaking to Shireen at the Adobe headquarters, Narayan said that the world had entered the era of artificial intelligence and acknowledged that it will be disruptive, while also adding that AI can be a massive enabler as well as a tailwind.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice, and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the Content Authenticity Initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that, the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
Okay, that is an interesting conversation, and we'll keep getting you more updates and more slices of that conversation as well. By the way, before we wrap, let's quickly take a look at the markets. Nifty has actually inched higher, 44 points higher on the Nifty, and it is at the day's high as well. We have the mid-caps, which continue to do well, 0.7% higher. Bank Nifty too is participating today, so we are seeing gains of 0.6%. So 2 continuous days of good show from the Bank Nifty as well, and I think I would say 3 days continuously. And a lot of stocks in the broader markets, something like an India Boost Real Estate, that stock has surged. It's up 17% in trade right now, and it has been declining in last couple of trading sessions, but today, just look at that. It's a one-way move and a sharp surge in just last couple of minutes itself. Also watch out for some of these PSUs, BPCL and IOCL. These two names are doing well, and a lot of action in the OMCs as well. So both of them up anywhere between 1.5% to 2%. With that, we'll take your leave on this edition of Trading Hour, but stay tuned. Halftime report comes up next.
Has pioneered. The subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription. We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, you know, it's something that we will address, but we certainly believe that we have been flexible. You know, we offer customer choice, and we're completely transparent about this. You know, when you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the Content Authenticity Initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, you know, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that, you know, the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, you know, we've rolled it out. We are creator friendly.
This is India's election headquarters.
As the verdict emerges, the markets will react.
Bringing market movements into sharper focus with the most authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things are not looking very good for the ruling regime at this juncture.
Of course, things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself. As India's longest running
Stocks seesaw in range trading ahead of F&O expiry. That's Thursday F&O expiry. Metals and energy are the big gainers, even as healthcare and consumer durables drag. Mid-caps outperform.
There's more regulatory trouble for Sun Pharma, with US FDA issuing it a warning letter for its Dadra unit, which was expected to make the bulk drug for Revlimid generic.
Vedanta's founder and non-executive chairman Anil Agarwal tells CNBC-TV18 in an exclusive interaction that he aims for Vedanta to clock $10 billion in EBITDA and has no plans to dilute his holding. He's also hopeful of the demerger being completed this fiscal.
After a meeting with economists yesterday, the finance minister is meeting financial sector and market participants early in the day and will interact with industry leaders around 4 p.m.
Good afternoon. You're watching us here on Halftime Report. As you can see at the top of your screens, the indices holding up well. That's the frontline indices for now. The two parts of the market which are doing extremely well this afternoon, we have the banks which continue the rally from yesterday, and we have the mid-caps which do even better. So the mid-cap index is virtually at the high point of trade. I'm Manglam Malu. With me as always, Ekta Batra. Hi, Ekta.
Hi, Manglam. Yes, absolutely. In the pink of health, might I say. But nonetheless, definitely doing well for the markets. We have the mid-cap index, which is up around 0.6%. We have the bank Nifty, which is up around 0.5% as well. And a good advanced decline ratio on our hands. A couple of key points to watch out for in the next couple of hours, I would rather say, is the Bank of England policy, where the Bank of England is expected to hold rates at a 16-year high of around 5.25%. It would be the last policy ahead of the re-election, so that would be important to watch out for. And besides that, in terms of US markets, they were closed yesterday, but we are waiting for some data. There will be some amount of data coming in from the US overnight. We have the US initial jobless claims, the housing starts, the US building permits. All of that will be out from the US this Thursday. And separately, we do have a GST meeting on Saturday, which is something that I think the street will watch out for, especially when it comes to online gaming. But let's kick off the show with a couple of stocks in focus from the financial space. Kotak Mahindra Bank and City Union Bank are surging on the back of a positive note from the brokerage firm Macquarie, while Macquarie has also downgraded SBI and other NBFCs. Abhishek has all of the details on this Macquarie note.
Well, Ekta, Macquarie has written on financials, and after 5 years, they have upgraded their recommendation on Kotak Mahindra Bank. So they have upgraded Kotak Mahindra Bank as well as City Union Bank from neutral to outperformance. They say that these stocks have underperformed in the last 12 to 24 months. Valuations are attractive, that is cheap, and risk reward is favorable right now. They have downgraded SBI to underperform from neutral after the fact that recent performance from the stock price point of view has been pretty strong. And given the upcoming ECL regulations, decline in return ratios, that is ROA and ROE, and possible equity capital raise makes them downgrade the stock. On NBFCs, they have downgraded Bajaj Finance, Chola Investment, MMFSL from neutral to underperformance. They say that the outlook on loan growth is a key concern amongst these lenders, as well as decline in ROEs and a delayed rate cut cycle, which could impact negatively to them. On insurance front, they remain cautious with respect to overall insurance space. However, they have upgraded SBI Life to outperform from neutral, as it is less affected by the EDI regulations that has come in. So they expect it to deliver sector-leading VNB margins of 15% plus, which makes the valuations reasonable in that context in their view. So with respect to stock price, they have increased it for Kotak Mahindra Bank, City Union Bank, SBI Life, as well as Bandhan Bank, while they have decreased the target price on SBI, M&M Finance, Bajaj Finance and Chola Mandalam. Interestingly, for for Bajaj Finance, the decline in stock price is as high as 1,500 per share. Back to you.
Right, Abhishek, that's about the note from Macquarie on financials. But DCB Bank, that's the one which is also gaining on the back of another brokerage note, this one from Motilal Oswal.
Well, Motilal has upgraded DCB Bank, and this comes after, again, 5 years difference that they have had after their previous rating of neutral. So they have upgraded to buy from neutral. Target price has been increased to 175 from 155 that they had earlier. They say that business growth remains healthy and valuations are reasonable at current point of view. So operating leverage to drive ROE recovery for the bank going ahead. So they expect 19% CAGR over the next 2 fiscals with respect to, the revenue growth for DCB Bank. So they expect stable net interest margin as well as steady loan growth. Talking about loan growth, they expect recovery in loan growth to happen, and they anticipate improvement in operating leverage as well, that is cost to income ratio to decline. So they estimate earnings CAGR, that is PAT growth of a 21% CAGR over the next couple of years. They estimate ROA and ROE to reach 1% as well as 14% respectively by FY26, and current valuations of price to adjusted book value of 0.7 times offers favorable for investors. Back to you.
Okay. All right, Abhishek, thanks very much for that. That's on DCB Bank. That stock is up around 4%. But let's continue focusing on financials. SBI Chairman Dinesh Khara expects 14 to 16% credit growth in FY25, with margins being steady at 3.43%. He adds that excess provisions will help meet ECL norms as and when they do kick in. Listen in.
We are hoping to see the credit growth in the range of about 14 to 16%. And we expect to see very broad-based growth in credit, right from SME, agriculture, retail, and also in the corporate. As far as we are concerned, our domestic NIM last year was 3.43. So I expect our domestic NIM should be around the same number. See, as far as ECL is concerned, first and foremost, I would say that over the period of time, the loan book of the banking system has improved significantly. So if the ECL comes, perhaps whatever competition was done, maybe about a year back, banking system would be much better. And we are certainly much better as compared to where we were last year. So I think from that point of view, we don't expect any kind of an impact on us as far as the ECL is concerned. MFIs are concerned, well, of course, I think the rural went through some challenges at some point of time, but now we are seeing positive trends. But yes, of course, we do hear from MFIs who are having a loan book that there were some challenges. But I think as far as we are concerned, we don't see any kind of a stress.
Right, that's the management of State Bank of India speaking. So we have a bunch of financials in focus, some on the back of brokerage notes coming in from Macquarie, some from Motilal Oswal, and also some commentary coming in from State Bank of India as well. But Office Space Solutions, that's the one that's fired up in trade today. After reporting a good set of fourth quarter numbers, Sonal joins in with more details. The first set of numbers coming in post-listing, Sonal.
Oh yes, and it's been a good one, and they have reported a profit this time around, the first quarterly profit that the company has reported, and that is something that the street seems to like. To take you through the numbers, quarter 4 revenues up 44%, the EBITDA has grown by 35%. This time it's a profit of 1.3 crore rupees, which compares with a loss of 13.7 crore rupees. Let's talk about the segmental breakup, because their co-working spaces and allied services, which is around 73% of their total revenues, that grew 27%, and the construction and fit-out projects, which is 33% of their revenues, grew by 150%. And if we look at the previous trends in terms of financial year losses, this is the lowest that they've seen in a long time. Losses have narrowed now to levels of 17 crore rupees versus 42 to 57 crore rupees that the company saw earlier as well. The company says that the exit month occupancy for FY24 stood at 71%, and the company is positive on future prospects as well.
Okay, all right, Sonal, thanks very much for that. Well, on that note, we'll take a short break. But up next, we'll be talking to Aditya Khemka of InCred PMS. He's going to be putting the focus on the pharmaceutical space. We have stocks such as Sun Pharma, which are in focus on account of news. We'll be discussing all that and more.
Startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the
last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
A bunch of mid-caps doing extremely well. We have India Bulls Real Estate, which is spiked to 15% at the high point of trade, at a fresh 52-week high for that stock as well. The other one is Quick Heal. We spoke with the management this morning, and they expect the enterprise business to actually drive revenue for them. And that stock up and away, up around 9% on Quick Heal itself after a near 200% run that we've seen in the last 12 months. But amidst gaining stocks, one of the stocks which is underperforming is Sun Pharma, and this after the company's Dadra facility has received a warning letter from the US regulator. Ekta tells us more.
Well, yes, it is bad news for Sun Pharma that their Dadra facility has received a warning letter from the US FDA. Now, in April of 2024, and to put it into perspective, the timeline will give you a sense that the street was anticipating this to take place. Now, this particular plant was inspected from December 4th to 15th of December in 2023 and was issued 6 observations. After that, in April of 2024, it was classified as an official action indicated status. So the street pretty much knew that there is going to be regulatory action on the Dadra facility based on those 6 observations, as well as the OAI, which was received a couple of months ago. Now it's been escalated to a warning letter. Now, at least, with a warning letter, the production is not stopped of current drugs which they manufacture from the plant. Only future products are stopped. If in case it was worse, such as an import alert, then all production would have been stopped, and that would definitely be more detrimental to earnings. They still, nobody knows whether they would eventually get an import alert, but the timeline of events basically indicates that the import alert would have probably already come by now. So that is something that the street is probably a little positive on. Now, the other thing about Dadra is that it also manufactures the API for Revlimid generic, which is an important drug. The overall contribution is expected to be roughly in low single digits. So one will have to see what the impact in terms of earnings would be, if any, when it comes to the Dadra facility. On a larger scale, Sun Pharma is facing regulatory issues. Halol plant has an import alert since December 2022. Mohali has a non-compliance letter which they received from the US FDA. It's a part of the consent decree. Remember that it's a Ranbaxy plant which they got with the acquisition. That they received in May 2023, the non-compliance letter, and now they do have a warning letter for the Dadra facility. But to talk more about Sun Pharma as well as a lot of the other pharmaceutical stocks, we have Aditya Khemka, Fund Manager, Incred Healthcare Portfolio PMS, joining in. Aditya, hi, welcome to the show. So how would you read the news on Sun Pharma, the warning letter for the Dadra facility? Do you think that there'll be a discernible impact on earnings?
So if you look at the warning letter, what it essentially does is it stops new approvals. I think for the US business of Sun Pharma and many other companies, we do pencil in a certain amount of growth from new approvals that comes from these facilities. To that extent, there will be some, earnings downgrade that one should expect, but it will not be very material because from Dadra, it's not too many ANDAs that were pending approval in any case. So there will be marginal earning downgrades, if at all, in Sun Pharma because of this development.
So would you see this dip as a buying opportunity?
Look, the way we look at it, the current valuations of Sun Pharma and majority of the large cap pharma stocks seem to be a little stretched. Remember, the earnings of these large cap pharma stocks, including Sun, Dr. Reddy's, Cipla, Cadila, includes a generic Revlimid, which will basically go down to insignificant profits in FY27. Hence, a cash flow, which is a 2-year, 3-year cash flow, probably today is getting a significant valuation multiple, which perhaps is something that, one should be cautious about.
Okay. But Aditya, on a larger scale, do you think that Sun Pharma, how would you read the fact that 3 of their facilities do have regulatory issues? Do you read it as larger companies are much better placed to manage those regulatory issues? Or do you think that this is definitely going to impact their earnings down the road?
So, Ekta, actually, on the contrary, if you see, it's majority of the Indian large companies that have problems with US FDA, which is ironical, agreed. Many of the smaller companies that do the US business seldom fall into US FDA regulatory issues, is what I've observed over the past 10 years. And, hence, I think it's a matter of being able to manage according to the playbook of the FDA at a large scale. At a small scale, I think we still end up managing pretty well. But maybe at a large scale, somewhere, things don't fall in place. So will it impact earnings? Yes, it will. To what extent, that is clearly not very clear, because we don't know which ANDAs exactly come from the other Dadra, which were basically supposed to be launched in the next 1 or 2 years. So we don't have the clarity or the data from the company, and hence we don't know what kind of earnings impact we will have. But it will be minor, and it will be spread over the next 2 years for sure. So I think that's how we read this development. In terms of companies' non-compliance with US FDA, especially larger companies, I think that's something we have been seeing consistently now over the past 10 years. Yes, there is some movement in the FDA's playbook as well. They keep changing the playbook over time. But I think it's high time that Indian pharma companies which want to be, invested into the US business got up to speed to it. I mean, it's been a while that they've been facing these issues, but they keep recurring. And it is disappointing as investors to see that happening time and again.
All right, so branded generics, not your scene here, irrespective of whatever happens. Right now, you believe the valuations are a little stretched. Let's talk about unbranded generics then. What are the names that you like out there? Rather, unbranded generics is not your space. Branded generics is something that you like. Where are the valuations comfortable? What are the names that you own? What are the names that you believe will outperform going forward?
So the names we own under branded generics include RPG Life Science, we own Indoco Remedies, we own FDC, we own many other branded generic stocks, Torrent Pharma, JB Chemicals, so on and so forth. The reason why we like these stocks is because their cash flows are sustainable. These cash flows come from brands that they've built in a branded generic market, and these brands basically go on autopilot growth. Beyond a certain scale, the growth becomes an autopilot mode because the patient and the doctor become familiar with the brand. And these are low reinvestment need businesses, because the cash that we generate from this business need not necessarily be invested into capex or working capital. It is cash that can be distributed to shareholders in forms of dividend or buyback, or it can be used to do inorganic growth, as you have seen Torrent and JB do in the past. So that's the reason we like this space, and these are the stocks that we own.
That diagnostics is probably the space to be vis-a-vis, say, hospitals in the next 1 to 2 years?
So that's correct. In our assessment, we think diagnostics stocks have derated significantly over the past 2-3 years. But that's not true for all diagnostic stocks. That's true for 2-3 stocks that we own. So we own Krishna Diagnostics and Thyrocare. And for both these stocks, we have seen a significant derating happening over the past 2-3 years. And we feel that the earnings momentum of these stocks in the past couple of years has not been very good. But there have been reasons. They have been reinvesting in expansion, OPEX. And that OPEX, when you do expansion in terms of footprint, the OPEX comes up front and the revenue comes later. So I think that's what's going to happen in, these counters. And the derating has been unjustified to that extent. And in the next 2 years, when the corresponding revenue for the expansion comes to the P&L, that's when these stocks will see a re-rating and a profit expansion. And that's really the holy grail of investing, right? To find stocks where there is earning growth momentum, and then, the P multiple also goes up. So that's how an investor makes alpha. So we are hoping to make significant alpha in the diagnostic space over the next 2 years.
What about the hospital space? I mean, diagnostics, hospitals typically go hand in hand. There would be some of the value bets out there.
True. So within hospitals, obviously, we have said earlier that the valuations of most hospitals seems to be very, very stretched. But there are a couple of hospitals that we own, namely Healthcare Global and Aster DM Healthcare, where we feel valuations are very, very comfortable, where we feel earning growth will be fairly good, and there is room for multiple expansion in both these stocks.
Okay. Just quickly on hospitals, what are you advising your clients when it comes to this entire uncertainty with regards to standardization of rates? And do you think that's impacted investments into the sector?
So no, if you look at the private equity space, after this entire standardization of rate thing came up, there have been actually more private equity deals in hospital space after the announcement. So I think by and large, the entire industry and the investor community has taken a stance that the standardization is just not practically possible, given that the cost structures of different hospitals in different cities with different specializations is so very different. To have one standardized rate across the board just, seems very impractical when we talk about it. And hence, I think it has been something that people have put behind them. It is not something that people are taking into consideration today. And hence, we don't believe there is a business impact coming forward in the hospital space. What we are cautious of is the valuation at which you are buying the asset. Some of the larger hospital chains which are listed, their operating cash flow to EV is 1.25%, which means in sense of EV to OCF multiples, they're trading at 80-90 times. That's closer to what a DMart or a Titan is trading at. And if you look at some of the smaller hospital chains where earnings are good, cash flow is good, they're trading at 20 times EV to OCF, which essentially means that these are not even getting the value that these hospitals used to get 10 years back. So I think that's the kind of polarization in valuations we have noticed in the space in the past 2 years. And we are hoping the stocks will converge, the valuations will converge. And that's how you create alpha in being in the right space.
Right.
Okay. Just quickly before we, wrap up this conversation, Aditya, I was reading a very bullish note on the CDMO space. There's a lot of interest in the likes of Piramal Pharma as well as the likes of Syngene, the biotech funding, the China Plus One opportunity. All in all, what's your take on it, and which are the stocks that you have in your portfolio to probably play that theme?
So in the CDMO space, we really like the companies that do true CDMO, which means companies that engage with contract development manufacturing activities with the innovators. It has become a slightly abused word because companies that do contract manufacturing for generics also have started calling themselves CDMO. And I think that's not really, the jargon that the industry wants to use. So we like companies like Jubilant Pharmova, Syngene, Hycal, Newland, because if you see a majority of their revenues or profits are actually coming from businesses which they do with innovators. Why innovators? Because one, the innovator business is small volume, high value, high margin, and hence high ROE. And two, it is a sticky business because the innovator has a patent protecting it from competition. And that enables the business to be recurring in nature and the cash flow to be recurring in nature. So we really like these companies, this business model. And that is where I think the China Plus One and the Biosecure Act, those tailwinds will actually play out in that particular space. It need not necessarily play out on the generic space. And the companies that we own in this bucket are Syngene, we own a Newland, we own a Jubilant Pharmova, we own a couple of other Hycal, a couple of other names like that.
All right, Aditya, thank you so much for joining in and putting the spotlight on the pharmaceutical, healthcare, diagnostics and hospital space, telling us that Sun Pharma, while it may not impact the current US FDA issue, may not impact their financials as much, valuations anyway are stretched. Meanwhile, while we were having that conversation, there was some update that came in on Goa Carbon. In fact, they've gone ahead and introduced a new product, and this is called G Carb Plus, and this is to revolutionize the recarb business. So the recarb business, which basically will have lower sulfur content, significantly reduce harmful emissions, and supporting environmental sustainability. That's what a lot of the clients would perhaps be looking for. So new product launch, the prospects of that have the stock higher by about 8%. We'll take a short break, come back, focus on the markets. Aditya Agarwala of Invest for Edu will join in with some trading strategies.
the insurance regulator has proposed that policyholders be paid a higher amount where they surrender their policies before it matures.
The insurance regulator has in its board meeting approved the final regulations. Now what the regulator is considering is the point on special surrender value. New draft again bringing uncertainty on that entire topic of surrender value. The business could become very unviable for these life insurance companies. The regulator has said the surrender value will be kept at elevated levels.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18 embarking on a quarter century of excellence.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. The market's holding up, doing well actually. The Nifty up around 40 points. We have the mid-cap index doing a lot better. So if you just take a look at the key indices today, we'll have the Nifty and the Nifty Bank come up for you. The Nifty is up by about 38 odd points, whereas the Nifty Bank is doing a lot better. And the reason for the Nifty Bank having doing a lot better is the fact that it broke out yesterday, hit a fresh record high after a spate of underperformance, and now money is backing Nifty Bank. If you just take a look at the FII flows in index futures yesterday, where they turned net long in index futures, they actually bought a net of around 4350 crores, and entirely all of that, close to 4370 crores, was directed towards the Nifty Bank futures itself. So maybe it was as if the FIIs were waiting for the Nifty Bank to break out before committing more money to the Indian indexes or index futures itself. And now we have some other pockets which are doing well as well. Metals for one, Hindalco, Tata Steel, Vedanta, we had the interview with Anil Agarwal as well. All these stocks doing well. And fertilizers seem to be the pick of the pack in today's trading session as well. Chambal Fertilizers, RCF, NFL and FACT. But now in the last 20 minutes or so, we're also seeing some pickup in the IT pack. So the IT index is something that I will keep an eye out on. It's mildly in the red right now. If that picks up, then maybe we could see a further gain on the Nifty. Until that happens, maybe the lid on the Nifty, when it comes to gains, comes at around 23,600 thereabouts. Why do I say that? Because we have the weekly options expiry playing out as well. 23,550 call has a premium of almost 30 rupees, telling you around 23,580, which is closer to today's high. We'll see some sort of supply. 23,600 call writers also very active for a premium of 50 rupees. So immediately above 23,600 is some resistance as well. But strong support coming in at lower levels. 23,475 thereabouts would be the support for the frontline index. And a lot of stocks in focus because of entering or exiting FNO ban. Birlasoft, GNFC, Punjab National Bank, all of them may enter FNO ban, so keep an eye out on that list that comes this evening. And India Cements actually may exit F&O ban. The stock price move is telling you that as well. So maybe that's something that we'll keep an eye out on too.
Okay, all right, Mangalam, thanks very much for that. Aditya Agarwal now joins in to discuss the technicals of the market. Aditya, hi, welcome to the show. Well, let's start by talking about a couple of these stocks which are under pressure. M&M, Sun Pharma, Hero Moto.
Good afternoon, Ekta. Good afternoon, Mangalam. Thanks for having the show. There is a bit of pressure here and there, Ekta, without a doubt, and we're seeing profit booking in some of the names. To start with, Mahindra. Honestly, it was on cards. We were seeing a massive up move. We had seen massive up move last month, and that led to overbought levels on shorter term time frame charts, and that was suggesting that there could be some kind of profit booking in Mahindra. Having said that, yes, the trend still remains upward. I wouldn't say that the trend has reversed, but then the correction can extend a bit more, maybe closer to about 2,800. Now, if I talk about Sun Pharma, that too has seen a bit of profit taking, and there was a distribution pattern there as well, which was visible. So I think it will enter through a sideways consolidation phase, and then probably we can see a pickup. While that happens, the pharma stocks are seeing some kind of a buying pattern. So overall, I think there are some pockets which are seeing profit taking, and the money is shifting maybe from one sector to the other. Like all of the banking stocks, you pick, they're doing well. The fertilizer stocks are doing well. All of them are doing phenomenally well. Some of the home-related stocks are doing well, housing-related stocks. So I think there's a bit of a shift that we are seeing at the moment in the market.
All right. So talking about that shift, how do you play that shift through stocks, Aditya?
So Mangalam, I've got a couple of buy recommendations clearly because of the undertone remains strong. One sector that I'm seeing some kind of a buying is the footwear industry. So look at the way most of these footwear stocks are going up. Looks like there is some kind of a buying pattern which can emerge in India as well. Stock has been a massive underperformer, and looks like now it has formed a base finally and is getting up for a short covering rally or maybe a fresh long positions in Bata as well. So at current levels, the risk to reward is in favor of going long for a target of 1540, 1550. On the upside, I'll take a fresh long position in Bata with a stop loss at 1425 on the downside. The second is again from the city gas distribution, MGL. I think so after a decent up move, stock is finally broken out from that trend line resistance that it was facing for a couple of trading sessions. On the upside, 1600 will be the target. On the downside, 1410 will be my stop loss.
Okay, all right, Aditya, we're going to let you go on that note. Thanks very much for joining in and giving us all of those stocks in focus. Well, for the Bank Nifty, holding up with a gain of around 0.5%, no complaints coming in. And the advanced decline ratio is extremely positive. A lot of these metal stocks doing well. So Hindalco, for example, is up around 2.8%. Reliance is doing well today. So that stock is up around 1.3% at this point in time. We'll take a short break. But up next, we'll get you an exclusive conversation with Anil Agarwal, founder and non-executive chairman of Vedanta. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity, and low self-esteem.
In India, you see a lot of gum disease, which is also promoted by things like tobacco and supari.
Poor oral health is linked to serious systemic issues like heart disease, Alzheimer's, digestive problems, bacterial pneumonia, preterm delivery, and cancer.
If your teeth, the way they meet, what we call occlusion, is not proper, it can lead to other damage to the joints, to the gums. We have bone loss around the teeth.
Use a soft brush, destroy your brush, don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
has picking up. The last year we had almost 6% of our turnover from the export. This year we are planning to almost almost increase our export to coming from the 2 times. Last year we have 70 crores. This time we are planning for 150 crores in the export market. Revenue growth last year, the way we have done
Welcome back. Well, let's get you a CNBC TV18 exclusive. Anil Agrawal, founder and non-executive chairman at Vedanta, believes that the metal industry is in a super cycle. Our colleague Nigel caught up with him to discuss their business outlook. Listen into excerpts of that conversation as he talks on his EBITDA target, demerger plans, and says he expects a valuation of $1.2 billion per MT for steel assets.
$10 billion is if you look at, we are the largest producer of zinc, silver. We are the only people in India doing the largest recycling of our slag, which is the most environmental friendly. So we are very confident. Aluminium, we are the largest producer, 3 million ton integrated. Everything, if you look at our iron ore, we are going to produce 70 million ton of iron ore. If you look at our oil and gas, I'm so excited about oil and gas. We have offshore, we have onshore. We are the people who are producing and started exploring and the drilling program in the Northeast, especially in Big Boy and all the Assam area. So very excited about oil and gas. Each of our assets are a trophy asset.
Now, you've talked about all these businesses, put it together, but also what the street is looking forward to is the demerger of these businesses. Could you tell us the timelines and have approvals come through?
Yeah, it's all done. It's all, we have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
The other focal point, Mr. Agarwal, is the steel business. I'm aware that you're in conversation with various buyers and maybe in the next couple of quarters that should get closed out. How sure are you? In the first half of this fiscal year, should we see that steel asset getting sold at a good valuation? You want to give us a hint of the valuation you're looking for?
See, first of all, on the demerger, it was absolutely important because each of our business is a independent business. And my vision is to time to come, each of the 6 businesses will be as big as Vedanta itself, because the huge demand and the demand is double-digit growth. So I'm very excited about to create value for my shareholder. Each of my shareholder will get, if he has a 1 share of Vedanta, will get 6 share of demerged company. So that was on demerger, and that was the right thing to do, making a very strong with the management. As far as the steel is concerned, steel, we are one of the best prime location of a steel asset, which is in Jharkhand, near Bokaro, is in the Bokaro. We have a proximity of all the raw material, iron ore and the coal. We are proximity of all the railways. We are proximity of all the gas. So this is the best location for anybody to start production of steel. Very clearly, our Prime Minister has said that there will be 300 million ton of steel production. And India is at the moment producing only 120,000 ton. So the huge demand supply gap in steel. So this is the one thing which is a brownfield, which can produce 20 million ton of steel. So we have put this asset on the basis that if we get 1.2 million 1.2 billion per million ton. We have a 3.5 million ton of plant, which at the moment we are producing close to 2 million. 3.5 will be by end of this year. So we are 100% sure that if we get $1.4 billion and get not the distress sale, if somebody has a vision to produce, take it forward, we will look at, and if we get a price of $1.2 billion per million ton, we may consider to take the view.
All right. So your ask is that per million ton, you want around $1.2 billion. Are we getting that correct?
3.5 million ton. 3.5 million ton.
So what is the total valuation you're seeking for this 3.5 million ton plant?
Yeah, around 4.5.
4.5. Okay. All right. That appears to be a tall ask. And how confident are you that you see, this getting closed out in the first half of the fiscal or sometime during the fiscal itself?
We are very comfortable. Every of our shareholders want us to be in the steel business. We are already producing almost 2 million ton steel in Goa. So both put it together, it will be 5.5 million ton. We have strategically decided not to be in the steel business or become very big in the steel business. So we are getting very good response internationally and nationally. This is a very good, if you look at, this is the norms of the price, 1.2 billion, because the assets are not available. If anything comes, we look at, otherwise we'll keep expanding our plant.
23% we have the revenue growth. We will maintain the same momentum this year also. Last year we had around 20% operating profit margin. Maybe it will be coming to around 25 in that range.
Of course, in the budget, the thing to watch out for would be how much of the money is left in the hands of the average household. So consumer durables, and consumption and consumer discretionary side of things, whether it be your two-wheelers or whether it be your health, pharma, and all of these things will see some sort of, extra attention than what these sectors have got so far.
Apologize for the grief that we have caused. And I want you to know we are totally committed in their memory to work and focus on safety for as long as we're employed by Boeing. So again, I'm sorry.
You said you've listened to the whistleblowers. Have you directly spoken to any of the whistleblowers?
I have not directly spoken to any of the whistleblowers.
Do you think that'd be a good idea to do that?
Yeah, I think it would.
I'd recommend it.
Yep.
You've got 32,000 machinists. These are American workers who work for you. These are Boeing employees in the Pacific Northwest. You're in contract negotiations with them right now. 32,000, that's a lot of them. The last time that they got a contract was 16 years ago. Do you remember the terms of that contract?
I don't. It was a very long contract.
Yeah, well, they got 1% wage increases over 8 years. 1% over 8 years. You got a 45% increase just last year, and you're making $33 million. Do you think maybe these folks deserve a raise?
Oh, they will definitely get a raise.
Well, you look at the Nifty, you look at the Nifty Bank, and then you look at the financials, and you would see three different markets. The Nifty holding up, about 23, 24 odd points. The Nifty Bank doing a lot better with about 208 points up. But the financials, now they're spiking and they're doing well as well. So we have something like a Piramal Enterprises, which is now up at the high point of trade. We're seeing some traction in L&T Finance as well. And mind you, this is at a time when, Bajaj Finance is actually lower on account of that Macquarie downgrade that has come by. All the other, financial stocks are doing extremely well. Also, we're seeing some traction in gas-based stocks. So we have GAIL, which has now moved higher. GAIL is at the high point of trade. We're seeing some traction in Gujarat Gas as well, which has recovered from the lows and has moved to the high point of trade as well. So a bunch of stocks doing actually a lot better. And from the start of trade to even now, we have seen, a decent advanced decline ratio on the indices. So if you just take a look at the broader markets, you would see that you have more stocks advancing, way more stocks advancing than the number of stocks which are declining, and that line has remained parallel even as the Nifty went through its ups and downs. But it's the GST Council meet which will be in focus on Saturday for the first time since Lok Sabha elections, for the first time over a year as well. Sources have told CNBC-TV18 that the council is considering putting some tax on spectrum allocation in the telecom sector as well, alongside discussions to reduce taxes on supplies collected at source for e-commerce companies, TCS, as we know it. Tim C joins in with the latest on that one. Tim C.
Well, that's right. It seems to be a full plate for the GST Council, which is likely to meet on 22nd June. Sources say that the Council is likely to clarify on issues with respect to GST levy on spectrum allotment to telecom companies. Council could say that GST levy on payment of license fees, spectrum usage charges applies on the due date or the payment date, whichever is earlier. And in case of installment payments or deferred payments, GST should be discharged accordingly. Similarly, a clarity is likely for the highway builders. Sources say that under the hybrid annuity model, a builder is liable to pay GST at the issue of invoice or payment receipt, whichever is earlier. In case there is an interest component on installments or the annuity payable by NHAI to the builder, even that will be taxable. Council is also likely to issue clarification on a plethora of issues, including taxability of reimbursement of shares as ESOPs, also providing clarity on the corporate guarantee provided by related persons. Also, clarity is awaited on wreck and salvage values in motor insurance claims. Clarity is likely to be extended on whether there is a clear decision on extended warranty provided by manufacturers to the end consumer. Several proposals of the insurance sector, such as supply between lead insurance and co-insurer, on transaction of ceding commission between insurer and reinsurer. The council is also likely to reduce the rate of TCS collected by e-commerce operators for supplies made through them from present 1% to 0.5% and a lot more. Let's see what all does the council take up when it meets on June 22nd.
All right, MC, thanks a lot for that. As we slip into a short break, let's listen into some excerpts coming in from our conversation with Krishna Sangvi of Mahindra Manulife this morning.
Financials would have been a natural port of call considering the ownership pattern. So that's where some money gets taken out to invest somewhere else. See, let's look at macro picture of economy. I think all sectors are interlinked. We have this concept of profitable participation, where some sectors lead the earning growth, some sectors lag it, but net economy keeps on growing. A lot of capex announcements which would have happened earlier are possibly likely to continue. So it's going to be more of a valuation call, and that's where the thought process comes in, is that as and when some of those capex cycles which was initiated some time back starts getting played out. See, what's the end game of capex cycle, right? End game of capex cycle is higher manufacturing, which creates income for people who are employed. So it's job creation, it's some Indian factors of production being paid out as a part of this cycle.
Good.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person, either owning a team or...
Fertilizer stocks doing extremely well. So FACT has now hit an upper circuit of 20%. So locked in that upper circuit. We're also seeing Paradeep Phosphates, the chemical related company, up around 12.5%. And we've seen some traction in volumes out there as well. A couple of other stocks which are doing well. Metro Brands, second day running, the stock's done well. So this week itself, the gains have been upwards of 13%. So Metro Brands should come up for you on the screen. Also seeing some traction in names like Mahindra Holidays. So Mahindra Holidays up around 6%, 7.5% off the lows. I'm sure, some positive commentary was made in the Mahindra analyst day that took place, group analyst day that took place earlier in the week as well, or late part of last week. So that's the reason that stock is doing extremely well. For them, they have a leadership change coming in too. But that's about the equity space. Manisha joins in with all things commodities. Manisha's ready. Manisha.
I am. And I'm going to talk about palm oil prices and, of course, the details around that. Sandeep Bhan is CEO, SD Guthrie International Trading, and he joins us now. Sandeep, hi, thank you so much. And I want to talk about the prices first, which have been quite volatile when you look at this year. I mean, we started this year quite low at 3260 Myanmar ringgit per ton. We've seen a high of 4,500. We seem to be holding below 4,000 at this point in time. What are the fundamentals that you're watching, and what's your sense on prices going forward?
See, the prices have been trading in the range of 38 to 4,000 ringgit on the futures market here. When it comes to 4,000 or market crosses 4,000, a bit of a resistance is there at higher levels, and you see good selling coming down. And market goes back down to 3,900, below 3,900, between the range of 38 to 3,900. There's a very good support. All this is backed by the buying from India, and also secondly from the palm oil getting back to the cheaper oil. We have now palm oil discount to $100 against soybean oil, and close to $125 discount to sunflower oil. That is making it very cheap oil among all the complex of edible oils, and that gives a bit of a demand coming back to the palm oil, which is giving the 3,800 to 3,900 a good support level.
Also, Sandeep, where do you see a resistance now coming in?
4,000 remains resistance in the current market fundamentals. Anything above 4,000, we see a good selling coming in. So
Sandeep,
kind of
also,
it's a range-bound market between 38, 39 on the support side, 4,000 above, a bit of a resistance side. So it's been trading all along between 38.50 to 4,000 range.
That's a very tight range that we've seen palm really coming in. But Sandeep, with the kind of imports that we've seen for the month of May have been quite on the higher side on a month-on-month and an year-on-year basis as well. I mean, as you said, because the prices are now back in discount to other rival oils, perhaps seems to be supporting. But how are you looking at this year going forward now? On a month-on-month basis, what kind of imports will India do in sense of palm? An annual number as well for 2024, if you can share with us, if you've done any calculations.
We are very positive on the Indian demand now, with prices of palm oil going back to cheaper discounts against soybean and soft oil. We should see palm exports to India back to the range of 850 to 900,000 tons in coming months. We also have to factor in that the festival time when Diwali will be coming, and we will have to, India will see a big time buying of palm. Overall, in a year, we think last time we had discussed it that we might drop it down to 7.5 to 8 million tons because of the palm getting into premium. But I think with the palm going back to discount, we should go back to 9 million tons in the year.
Okay. Sandeep, there's various conversation really. And how are you basically reading on what HUL talked about in sense of lowering the palm content in soaps by 25%? I mean, two things that they talked about. One was environment and the other was the price volatility that we've seen in sense of palm.
See, their buying is mainly into the palm fatty acid distillate, which they use for the CPO, which they use for their soaps. But that quantity is not that big. It's close to, I think I was told, around 10,000 tons a month. But that's not going to make a significant impact on the PFAD market.
All right. Sandeep, also, how are you looking at the overall industry now going forward? Because we've seen the mandates in sense of biofuel from palm also perhaps starting to come back. So when we go forward, what is the kind of categorization that you see coming in from palm? As you said, it perhaps is going to be 9 million tons that India will import annually. Apart from that, where do you see the usages, especially when it comes to Malaysia and Indonesia?
See, Indonesian biodiesel program is a very successful program. They are heading towards B40, and the industry is doing very well in Indonesia, and that is giving a lot of support to the Indonesian prices locally. In terms of overall industry, we see India and China, which was missing in the first half of this year, has been last couple of weeks buying virtually every day they've been buying. India is big time into the markets. So we are seeing a shift of global demand back to palm, mainly because of palm being now the cheapest oil among all oils.
All right. I'm sure because India being one of your largest markets, Sandeep, you would be looking out at the government reforms, policies, etc. going forward. And while, of course, we have seen National Palm Oil Mission as something that has been talked about in last couple of budgets, how are you looking at various steps, conversations about self-sufficiency when it comes to edible oil, push towards palm? How are you looking at this trajectory?
We are one of the supporters of the national oil seed missions in India. And in fact, we are one of the big seed suppliers to Indian importers. So we are looking for the success of this program. But besides that, the Indian consumption of palm oil is only going to grow. We are not seeing any dip in the consumption in coming years. It's only going to grow.
Any percentage number that you're working with in that sense, Sandeep, on how much percentage of palm oil demand India can see growing?
I won't be surprised seeing India importing 10 million tons in coming years. Maybe next 1 or 2 years' time.
All right, Sandeep, thank you so much for joining us. Well, that's all about the palm, which is used right from your lipsticks to cosmetics to food to processed food and soaps. And you can perhaps continue with that.
The chips.
The chips. You had to add that one on. So as Sandeep said, 9 million tons is what we're looking at this year and 10 million tons going forward. So palm is something, the cheapest oil that we will continue to import going forward. With that, it's a wrap on this halftime report, but Business Lunch will take all the action ahead.
A friend's team.
And so it's a passion, and I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, whether it's Satya or me, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League, cricket here. And, I'm part of the San Francisco Unicorn team. And so it's fun.
So the Hyderabad Mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, I mean, rather than, in this case, the mafia, this is all about a passion, and cricket's a global sport. And actually, the funny thing about sport just brings together people like no other activity. And, just the amount of excitement. But now we have to go win it all, right? I mean, we've just got to the, Super 8s. And unfortunately, the India-Australia match, I have a board meeting on that day. So it's going to be...
Big conflict.
No, the board meeting is going to take priority. But, I'm going to perhaps sneak a look now and then at what's happening.
I would imagine. The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts. And the reality is that it was the government's case is misguided. And so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible,
Stock seesaw in range trading ahead of the F&O expiry today. Metals and energy are the big gainers, even as healthcare and consumer durables drag and mid-caps outperform.
There's more regulatory trouble for Sun Pharma, with US FDA issuing it a warning letter for its Dadra unit, which was expected to make the bulk drug for Revlimid generic.
SBI Chairman Dinesh Khara tells CNBC-TV18 that many new entrants have entered the unsecured credit segment without evaluating the risks. This even as there is ample demand in the corporate segment.
Vedanta's founder and non-executive chairman Anil Agarwal tells CNBC-TV18 in an exclusive interaction that he aims for Vedanta to clock $10 billion in EBITDA and has no plans to dilute his holding. He is also hopeful of the demerger being completed this fiscal.
And after a meeting with the economists yesterday, the finance minister is meeting the financial sector and market participants early in the day and will interact with the industry leaders around 4 p.m. today. Hello and welcome. You've tuned into Business Lunch. I'm Nisha. With me is Hormaz. Hormaz, it's a quiet day of trade today, but Nifty 50 has seen recovery in the last few hours of trade. Let's take stock of markets at lunch hour. Nifty 50 at 23,566 odd levels. It's a gain of 0.2% at the moment. 130 points gain on Sensex at the moment. But Bank Nifty is the one which is continuing with its outperformance, over 0.5% up in trade, and mid caps too are showing huge amount of outperformance, considering that it is minor gains when it comes to the key indices. So mid caps really adding to the buoyancy of the market, and that's also adding to the strength. Advance decline ratio heavily in favor of the advances. On my screen right now, Hormaz, some of the metal counters, the high beta stocks are the top gainers in terms of percentage for Nifty 50.
It's good to have a quiet day for a change, considering how the market has been over the last few days. But the metals are shining. Of course, the broader markets continue to do well. They are in a league of their own. And that is what is showing up in today's session as well. The mid-cap index is up 0.7%, as is the small-cap index. As Nisha was highlighting, that the metals are doing very well in today's trading session, primarily led by Vedanta. Anil Agarwal spoke to CNBC-TV18 earlier this morning, and he mentioned that he has no plans of diluting his stake any further. He also shared some growth targets as well for the company. There you can see almost 6% higher now is Vedanta, 475 now on the stock. What is not doing well though today is auto, and that is a segment that is seeing some profit booking today. Mahindra & Mahindra is the top loser on the Nifty, almost 2.5% lower in today's session. Remember, Mahindra & Mahindra is the top performer on the Nifty in 2024, so seeing a bit of profit booking from elevated levels. What is also not doing well is Sun Pharma. We just mentioned this, some more regulatory trouble coming in for the stock, almost 2% lower there on the counter as well for Sun Pharma. But let's begin Business Lunch by focusing on the top newsmakers this afternoon. SBI Chairman Dinesh Khara expects 14 to 16% credit growth in FY25, with margins being steady at 3.43%. He adds that the excess provisions will help meet the ECL norms as and when they kick in.
We are hoping to see the credit growth in the range of about 14 to 16%. And we expect to see very broad-based growth in credit, right from SME, agriculture, retail, and also in the corporate. As far as we are concerned, our domestic NIM last year was 3.43. So I expect our domestic NIM should be around the same number. See, as far as ECL is concerned, first and foremost, I would say that over the period of time, the loan book of the banking system has improved significantly. So if the ECL comes, perhaps whatever competition was done, maybe about a year back, banking system would be much better. And we are certainly much better as compared to where we were last year. So I think from that point of view, we don't expect any kind of an impact on us as far as the ECL is concerned. MFIs are concerned, well, of course, I think the rural went through some challenges at some point of time, but now we are seeing positive trends. But yes, of course, we do hear from MFIs who are having a loan book that there were some challenges, but I think as far as we're concerned, we don't see any kind of a stress.
All right, so that was SBI. On to another exclusive, and this is another big corporate voice on CNBC TV18. Anil Agarwal, who's the founder and non-executive chairman of Vedanta, says that he is optimistic that the demerger will get completed this financial year. And he also adds that he expects a valuation of $1.2 billion per million ton for his steel assets. Listen in.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally takes 3-4 months time, but sometimes they can take 1 or 2 months more also. Steel, we are one of the best prime location of a steel asset, which is in Jharkhand, near Bokaro, is in the Bokaro. We have a proximity of all the raw material, iron ore and the coal. We are proximity of all the railways. We are proximity of all the gas. We have put this asset on the basis that if we get 1.2 billion per million ton, we have a 3.5 million ton of plant, which at the moment we are producing close to 2 million. 3.5 will be by end of this year. Total debt on the Vedanta Resources. Vedanta Limited is the subsidiary of Vedanta Resources. All put it together, the total debt in the company is $12.5 billion, which is not even 1.5 time or 1.2 time of the profit what we make. As far as the total debt on the top is concerned, we have the trophy asset on the top, which is we own the largest copper deposit of the world called Kankula Copper Mine, which is on the top, and we are looking, people are looking forward from us. Would you like to dilute some equity into the KCM? We haven't thought anything so far.
Very clear words there from Anil Agarwal on the debt obligations as well, but stock doing very well for itself at the highest point of the day. Now let's shift focus to the agriculture space. The government has hiked the MSP for 14 Kharif crops. Manisha is joining in with more. Manisha, good afternoon.
Thank you for that. Well, yes, the hike in 14 MSP crops actually was supposed to come in the first week of June, but we do know that we were busy at that time with elections and counting, etc. So it's come in the third week of June, but on anticipated lines, as was the CACP recommendations as well. So we are looking at a range of anywhere between 1.5% to 12.5% of an MSP hike for these 14 Kharif crops there. With this, the farmers will get 2 lakh crores as the MSP right now, and the hike clearly has been quite strong in many of these. Well, these higher prices are expected to encourage farmers to sow more, and the monsoon slightly delayed but is expected to pick up in the month of July and August there. The rising cost of production, technology and climate resistant seeds is something that the farmers are looking at, and this MSP hike was quite important for that. Remember, the government has put restrictions on exports of rice, wheat and sugar, and if we do look at higher production and productivity, then the government perhaps would ease some of these. At this point in time, because to ensure that the prices do not run haywire, the government has allowed free import of various pulses and edible oils as well. Now look at the numbers herein that we are looking at right now, and the best of the gains clearly have come in case of paddy on expected lines at 5%. And then you have to take a look at these millets, which the government really seems to be pushing right now. These do not require too much of water as well. So we are looking at 6 to 12% of an increase between this as well. Maize is important because this is food and feed and fuel as well. And then comes pulses, where the inflation has been quite on the higher side. So we're looking at nearly 6 to 8% of a hike there as well. And then groundnut and edible oils have seen higher jumps too. Also, take a look at the cotton, where we also are looking at more than 7% of a hike coming in. Sesame and Niger seed are not produced so much in India, especially Niger seed, but we've seen 12.5% of a hike coming in for this one as well. I want to take you through paddy, and if you look at where we were in 2003 and 4, from 550 to doubling in that decade, and yet again doubling. And when you look at the last 1 year, we have seen a subsequent gain coming in here. I also want to take you through some of these pulses. Here as well, you can see that in last couple of decades, we've seen the MSP kind of double yet again, and 7,500 of an increase is where we are standing at this point in time. Take a look at Moong, and we've seen 1.4% of an increase in MSP here, but that is because we've seen very higher MSP hikes in the last few years coming in for this one. Take a look at cotton as well, and we have seen very strong hike come in for this one as well. That is something that the textile industry would want to watch out for as well. From 1725 in 2004 to almost 6620 in 2024 and 7500 right now. So it has been strong gains coming in for this one, and the markets do anticipate that you could be looking at a proper crop this time around as La Nina sets in, and we are looking at higher monsoons. Expectation of production is much higher.
All right. Thanks, Manisha, for getting us all those important details. With that, we'll slip into a short breather on Business Lunch, take a short break and get back, because we'll then focus and put the spotlight on the UGC NET exam and get you the latest developments on that development. Stay tuned.
Customer choice, and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly, and it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the Content Authenticity Initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it a trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly.
This is India's election headquarters.
As the verdict emerges, the markets will react.
Bringing market movements into sharper focus with the most authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things are not looking very good for the ruling regime at this juncture.
Back with us here on Business Lunch. Now, amid the NEET fiasco, the Education Ministry has announced the cancellation of the UGC NET exam that was held 2 days ago. Shivani now joins us to get us up to speed with the latest. Shivani, looks like the exam row didn't end with the NEET exam.
Well, absolutely. The paper leak issue that started with the NEET exam has now reached the UGC NET exam now, and the centre has announced that the UGC NET examinations held just a few days ago have been cancelled due to potential security breach. Now, the Central Bureau of Investigation will be handling the investigation, and the UGC NET, or the National Eligibility Test, is a crucial national exam for aspiring assistant professors, junior research fellows and PhD candidates as well across Indian universities. The cancellation decision came after the National Cyber Crime Threat Analytics Units, of the Indian Cybercrime Coordination Center alerted the authorities about a compromise in the exams. Now, remember that this affects 1.1 million candidates who had registered for this exam this time around. Now this development occurs amidst ongoing controversy surrounding the NEET UG 2024 medical exam, which has sparked a potential clash between the centre and the opposition. The NEET UG 2024 exam results announced on May 5th revealed an unprecedented 67 students securing the top rank in that exam. Now, on June 10th, the Education Ministry informed the Supreme Court that the grace marks awarded to over 1,500 candidates in the exam would be cancelled now, and these candidates would be allowed to retake the examination. Now, all of this has led to nationwide protests by candidates. Congress has also said that a nationwide protest will be held on Friday from their side. Now, meanwhile, the Education Ministry has assured a fresh UGC NET examination will be scheduled, for which a fresh date will be out very soon. Back to you.
All right, fresh date will be out very soon. Thanks so much, Shivani, for giving us all those latest details. Now, the record-breaking heat wave has crippled daily lives across North India. We have our colleague Abhimanyu who gives us an update on what's really transpiring on the ground. Abhimanyu, what's the Met Department telling you about the future course of action and also the weather update?
Union Health Minister JP Nadda has reviewed the heatwave situation across the country and has asked officials to ensure that hospitals are prepared to deal with patients suffering from heat strokes. Advisories have also been issued to states. Till now, the heat waves are still continuing in several parts of the country where the monsoon is yet to reach. As far as the national capital is concerned, heat waves have started ebbing due to the advent of western disturbances. However, monsoon is expected by the first week of July in Delhi. Till now, several records have also been broken, not just with respect to the maximum temperature, but even with respect to minimum temperature, where the national capital had recorded a minimum temperature of over 34 degrees Celsius, which is the highest since 1969. There is a 20% deficit noted in monsoon till now. However, there is a possibility that the impact of La Nina conditions in the Pacific Ocean may positively impact monsoon.
Abhimanyu, thanks a lot for that update. Now, as temperatures continue to rise in the national capital, Delhi also struggles to cope with the lack of water. Residents were seen queuing near water tankers in areas like Okhla and Geeta Colony. Danish is now joining in to give us a rundown of the situation. Danish, what are you picking up?
Well, the water crisis in the national capital is deepening day by day. While initially the water crisis was affecting only the slum cluster areas in the national capital, but now it has started to affect densely populated areas like Sangam Vihar and Kusum Pahadi. These are certain areas which are completely densely populated. But yesterday, NDMC officials have also said that the water crisis problem is also looming large in central Delhi. And let me tell you, central Delhi is an area which houses all the ministries and all the lawmakers, and by that I mean all the members of parliament. They also reside in central Delhi. So this crisis is also slowly reaching to central Delhi, and NDFC officials have also said that there's certain hospitals in the national capital which are also seeing water shortage. But let me tell you, Delhi's water requirement every day is over 1,000 MGD. By that I mean over 1,000 billion gallons per day, and out of this 1,000 MGD, around 629 MGD is supplied from Haryana, and Delhi government has alleged that Haryana is not sharing Delhi's fair share of water. Atishi, who is the Delhi's water minister, she has alleged that Haryana is releasing 100 MGD less water, which is affecting the citizens of Delhi, and she has written to PM Modi on Wednesday and she has sought his intervention in this matter, and she has said that 100 MGD less water will impact at least 28 lakh people in the entire city. So hence she is seeking intervention from Prime Minister Narendra Modi on this fact. So all in all, if we see, the water crisis is still looming large, and the political blame game is happening right now, and there seems to be no solution when this problem will end.
All right, Danish, thanks so much for all those details. Politics over water, and especially during heat waves. So it's a double whammy there. And while North India really eagerly awaits the monsoons, well, floods continue to ravage the state of Assam. The situation, in fact, has worsened as almost 3 lakh people have been displaced across 17 districts in the state. Now, authorities have also opened relief camps and distribution centers in several districts in order to provide provide essentials to those displaced. The Met Department has also retained its severe flood alert issued to the state.
Now, fresh updates from the liquor tragedy that follows from Tamil Nadu. Now, over 30 people have died and close to 100 were hospitalized on Wednesday late night after allegedly drinking illicit liquor in Tamil Nadu's Kallakurichi district. The authorities have confirmed that 4 people have been arrested. According to Chief Minister M.K. Stalin, the deaths were caused by the consumption of methanol-mixed arak. Now, the Tamil Nadu Chief Minister has also announced an ex gratia of 10 lakh rupees to the families of the deceased and provided assistance of 50,000 rupees to those undergoing treatment.
All right, so those were the top national news for the day. With that, we'll slip into a short breather, come back with more news and updates on the other side. Stay tuned to Business Lunch.
Things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
Welcome back. You're watching Business Lunch, and markets have picked up in momentum. There has been across the board gains across all the key indices in the last few minutes of trade. Keep an eye out on that. Moving on then, as we count down to the budget later next month. Well, the Finance Ministry has started consultation meetings, and today the financial sector and capital market representatives met with the officials at the North Block with their budget wish list. Let's listen into what the suggestions were made at the meeting held a while back. Listen.
I think the discussions were quite good. There was a very good reception from the Finance Minister and the Minister of State also. So all the secretaries are also there. So there were some suggestions which many of us gave. Mutual fund, maybe I was present in the Association of Gold Loan Companies. We also gave good suggestions. I'm sure they said we'll definitely look at it.
Ask.
No, there is nothing that top ask. We have given it to them.
What are the broad suggestions?
Yeah, broad suggestions for improving the capital market, improving the funding to the retail sector. We do the last mile funding. Association of Gold Loan Companies, we do the last mile funding. They are very happy with that. So I'm sure they will support us in that.
Yeah, so primarily it was the participants from the capital markets and NBFCs, and yeah, so there were no banks today except for Mr. Atul Goyal, who was there from the Punjab National Bank. So from our perspective, we've made 3-4 quick points. One, we said that now that the sector has grown to be 12.5% credit to GDP ratios, there stands NBFC credit. And so there is a case to look at the funding, because RBI is saying there is concern over dependence on banks. So that is where we raised that we need to have a direct handle for the government. So maybe a allocation of funds done to SIDBI or NABARD to do refinancing to NBFCs. And second point, we said since now the regulatory framework for NBFCs has been harmonized with that for banks, that remains incomplete if you are not given recovery tools like SURFACE. So that point, Madam did react also that we need to look at how these anomalies can be removed. AMCs basically they are talking more about how to encourage more. So a lot of discussion on the gift city part also. But how do we ensure that the whatever capital should not be going out of India? How can we retain more that in India? And there were also suggestions made on some of the arbitrage funds.
I think our main request is to keep on that path. Fiscal discipline is absolutely critical, and so is the effective inflation targeting. I think the main thing is these policies need to be stable and they need to be long-term oriented. What you cannot have is too many changes happening every year, every second year. So the suggestion from the industry was try to keep consistency in the tax policy. And yes, there might be some areas where there is some arbitrage, and which the ministry should take into account as they think about the long-term policy.
Okay, so would those be capital gains tax, STT? There's also talk about transaction tax on FNOs. Anything on that?
All of those were discussed as the area that need to be looked into. But the broader point is the stability of policy on these matters is very important.
Now, NVIDIA has ascended to the position of the world's most valuable company, unseating long-term tech titan Microsoft. The chipmaker stock surged by over 3% on Tuesday, elevating its market cap to an unprecedented $3.34 trillion. CNBC-TV18 Shireen Bhan caught up with Shankar Trivedi, the Senior Vice President of Enterprise Business at NVIDIA, on their journey towards this triumph. Listen in.
The shock and awe story of NVIDIA, Shankar. I mean, today the most valuable company in the world. For most of us, the big breakthrough moment as far as generative AI was the ChatGPT moment. But for you and for the folks at NVIDIA, I mean, when did you start to think that this was on the verge of an explosion?
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So in no overnight success, which is what people sort of suddenly, where did NVIDIA come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
All right, and you can catch the full conversation with NVIDIA and Unifor only on CNBC TV18 at 7:30 p.m. and 9:30 p.m. today. Don't miss it. And with that, it's a wrap on this edition of Business Lunch. Midcap Radar comes up next. Don't go anywhere.
To SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise.
Good afternoon, welcome to Midcap Radar. I'm Sonal Bhutra, with me is Vivek Iyer, and look at the move on the Nifty in just last couple of minutes. 97 points higher on the Nifty. Big boys are supporting the moves that we're seeing here. The metal index, Reliance Industries. I know this is a show about mid-caps, but just look at the move.
You're right, it's the big boys that's actually dragging the markets higher, and Bank Nifty continues to support. Yesterday 2% higher, today they continue to support. Quite a lot lined up, quite a few managements on the show as well. So very interesting show lined up ahead. Let's start off with the top headlines. Stocks seesaw in a range trading session ahead of F&O expiry. Metals along with oil and gas are the big gainers, even as auto and pharma drag. Mid-caps outperform.
Minda and CE Infosystems gain after Goldman Sachs initiates with a coverage on the stock with a buy rating, a target of 1,350 and 2,800 rupees respectively. Says Minda is well positioned for growth in India's auto components industry, and adds CE Infosystems is well poised to benefit from leadership position in automotive navigation.
Power Finance Corporation sells in trade after the company's board approves a 15,000 crore loan to the Shapoorji Pallonji Group. IIFL Finance flags off concerns, says the move simply transfers the risk from high-yield bond investors to PFC.
PNB Housing Finance slides over 4.5% after 5.2% equity changes hands. Sources tell CNBC-TV18 Asia Opportunities and General Atlantic Singapore Fund are the likely buyers. Key to notice that the deal has taken place before the lock-in period for the previous block deal ended. Okay, all right, those are the top headlines, but we have to take a look at what the Nifty is doing. Almost 100-point higher at the day's high, and it is supported by a number of factors. The metals index, that is surging 2.5% higher there. We do have individual components as well, which are doing really well in trade today. So the likes of JSW Steel, there's Reliance Industries, there is ICICI Bank, some of these consumption names as well, which are supporting the moves that we are seeing on the Nifty right now. And as Vivek was pointing out earlier, banks too continue their support. So that index is up 0.8%. And in last couple of trading sessions, we've just spoken about how mid-caps have outperformed. But today, the last few minutes of changes that we've seen in the Nifty is definitely noticeable.
You're absolutely right. Last 15-20 minutes is where the actual surge has come in. You mentioned metals, one more name over there. Vedanta today is doing very, very well. But I'm sure, Hormaz has a lot more names in his list. This is our special segment, Mid-Cap Movers, where Hormaz has been looking at the screen to take us through all the mid-caps that are doing well in the session.
The credit where it's due, right? The big boys lending support to the market, final 2 hours of the weekly expiry session. So it'll be interesting to see whether these gains hold or not at higher levels. But starting off with the gainers from the broader markets as they continue to do well. And the fertilizer stocks are the ones that are in the spotlight yet again today. Fact, another 20% upper circuit now at 1100 almost. Chambal Fertilizers up 17%. RCF is in a 20% circuit after a block deal that took place recently. And Deepak Fertilizers also trading with gains of 15%. So gains across the board anywhere between 15 to 20% in the fertilizer pack. The other segment that is doing very well is the chemical space, and amine stocks are there leading the pack there. Balaji Amines, Alkyl Amines up 6% each. Deepak Nitrite is up almost 6%. Navin Fluorine also seeing gains of close to 4.5%. As you are mentioning, metals, they are the ones that are shining in today's session. Vedanta, after the management interview, is at the highest point of the day now, almost 6% higher. NMDC, Hindustan Zinc, Nalco, all of them having a good day in today's trading session. Volume buzzers, some of the stocks that are doing well on the back of volumes, and CE Infosystems on the back of the Goldman Sachs note, 20% circuit there. Mahindra Holidays, Clean Science, all of them seeing good gains on the back of very strong volumes as well. And lastly, some underperformers in today's trading session, where PNB Housing finds a mention after the block deal, almost 5% lower there. PFC, with regards to some concerns over the loan, the Global Health and Home First Finance also not having a good day at the office in today's session. Back to you.
Okay, but there's such a big difference in the number of gainers versus the losers today, right? So that's the kind of market that we are in today. Harmas, thank you so much for joining us as always and taking us through the movers in the broader markets as well. Let's talk about individual stocks now. The stock on our radar is Office Space Solutions. The company reported a good set of fourth quarterly numbers. This is the company's first set of earnings post-listing. Amit Ramani, the chairman and MD of the company, is joining us now to take a few questions on the earnings and the outlook going forward as well. Amit, good afternoon. Thank you so much for joining us today. Well, you know, the street definitely likes the profit that you have reported in Q4. And in terms of losses, they've narrowed in FY24 as well. Is this something that they can expect going forward as well? Profits going ahead? And what is the growth outlook that you have in terms of revenues and margins in FY25?
Sure. So thank you for having me on the program. I think, clearly, turning profitable in the fourth quarter was, a focus area for us. And I think the profitability for FY25 will continue. I wouldn't want to give specific guidance on the numbers, but it will continue. In terms of the revenue growth, we are looking at about 30% growth between FY24 to FY25. And in terms of margin improvement at the EBITDA level, we believe that we can have a margin improvement of about 1.5% from the current 31%.
Okay, so you're expecting FY25 to end, with margins of 1.5% higher. But let's come to, the main part of the business, which is the occupancy rate. FY24 exit occupancy stood at 71%. What has been the trend in Q1 FY25? What has been the new number of seats that you've onboarded? And will that skew the ratio as we head into FY25?
So, occupancy is a build-up scenario, right? Clearly, at the blended level, which is centers gone live, let's say, few days ago to, from the inception, is at 71%. But if you look at the centers that are 12 months or more of vintage, we stand at 84%. So this has been consistent for the past few years, in fact. And we believe that this level of occupancy, which will be in the range of 70 to 72% at a blended level, and 84 to 85% at 12-month more vintage centers will continue. Last year, we added about 28,000 seats and about 40-odd centers. This year, the plan is to add about 40,000 additional seats. And I say that with a lot of confidence because we exited March 24 at 95,000 seats, right? And we have another 15,000 seats that are under fit-out currently, and another 15,000 odd seats that we have an advanced stage letter of intent. So we believe out of the 40,000 for FY25, we have full visibility currently of about 30,000 out of that 40. So we are very, very confident of our seat capacity growth.
Okay. So, you are talking about occupancies on a blended levels to remain at the similar levels at FY24, but you will be adding a lot more seats in FY25. Would it come at higher rentals as well, Amit? What would the rental picture look like in that case?
So see, I think I talked about my model a little bit on the show before as well. So we work about 66% of our portfolio is in partnership with the landlord, where we are either doing a revenue share or a profit share. So that mitigates our risk, where a majority of the new capital comes from our landlord, makes us capital light. And second, the landlord is taking the risk with me. So clearly from that partnership model, we believe that that ratio of about 66 odd % will continue in FY25. About 35% is what we call straight lease, which is typically in strategic markets and where we already have the demand from the customer. So those obviously are very customer-centric driven decisions, and we will take obviously the right calls. Currently, our portfolio, about 90% is in Tier 1, about 10% is in Tier 2 cities. But if I look at FY24, in terms of our growth, 85% came from tier 1 and about 15% came from tier 2 cities. So that ratio will continue in that direction.
Understood. Aviz, also give us a sense now. 66% is from the managed aggregation model. While of course, that goes ahead and mitigates risk to a large extent. We also understand that that would also mean slightly lower margins for you against the straight lease model. Could you give us a sense of what will be the margin differential, and going forward, what do you think is the optimum mix for you?
Yeah. So going forward, the optimum mix will stay in this zone. Because if you look at FY21, we were 46% managed aggregation and the rest was straight lease. Today, we are at about 66%, and going forward, we will maintain the same ratio. We make a bit lower margin when it comes to clearly managed aggregation. Typically, these are at the center level, between 22 to 24%, whereas a straight lease, this would be somewhere around 30%, right? So at a blended level, we are doing at about, at the center level, we are doing a margin of about 25 to 26%. And that will continue because the ratio will continue in the same zone. So the margin as well will continue in the same direction.
So Amit, when you talk about that 150 basis points improvement in margins, what are you factoring in? What is the reason that will cause that margin improvement?
So one is operating leverage. Our fixed costs or our indirect costs are not going to go linear with our revenue growth, right? So we'll get operating leverage. Second is operating efficiency. Obviously large, and we are now established in almost all cities, and those cities are all obviously generating returns for us. And third is obviously the occupancy itself, right? I think we believe we have some ability to improve that as well. Even though we are adding a lot of additional seats, we believe our sales engine is able to get in front of the occupancy a couple of points higher, and that those three reasons, operating leverage, efficiency, and occupancy, are going to drive that 1.5% improvement.
Amit, give us a sense. Number one, we understand that you'll have two agreements, one with the owner or the landlord, and the other one will be with your client. How often do both of these agreements get revised? Typically, how does it work? What will be the percentage of increase you will see when these agreements are revised? And do you expect this also to be a driver for growth, especially when client revisions come about?
So with our landlords, typically the tenure is 5 to 9 years. And with our customers, the tenure can range from a day to 5 years, right? But today, our blended tenure is about 33 months. Our locked-in tenure with the customer is 24 months. So clearly from that standpoint, we probably are able to have obviously stability with our landlords for 5 to 9 years. And here we have some clear visibility of demand of almost just shy of 3 years. So from that perspective, in every contract with our customers, in long-term contracts, let's say anywhere between 2 years to 5 years, we have a 4 to 5% escalation built into the contract. When it comes to some of the smaller tenures, we have typically a 6 to 8% built into in terms of our escalation. When it comes to our landlords, we are looking at 15% typically. If it's a straight rental, if there's no minimum guarantee, or if there is minimum guarantee, the escalations don't really kick in. But if there is a straight lease, that increases 15% every 3 years. So which would be average about 4.6% year on year.
Okay. All right. Amit, thank you so much for joining us today and explaining that in detail as well. The street likes the numbers, the stock is high by 4%, and the management is sounding very positive as well. That's the word on office space solutions. We'll slip into a short break. When we come back, we'll be joined by the management of Insecticides India. IMD has revised monsoon forecast for June to below normal from normal. We'll try and understand the demand trends and the sowing patterns as well. Stay tuned.
"25 years of excellence and unparalleled growth."
CNBC-TV18, embarking on a quarter century of excellence.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity and low self-esteem.
In India, you see...
Welcome back to Midcap Radar. Well, as promised, we had told you about how we have a management lined up. Just remember, the Indian Meteorological Department in its latest update said rainfall between June 1st to June 18th has been 20% below normal. They also revised the monsoon forecast for June to below normal from normal. To discuss how this will impact initial sowing, we have Rajesh Agarwal, Managing Director at Insecticides India, joining us. Good afternoon, Mr. Agarwal. Hope you're doing well, and thank you so much for joining us here. First up, give us a sense of how sowing patterns has been across the country. The rainfall has been well below what the expectations were initially.
The rainfall is able to hit the markets 2-3 days before the prescribed dates. So the farmer has started sowing in many parts of the country. Like if we start from south, Tamil Nadu had a great rainfall, followed by Andhra Pradesh. Also Karnataka is reasonable, and Maharashtra and MP it is catching up now. So are the sowing patterns actually sowing has started in these areas, particularly for the dry crops. They are preparing the fields, and also sowing for cotton is on, sowing for other crops is on. And similarly, we see look at east, the preparation is on, and in north also. So overall, I would say that yes, there has been some trend shift, like in north, paddy short duration is increased, and a lot of sowing has already started little early before time, and even cotton and other crops have started. Cotton, though there is a decline in north and also in the central part of the country, but cotton in south is going up. So overall, if we look at the scenario, then it looks good, and people are quite hopeful because we believe that the rain situation should show the improvement in the last week of June and or early July. So the sowing is on and field preparation is on in the full way.
Okay. So Mr. Agarwal, has it in any way impacted volumes for you, especially in central India, because their deficit has been to the tune of 31%. How much of your revenue or share of volumes comes from there? Because that's also the grain producing area, major grain producing area. Do you think that is something which could impact volumes, or it is in line with what you had earlier expected?
It is little early actually to comment on that, but yes, there is very high demand because this is the time when the shopkeepers prepare themselves for the herbicide usage, and they have started making the buying for the herbicides, and the demand is in full swing. The day it rains, the market movement is going to start. So they are prepared, even if it get delayed by 1 week or 10 days, it hardly matters because immediately on rains, they will start taking the material or selling the material.
So, Mr. Agarwal, what you've mentioned is that right now maybe it's still a little too early to predict the course of the rainfall, and maybe say that this particular season could be a little slower than usual. We'll wait and watch as that progresses. But now moving outside,
this is going to I don't think this is going to be a slow season, because at this moment the trades mood looks to be a little buoyant, because there is good expectation from this season. And if we look at the price trends also, because there are international shortages, also there are issues with the international freight. So there is some tightness in the market already, and that is one reason. The trade channel is also vacant, I would say. So they are keen to store the metal now, and immediately on the first rain, the sale is going to start. So I'm very, very hopeful, and I'm very positive about this.
Okay, all right. Mr. Agarwal, this is about what's happening domestically. Even globally, we are talking about heat waves and, some of the cropping patterns changing. How big is exports as a part of your revenues? Which are the countries that you export to? And is that portfolio seeing some pressure?
For us, international business is a small market at the moment. Just it contributes 5% to our total business. But yes, there is growth possibility in future. At the moment, there are various issues. The currency issue is the biggest issue. The transportation issue is the second issue, because the freight rate has increased on the international level to a big extent. So that is also impacting. So otherwise, market is going to pick up on the on that side also, because there is expectation that during this season, the old inventories which were there in Europe, America, and some other parts of the world, they are going to dilute, and the new demand is expected to come. We do our major business in Middle East, Africa, and ASEAN countries, and we also export small quantities to Europe and America.
Mr. Agarwal, just towards the end, what we want to understand is you had guided for FY25, you had guided for double-digit top-line growth. Q4, you saw quite a bit of strong margin expansion on the back of low raw material prices. Now, Q1, what are you seeing the raw material prices trend at, and do you maintain your double-digit top-line growth?
Yeah, definitely we maintain our targets which are given by us. The markets have bottomed out, and the prices have started little going up due to the demand-supply differences. So I believe that the margins also are going to be better in this year, and from the Q1 itself, they will be visible.
Okay, all right. So margins will improve, pricing is better, and you're not seeing any demand headwinds for now, despite the delay that we have been seeing in monsoons. Mr. Agarwal, thank you so much for joining us today. That's the word coming in from Insecticides India. The stock is doing well in trade today, up around 3%. Let's slip into another break. When we come back, we'll get you more on the markets and stock-specific action, so stay tuned for that.
Gum disease, which is also promoted by things like tobacco and supari.
Poor oral health is linked to serious systemic issues like heart disease, Alzheimer's, digestive problems, bacterial pneumonia, preterm delivery, and cancer.
If your teeth, the way they meet, what we call occlusion, is not proper, it can lead to other damage to the joints, to the gums. We have bone loss around the teeth.
Use a soft brush, destroy your brush, don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
Has picking up. The last year we had almost 6% of our turnover from the export. This year we are planning to almost almost increase our export to coming from the 2 times. Last year we have 70 crores. This time we are planning for 150 crores in the export market. Revenue growth last year, the way we have done crossed almost 23%. We have the revenue growth. We will maintain the same momentum this year also. Last year we had around 20% operating profit margin. Maybe it will be coming to around 25 in that range.
Of course, in the budget, the thing to watch out for would be how much of the money is left in the hands of the average households. So consumer durables, and consumption and consumer discretionary side of things, whether it be your two-wheelers or whether it be your health, pharma, and all of these things will see some sort of, extra attention than what these sectors have got so far.
Apologize for the grief that we have caused. And I want you to know we are totally committed in their memory to work and focus on safety for as long as we're employed by Boeing. So again, I'm sorry.
You said you've listened to the whistleblowers. Have you directly spoken to any of the whistleblowers?
I have not directly spoken to any of the whistleblowers.
Do you think that'd be a good idea to do that?
Yeah, I think it would.
I'd recommend it.
Yep.
You've got 32,000 machinists. These are American workers who work for you. These are Boeing employees. Investing.
Welcome back to Midcap Radar. Now, we'd like to shine the focus on one more stock that's doing quite well in the session today, and that is Relicare Enterprises. Relicare Enterprises is in focus. This is on the back of the fact that overnight, SEBI has gone ahead and given or issued a 12-page show cause notice to both Relicare Enterprises board as well as the chairperson, Rashmi Saluja. What is it that SEBI is asking them to do? SEBI has directed the Relicare board to go ahead and give an undertaking that they will be filing applications for the open offer with all of the regulators. So which are the three regulators where Relicare has to go ahead and file an application in order for the open offer from the Berman family to proceed? The first one is RBI. The second one is IRDAI, given the fact that Relicare houses an insurance arm as well. And thirdly, SEBI itself. So far, there has been quite a lot of to and fro between the Relicare board and SEBI, but this particular document by SEBI clearly goes ahead and unequivocally states that they would have to go ahead and proceed with the IPO. Remember, in September 2023, the Berman family had made an open offer to acquire up to 26% stake in the company at 235 rupees a share. Relicare too has responded to this particular development that they say, as per SEBI's advisory, the company will apply for the fit and proper status of the acquirers for the open offer to the concerned regulators, including the RBI. But that's all the time we have on this edition of Midcap Radar. Mutual Fund Corner when we return.
Northwest. You're in contract negotiations with them right now. 32,000, that's a lot of them. The last time that they got a contract was 16 years ago. Do you remember the terms of that contract?
I don't. It was a very long contract.
Yeah, well, they got 1% wage increases over 8 years. 1% over 8 years. You got a 45% increase just last year, and you're making $33 million. You think maybe these folks deserve a raise?
Oh, they will definitely get a raise.
Good. Good.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person,
or
either
in
owning
person.
a team or
Yeah.
at least supporting a friend's team.
And so it's a passion, and I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. Yeah. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, whether it's Satya or me, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League, cricket here. And, I'm part of the San Francisco Unicorn team. And so it's fun.
So the Hyderabad Mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, I mean, rather than, in this case, the team.
Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. With budget just around the corner, MF Corner today will focus on what the industry is expecting from the government when it comes to taxation on different asset classes in the particular industry. Now remember, we did see a change in debt mutual fund taxation last year, where the indexation benefit was taken away and gains will be taxed at par with the fixed deposit returns and at slab rates. But there are some asks, especially when it comes to different holding periods, different tax rates or different asset classes as well. So we'll discuss that with our guests today and the experts on the show as well. But before we do that, let's just revise the tax rates that we have right now in terms of mutual funds and the holding period as well. Now, for equity funds, short-term capital gains are for a period where the asset is sold within 12 months, and it is long-term capital gains if the asset is sold after 12 months or longer. For debt funds, it's always short-term. This is, of course, after 31st March 2023, last year when that change came about. For hybrid equity-oriented funds, again, it's called a short-term capital asset or a gain or a loss when it's sold within 12 months. And if it is more than 12 months or 12 months, it's a long-term capital gain. For hybrid debt-oriented funds as well, it's always short-term. But always remember, long-term capital gains of up to 1 lakh are exempt from taxation. Now, when it comes to the rates as well, that is very important. For equity mutual funds, for arbitrage funds, it is 15%, which is the short-term capital gain, and long-term capital gain is 10%, but without any indexation. Other funds would be that invest at least 65% in equities, but for debt mutual funds, as we pointed out, it's always the slab rate on which it is taxed. If you talk about the other funds, be it conservative hybrid funds, again, it's always the slab rate. For the floater funds, which will basically invest at least 65% in floating rate instruments, it again is slab rate. And for aggressive hybrid funds, which will have equity component between 65 to 80% and debt component between 20 to 35%, it is 15% on short-term capital gains, but 10% on long-term capital gains. But again, there is no indexation available here. So these are the broad numbers and the broad rates that you need to remember. But let's get in the experts on the show today. We have a power-packed panel. Let's welcome Harshvardhan Roongta of Roongta Securities, Amarpal Chadda, tax partner at EVA India, and Sushant Bansali, Chief Executive Officer at Ambit Asset Management. Gentlemen, thank you so much for joining us today. And we just saw some visuals as well of the AMCs, of brokers and the associations meeting Finance Minister Nirmala Sitharaman ahead of the budget session. So there have been a lot of asks. But let me come to you and start with you, Mr. Chadda. A lot changed last year, but in terms of mutual fund industry, what are some of the major asks that the industry has when it comes to budget changes?
Sure, Sonal. And you're right, there's been a very big change last year. So the entire scenario around debt has become very difficult. Whatever we are hearing from, and typically for the mutual fund from the AMFI, the association has put across a charter of changes that they are looking at. And I think top of the list is that if the switches between a regular plan or a direct plan, a growth or a dividend plan, could that be eliminated? The tax element out of a switch could be eliminated. That's one thing which the lobby is expecting and is pushing for. I think the other one, the bigger one, is also the uniform tax rate for capital gains. So can the tax slabs be reduced, or can the tax categories be reduced so that the capital gains taxation becomes simpler? There is also one very interesting ask by the MFI around debenture-linked savings scheme at par with the equity-linked ELSS scheme. So these are the typical three demands that we are seeing the AMFI make. But I would say top of the list would be the switches, because that would make it easier for everyone. given that debt doesn't have much options, there could be a push even for a DLSS kind of a scheme. So Sonal, these are the three things I think which is being pushed.
Oh, yes. And, we'll discuss them in greater detail as well, especially on the debt side, because as we've been talking about the big change that happened last year, so maybe this could be a way to, push this particular category as well. Mr. Bhansali, let me come to you. I wouldn't ask you specifically about mutual funds, but there are other aspects as well where assets under management, be it PMS, be it AIFs. What is the broader demand or the expectation that there is from the government this time?
Sure. Thank you, Sonal, for calling on the show. As expected, I think the government's intention has been quite clear last few years. They've tried to rationalize and take out gaps, if at all, in the taxation side across categories. They want mutual funds to be savings, they want insurance for protection, and they want banks to be the lenders. That's why I think they've been changing the tax rates to both enable savers to use mutual funds, as well as persuade them to go from debt products to more to banks and from insurance production companies. From the perspective of PMS and AI, I think there are still some gaps and anomalies left compared to mutual funds and within AIFs, different categories. One of the top demands on the AIF side has been to get category 3 AIFs, which invest primarily into equity markets, to bring them on par with category 2 and probably mutual funds as well on a pass-through basis taxation structure. Right now, the fund has to pay the taxes at the maximum marginal rate. And, we want this anomaly to be probably removed and get it in line with mutual funds and AIF category 2 with a pass-through structure, whereby investors will pay their own taxes depending on their own tax rates. So that's point one on AIFs. The second, on the PMS side, there are two things. First, probably the fees of PMS managers. That is right now not a deductible amount for most of the cases. It's not sort of a gray area, but a clarification will always help as part of rules and regulations in the taxation structure. If it gets crystallized, to treat that as an expense, like what happens in mutual funds or AIFs. And the third, on the PMS side, I would say that if mutual funds, if they are also charged tax on exits and churn from the PMS to another PMS, rather than at the churn at the individual script level, like individual investors. So treat them alongside as professional managers, as PMS. So those, I would say, will be the key demands from the industry on PMS and AIF sides.
Okay, all right. Very comprehensive. Thank you for that, and we'll discuss that in greater detail as well. But Mr. Rungta, let me come to you, because there are a lot of things that the industry wants. We don't really know what would go about, but some of the top demands that the industry you think should ask for or is already asking for.
So, Sonal, there is a tax abnormality with regards to the gold funds. So if an investor, and gold has become a popular investment option with investors, 2023, when in April 23, when the changes were effected with regards to the taxation, gold, I think, became a collateral damage, the gold funds typically. So, as of today, if an individual was supposed to invest in physical gold, if he or she holds on for 3 years, there is a long-term capital gains implication, which is 20% with the tax benefit. And with regards to gold funds, because the equity component is less than 35%, as you had rightly posted on your initially when you started with the tax slabs, the gold funds are taxed even if it is more than 3 years. The investor is taxed at slab rates, whereas if you're holding physical gold, then your taxation is different. For long-term capital gains is 20% with indexation benefit. So I think this collateral damage needs to be sorted out, and Finance Ministry would need to come out with some regulations and clarifications rather to say that gold funds are out of this purview. With regards to other big bang changes, I don't think the government would want to make shake the apple cart. Retail investor has just started to make money into the equity market, so I think there has to be some rationality with regards to the holding period. So, we've been talking about capital gains tax being increased, and I really hope they don't do that. And instead, they could most certainly consider increasing the holding period to say probably 2 years for qualifying to long-term capital gains. I think this is one thing that is expected to happen. With regards to ELSS and DLSS, I don't quite honestly see the finance ministry introducing a new tax exemption provision purely based on the fact that, because there is an ELSS, why not have a DLSS kind of a thing? Because the push of the government is anyways onto the direct tax, I mean, the new tax regime. So I don't see them introducing a new category at this juncture where they are planning to take away all the exemptions under Section 80C.
Okay, all right. So there are a lot of things which are asked for, but maybe all of them won't happen. But Mr. Chadha, let me come to you because we spoke about DLSS and ELSS. So just taking that point forward, one, do you think there's a possibility that ELSS tax benefits could be done away with because there's so much focus on new tax regime? And if not that, do you think DLSS is still a far ask and that is not something that could happen immediately?
Yeah, I think, Sonal, a lot of guesswork is happening and a lot of representations are happening. So if I pick up today's recommendation from FICCI, PhD, all of them, there'll be too much of a ask. But your point is absolutely right. The focus is now on the new tax regime. And we all know under the new tax regime, ELSS doesn't exist. You don't get any special exemption for that. So if that is the focus area, will government sort of take a step back and bring in another scheme which is aligned to an old tax regime like a DLSS? I think that's a question which the finance minister would consider twice before recommending. So I think it's everyone's guesswork, but seems difficult given that it's not aligned to the new tax regime.
Okay, that is again a question that has been going on since the time the new tax regime was introduced. But gentlemen, hold on. We have to take a quick commercial break. We'll come back with more queries and expectations on the budget. But as we do that, let's leave you with some important commentary. Finance Ministry has started consultation meetings and today financial sector and capital market representatives met with officials at the North Block with their budget wish list. Let's listen into what suggestions were given by Raman Agrawal, the co-chairman of Finance Industry Development Council, specifically for AMCs besides other areas.
Yeah, so primarily it was the participants from the capital markets and NBFCs, and yeah, so there were no banks today except for Mr. Atul Goyal, who was there from the Punjab National Bank. So from our perspective, we've made 3-4 quick points. One, we said that now that the sector has grown to be 12.5% credit to GDP ratios, there stands at NBFC credit. And so there is a case to look at the funding because RBI is saying there is concern over dependence on banks. So that is where we raised that we need to have a direct handle for the government. So maybe a allocation of funds done to SIDBI or NABARD to do refinancing to NBFCs. And second point, we said since now the regulatory framework for NBFCs has been harmonized with that for banks, that remains incomplete if you are not given recovery tools like SURFACE. So that point, Madam did react also that we need to look at how these anomalies can be removed. AMCs basically they are talking more about how to encourage more. So a lot of discussion on the gift city part also. How do we ensure that the whatever capital should not be going out of India? How can we retain more of that in India? And there were also suggestions made on some of the arbitrage funds.
About a passion, and cricket's a global sport. And actually the funny thing about sport just brings together people like no other activity. And just the amount of excitement, but now we have to go win it all, right? I mean, we've just got to the Super 8s, and unfortunately the India-Australia match, I have a board meeting on that day, so it's going to be
big conflict.
No, the board meeting is going to take priority, but I'm going to perhaps sneak a look now and then at what's happening.
I would imagine. The latest challenge that you're up against is the US government looking at whether again there is a violation of policy and whether there are sort of fees that are being collected without consent or explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. we offer customer choice and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud.
Welcome back. You're still tuned into MF Corner. We still have with us Harshvardhan Rungta, Amirpal Chadda and Sushant Bhansali. We are talking everything about budget expectations this time around when it comes to the mutual fund industry. Mr. Rungta, let me come to you. You mentioned, Mr. Chadda mentioned the switching of units from one scheme to the other, which is attracting tax right now. Maybe switching from a regular scheme to a direct scheme or from a growth fund to direct fund, to a dividend fund. All of it is attracting tax right now. Do you think that is something which causes a big issue for investors and that is something that the government can look at?
So, well, Sonal, honestly speaking, my personal view, I understand the pain that an individual investor faces. So am I. Even I am into the same category that if I'm switching between two schemes, I have to make tax payment. But honestly, my personal opinion is I don't see it to be unfair, quite honestly. I mean, look at it from an operational standpoint. I mean, if the tax combinations, if the tax implication, we're trying to say that all switches made from one scheme, the same scheme from dividend to growth or the direct to regular are exempt from taxation. How are you possibly going to keep a track of all this? How the tax authorities are going to ascertain the tax liability with so many permutation and combinations? Anyways, there are so many confusing provisions in income tax that this could lead to further leakages. So while I wish it could happen, but I think it is quite too small to include it into the budget and ask the finance minister to make those changes just for the convenience of certain investors. So I just reiterate, I wish it could happen, but I don't see this happening because this will lead to a lot of leakages in tax.
Okay, all right. You spoke about a lot of provisions. That is also something that the industry has been asking for, right? How a simpler tax structure, simpler holding periods as well. Mr. Bhansali, do you agree with this? And are there any anomalies or do you think something that could be made simpler when it comes to AIFs and PMSs as well?
Definitely, I agree with Mr. Rungta in terms of tax leakage issues which one government might think about those problems. Though simplicity is best, but any which way, if investors is wanting to take benefit with dividend and growth, or between regular and direct, then definitely government needs to benefit from tax collection as well, as such. From a PMS and AIF perspective, I think the other big things which we can probably someday get comment. One more InvITs and REITs, I think that's increasingly investable category for retail investors, for institutional investors. And there, if government can add some sweetener, probably that can make that category quite big. And remember, that category can pay and help a lot in the infrastructure creation within the country. NHA has done a great job getting the roads and the sets utilized through this road. And many other sectors like power transmission, etc., are also following the same. So if they can become much better vehicles, then infrastructure creation from domestic investors can become really big. Given that it's a non-equity allocation for all, it can also be a great saving potential, especially for senior citizens. So that's another one I think would recommend.
Okay, and InvITs and REITs, they were in focus in the last year's budget as well. There have been a lot of changes in terms of compliance already that came about in form of clarifications. Mr. Chadda, let me come to you. You know, one of the asset classes which has been doing really well this year has to be gold. But again, there are too many tax rates here, physical gold, gold fund or sovereign gold bonds. All of them are taxed differently. Is this a conversation that has been in place for a long time? And do you think this also needs some sort of clarification and changes?
Sure. And I think my panelist already covered the most important point on the taxability of the ETFs. I think barring that, today going for paperless gold in form of the sovereign gold bonds, it seems that's quite a good option for a retail investor to be invested in. One, definitely you get income from that, which is taxable, but a 2.5% income, no one minds having invested in gold and still getting a interest like a saving bank account. And with the superb advantage of non-taxability at the time of redemption. So if you hold the bond till the redemption, it's really from a tax efficiency perspective works well. Physical gold, very difficult to retain, a challenge, not a favorite with the current age group. But yes, the gold ETFs, I think was a win-win. Once the tax situation gets sorted, it will really be one of the easiest getting in and getting out option.
Okay. Okay, and you're right, like while this generation likes paper gold or digital gold more, nobody can take away from the charm of physical gold as well, right? So we need to look at the tax rates there as well, but take your point. These are some of the factors that need to be kept in mind anyway. Mr. Rungta, let me come to you. We had a lot more questions, but we have limited time as well. So around 2 minutes is what my director says. If there are any other changes that you suggest from the personal finance or the mutual fund industry that could be taken up or should be taken up, something that the industry, the investors want, but maybe it is not taken into consideration yet?
So, Sonal, I believe there are two areas which need very serious attention. So one is, I have been speaking about this since about 3 to 4 years now. There is a GST levied on Mediclaim premium, the premium that you pay for health insurance policies. Well, I think, it's the basic function of the government or the duty of the government to provide good healthcare facilities to its citizens. And very clearly, given our population and the health infrastructure, I don't think we are able to fulfill that requirement completely. So in order to encourage citizens to go in for health cover, I mean, Mediclaim premium and medical insurance policies are the only way. Well, the government does give you certain deductions in the form of Section 80D for the premiums that you pay, which again will be taken away in the new tax regime. So I think charging an 18% GST on that premium is extremely cruel. I mean, given the rise in the cost of medical treatment and subsequently the rise in the premiums that year on year, I think there has to be some mind put on to whether a levy of GST is necessary. If you look at the fiscal year 2023 data points, the total health insurance premium collected by the entire industry was approximately 90,000 crores. So the GST implication of that is about 16 to 17,000 crores. I'm sure our government in this current age and times can accommodate this 16, 17,000 crores worth of a GST in some other provisions. So I think this is something that I've been talking about since the last 3 to 4 years, and I'm hoping that there is something that will be taken up. The other area that requires a lot of attention again is the taxability on ULIP policies and life insurance policies. Well, there is a provision which says that if you're paying a premium up to 2,50,000 in a year in a ULIP policy, then the entire tax, the maturity proceeds that you will tax exempt. So there is no tax on that. We just spoke about a situation where the switches that you make into mutual funds are taxable. We're looking at all those kind of things. And on the other hand, you have a ULIP policy where an individual can pay 2,50,000 rupees in a year, and the entire gains that you make on that is tax exempt. Well, it doesn't kind of make sense when you have a product like a mutual fund being taxed and only 1 lakh rupees that you have on equities is exempt from taxation. And on the other side, you have 2.5 lakhs being paid over a couple of years. And all the gains that you make on that, on maturity, there is no capital gain whatsoever, where it functions exactly like a mutual fund where there are units. And the switches that you make in between that, whether you move from an equity to debt or debt to hybrid, there is no taxation whatsoever. Whereas we're talking about switch from a direct line to regular being taxed here. So I think this kind of a, tax abnormality needs to again be taken care of. And these are the two provisions which I think require immediate and urgent attention of the tax authority.
Okay, all right. Take that point. Gentlemen, thank you so much for joining us today. These are some of the important points that one needs to be aware of. Be careful of ahead of that big budget as well. And mutual funds, the industry has been growing. We are seeing big surge coming in retail investors and big surge in SIPs as well. So we'll see which way things go. But thank you so much for joining us today. We'll touch base with you again as and when there are more updates on this one. With that, we'll take your leave on this edition of MF Corner today. But stay tuned for Closing Bell to take you through the last hour of trade.
Done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me. And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly.
This is India's election headquarters,
As the verdict emerges, the markets will react.
bringing market movements into sharper focus with the most authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things are not looking very good for the ruling regime at this juncture.
Of course, things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
it's a slightly negative start across the Asia Pacific, and that is also because of the lack of cues from Wall Street.
I think there were some questions, and legally everybody who looked at that understood that, the content belongs to them. We're not training our models based on that.
And a couple of them came out from the F&O ban. Yesterday, you had a late surge that we saw on Sun TV. So that's one of the stocks that could be in your radar.
Because their Dadra facility has now received a warning letter from the US FDA.
Tony has written on financials wherein various stocks have been upgraded and downgraded as well.
The first tick on the Nifty is in the green by about 20 odd points, 15 points.
Very comfortable. Every of our shareholders want us to be in the steel business.
Our unsecured loan book is pretty good.
Caps have recovered. The mid-cap index is actually looking quite good right now, 0.7% higher.
The valuation is just the score, is the way we call it. So we are all about playing the game.
Health Minister JP Nadda has reviewed the heat wave situation across the country.
It's the big boys that's actually dragging the markets higher, and Bank Nifty continues to support. Yesterday, 2% higher. Today, they continue to support.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel D'Souza, and joining me today is Sonia Shenoy, and Surabhi will be with us in just a while. Well, Sonia, it's a good-looking screen. The Nifty is still holding well in the green. We're up close to around 80 points odd. But I think at around that 23,660 odd, we're seeing some bit of resistance. We went there yesterday, and we came off a little bit. Even today, from the high of the day, some kind of profit taking is creeping in as we speak.
It is actually, but it's not such a bad outcome by the end of it. Yeah, par for the course, absolutely. And the good thing is that yesterday there was a lot more intraday volatility. Today the volatility happened, but just in the last 1-2 hours of trade. So that's always a good thing. The Nifty actually is up about 50 odd points. The Nifty Bank is the one that we have our eye on, and after the kind of move that we've seen in the last couple of days, it's managed to add on some more weight. So just look at that. In the last 1 month, in the month of June, it's been almost an 8% rally that the Nifty Bank has seen, and a lot of banking stocks have contributed to the move as well. In the broader markets, you have metal names, you have chemical stocks, you have a whole host of other pockets that are looking pretty good. In fact, in the last 5-10 minutes, it's chemical names that have come back in a big way. So let's see which way it goes for the rest of the day, though. For the rest of the hour, things could go either way. We didn't have any global cues. The US markets open after a holiday, so let's see which way things go.
Well, that's right. And you have the weekly expiry as well that will play out in the next few minutes. So that's another factor that can add to the volatility. What slipped in the last few minutes? I think a couple of names. Wipro has moved to the low point of the day, so I think we should get that one up for you on the screen. And HDFC Life, that's another one in there that's seen some bit of a move in the last few minutes. So both those two stocks should come in. I think there's an inclusion that will take place. So there could be some rebal as well that's in store. Tomorrow, that is, 21st, yes. So we'll have in the Sensex, the inclusion will be Adani Ports and the exclusion will be Wipro. So we'll have to keep an eye out on that stock as well. Well, let's get in our technical experts to find out how do you trade the final hour. Mitesh Thakkar joins us to help us out with that. Mitesh, it's a good session. We're up close to around 50-60 points. What would you do if you had a long position? Would you take some money off the table? Would you trail your long position with a stop loss?
Nigel, I think once again today it is the Bank Nifty which is slightly stronger than the Nifty. The good thing is that Nifty, though it did have some kind of a intraday correction early in the day, but we never threatened to break below 23,400, 380 zones. I think maintain your long position. We are not adding on to them, but just trailing the stop loss over 23,400 now, and hoping that if the sideways action breaks on the upside, then I think you might see continuation toward 23,700 and then eventually 23,950 as well. So quite positive. On the stock side, Bandhan Bank has broken out. So keep a stop at 204 half, look for targets of 220 here. And the other one which I like is Bata India, which I would recommend buying with a stop at about 1447 for targets of 1510.
Okay, got that. For now, okay, Bata is up almost about 1.5%. So looking pretty good over there. But let's also talk about some individual stocks. Now, CE Info Systems is the stock on my radar. We actually had a Goldman Sachs report where Goldman Sachs has initiated a buy on the stock with a target price of 2,800. Even after the 20% rally that CE Info Systems has seen, the target price is still above the current market price. So that is the kind of bullishness that Goldman Sachs has. They say that the company is now well poised to benefit from its leadership position across segments, whether it's automotive navigation, mapping devices, connected vehicles, and the valuations of the stock are also looking pretty good. But this was, of course, before the rally that we saw. Goldman Sachs also had a buy on Uno Minda, where they initiated a buy with a target price of 1350. But particularly on CE Info Systems, let's go across to Deven Choksi of DR Choksi FinServ. Deven, hi, good afternoon, and thanks for joining in. It's a big move that we're seeing on CE Info Systems. I don't know if you tracked that stock, but any thoughts here, and would you advise buying it at this price?
Yeah, good afternoon, Sonia. Well, I think it's a wonderful business model per se, I guess, and I think the each and every segment, be it the auto segment, be it even the government segment where I think they collect this particular data, I think they are all basically putting in higher amount of order. Most important part here is that I think they have the visibility of around 35-40% kind of a CAGR growth in next 3 to 4 years, and that is, I think, quite evident from the order position also that they're carrying. Plus the technology platform through which I think they're supplying the data, including to likes of Hyundai, Kia, or even for that matter other customers. I believe that I think this is where probably this company is going to succeed with both IoT as well as SaaS model that they have. So from a perspective of looking at the business, I think it looks absolutely very convincing. Well, I think the growth rate is at around 35-40%. Valuation above 50%. Market is trading slightly at a premium. But in this market, obviously nothing is cheap. So one will have to buy with a slight amount of caution that any corrective downside may bring down the stock price. But otherwise, it looks, I think, pretty convincing for next 3 to 4 years of output that they have provided.
Okay, all right. Deven, hi, good afternoon. Good to see you. And Deven, I wanted to ask you some of these gas stocks, CGD stocks. You have Mahanagar Gas that's spiked up. Actually, we should get the intraday chart, all three of them. Mahanagar Gas, IGL and Gujarat Gas. They are flying away. That incremental up move has come actually in the last 30 minutes or so. Any view on these names, Deven, and which one do you like?
Well, I think, Nigel, good afternoon. Obviously, the volume play is on at this point of time. I think majority of these companies have actually, I think, started fetching the better volume realization as far as the books are concerned. At the same time, the input cost, I think, remains under control. So to a greater extent, I think it is both the growth on the volume as well as on the margin. Both are, I think, coupled at this point of time together. Being a utility business, I think they will have its own subjectivity as far as I think the ups and downs due to the pricing. But overall, I think the segment is convincing. At this point of time, we don't have any recommendations on any of the companies at this point of time. But Gujarat Gas remains and Adani Gas remains, I think, as part of our portfolio. So that's a standard list.
Okay, thanks a lot, Deven, for that. Well, we have many more questions for you, but in the meantime, let's also get a handle on what's happening in individual stocks. Sun Pharma has slipped in trade after the company's Dadra facility received a warning letter from the US FDA. Ekta is here to tell us more about that. Ekta, over to you.
Well, yes, Sun Pharma's Dadra facility has received a warning letter, but it's not come as a huge surprise to the market simply because of the timeline of events which took place with the Dadra facility. In December of 2023, it was inspected. It had received 6 observations at that point in time. It then got escalated and classified as an official action indicated status, which took place in April of 2024. Now, that has now been escalated to a warning letter for the facility. What a warning letter means is that the production of the current, medicines will continue or drugs will continue, but no new approvals will be allowed. That is better than receiving an import alert where all production stops immediately. The street, while we don't know whether they can get an import alert, the street is assuming that if they haven't yet received it, it's unlikely that it would happen for the Dadra facility unless the remediation doesn't go on track. In terms of contribution, one of the most important drugs, Revlimid's API, is manufactured from this particular facility. So yes, that would impact earnings, but the overall contribution is expected to be in single digits for the entire US sales. On a larger picture for Sun Pharma, this is one new facility which has received a warning letter, but they already have an import alert on their Halol plant, and they have received a non-compliance letter for their Mohali facility as well.
Okay, all right. Ekta, thanks a lot for that. Well, that one's underperforming in today's trading session, down close to around 2%. They've been, a bit of a negative news, whereas Ekta said it may not be that negative. What's your view on the stock? It's 2% lower. Would you look to buy into this dip?
Yeah, maybe I think as of now, the price and value-wise, I think the stock is fully priced. Of course, I think with the specialty generic products, I think that they have in their portfolio, they definitely give good amount of visibility on the business side. There is no question on that aspect. And as such, I think this particular alert which has come up, I think from the US FDA, I don't think that it is going to change the needle much as far as I think the business is concerned. As such, the existing business continues, and I don't think that is going to have any meaningful effect onto the financials of the company. So yes, I think it's a good opportunity, particularly from the perspective that they have, I think, a good pipeline of products which are in specialty generics, where they have a higher margin also. I think from that perspective, if you are looking at a company, I think in the corrected price rather, I think it could be a good opportunity to buy it.
Devin, these power financiers, they were the other way to play the power theme. And these stocks in 18 months, if I'm not mistaken, they're up close to 3 times. I recall explaining PFC at around 130 rupees. Currently, it's around 480 rupees, but it's corrected from the recent peak. Even in today's trading session, it's down close to around 4%. Do you think bulk of that argument that this is another way to play the power space, or whether it was on the valuations front, all that is in the price at 480 rupees?
Well, I would think that there should be further upside to that, largely because of the fact that the valuation is not so expensive. Balance sheet has been corrected to a significant extent. The demand from the sector is growing. And I think these companies are basically both REC, PFC, both these companies are relatively much stable as of now. So we believe that I think the corrected prices, I think, would be a good opportunity to buy into this portfolio. Maybe the valuations are also to the advantage. They are not so expensive, so that gives you additional profit.
Okay, we have to take a short commercial break on that note. We'll do one thing. We'll take that break and be back. We'll have our Alpha Manager Vinay Jay Singh of GM Financials on the other side.
And what a great way to celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key news makers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18, weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Welcome back. Well, the market is not bad actually. It's holding on to its gains. It's the Nifty Bank that has been the big mover once again today. I mean, by big mover, I'm saying, 0.7%, while the Nifty itself is about 0.3%. But be that as it may, lots of traction coming in from there. Devin Choksi is back with us. Devin, everyone has been talking about HDFC Bank and Kotak Mahindra Bank, but the other one that's been slowly participating is ICICI Bank as well. Any thoughts here? It's come off its lows today. Do you think that there could be more traction on the upside?
Indeed, absolutely. I think the amount of the loan growth that we are experiencing in the economy is something which is absolutely very convincing. On one side, government is putting more amount of investment in building the infrastructure, and so the industries are required to put in the capacities. And that's where I think some of the larger banks like SBI, HDFC Bank, and even for that matter, the segments in which I think the ICICI, Axis and Kotak operate, I believe that I think they have reasonably good amount of runway ahead for them. Maybe I think 18 to 20% kind of a CAGR growth in the loan book is giving you the visibility of doubling the size in 4.5 years time. So from that perspective too, I think these companies looks interesting in their position. Evaluation wise, they are not far too expensive. They probably, I think, even within the range of around 2.5% at the best, I think, on the valuation side, price to book value. So from that perspective too, I believe that I think this bank is interesting in position. Maybe a must in the portfolio as far as I think next 4 to 5 years outlook is concerned in the investments.
Devin, I wanted to ask you about some of these cement stocks. Stocks like India Cement, forever it's been, been noted as a value pick. It goes to around 150, 200 rupees. You see some buying over there. It goes to 250, 270. Again, it does a U-turn. Now, the problem for the last few years is some of these companies have capacity, but there's no buyer. Suddenly, Ambuja Cements has gone and bought Pennar Cement, and that to a 10 million ton plant. Today, in fact, India Cements is up close to 6%. Any view on this name?
Not in particular about India Cement, but I believe that I think the pan-India capacity of Adani Group, that is CCC, Ambuja, and the companies included therein, along with, I think, the Ultratech, and even not too far behind Ishri Cement, I believe that I think these are the companies which have created significantly large amount of presence. And that's where probably I think the argument is for buying them into the portfolio. Largely because of the fact that I think given the spending which is happening in the economy, cement as a commodity is always going to be, I think, in higher demand. Fortunately, at this point of time, most of these companies have also been able to control their input cost, energy cost, and that's where probably the margin is protected. So a combination of high growth, high demand, better sales, and on the other side, I think the margin protections through which I think the profit book is growing. I believe that forget about the cyclicality of I think couple of months in a year in this kind of businesses. I believe that this company is probably I think with a larger capacity will have bigger advantage going forward. Maybe 20-25% CAGR kind of should be expected out of this business in next 3 to 4 years.
Okay, we still have about 40 minutes to go, so we'll come back to you in a bit, Devin. But for now, let's move on. The minimum support prices were closely watched by economists to see if they are much higher than last year, especially after the BJP seat tally was seen to have been hurt by farmer discontent. Lata is here to analyze the impact of the minimum support prices on the CPI. Lata, over to you.
Well, the MSP is always analysed, the minimum support price is always analysed to see its impact on CPI. This time, of course, more closely because there was this expectation that maybe there was farmer disapproval of the BJP's policies and therefore whether there would be higher increases. But actually the biggest weightage, cereals, and therefore in this case paddy, since wheat is a rabi crop, the MSP, the increase for paddy is 5.36. Last year it was 7%. So clearly that is not showing any indication of populism. Likewise, dal, arhar, which is what, tur dal. Tur dal is up 7.86% versus 6% last year, but that's also because there has been some double-digit pulses inflation, and therefore this is an incentive for people to grow more of pulses, and therefore that is a little higher. But the point is, the MSP itself doesn't enter the CPI. If the minimum support price is high, then market prices rise because traders have to pay even higher to get it from farmers, and therefore the expected price increase of the market rates is higher. However, at the moment when the MSP was being announced, already the paddy and tur dal prices are higher than the MSP price. So this is not going to have any impact on the CPI. The net impact, according to economists, is about 40 to 45 basis points. Actually, 40 basis points on the CPI. And last year it was over 60 basis points. So clearly, when economists are calculating the CPI forecasts, they factor in some MSP impact. This time it is not more than what they had anticipated. There is a slight higher increase in oil seeds, but that's more to spur production and not much crop is procured, oilseed crop. So it won't have too much of an impact on the CPI. The short point, no economist has raised their CPI forecast after looking at the minimum support price. The other question people were asking is, will the higher MSP indicate more populist budget? Now people are not making that connect anymore, because you may not want to give a higher MSP because you don't want inflation to rise. After all, food inflation is pretty high. You could still have a controlled inflation MSP policy and still have a populist budget. So people are not making that connect just yet.
Okay, all right, Lata, thanks a lot for joining in and filling us in with that quick analysis on that front. By the way, a quick check on the markets. Actually, we slipped a little bit from the top because we were holding around that 23,600 odd, and we've come off. Ultratech Cement actually has moved to the low point of the day, so that should come up for you on the screen. Wipro, we were highlighting earlier as well, Sonia. That stock as well has slipped a little bit, in this hour.
Okay, well, Vinay Jaising is joining in. He's the MD and Co-Head Portfolio Management Services at GM Financial Services. Vinay, thank you so much for joining us on the show. I wanted to start by asking you about the big event upon us, which is the union budget. Of course, at the end of July, I mean, July 22nd is when we're expecting it. But from a market perspective, is there anything that this budget can do to further, spur the animal spirits? Or do you think we are well on track despite the event?
So I think the market is looking at a couple of things in the budget. First is the comment of how populist is the budget going to be. The government is, I would say, very lucky that RBI has given in about 2.2 trillion or about 1.3 trillion incremental money coming, which was not expected earlier. As against 800 billion, you've got that 1.3 trillion kitty coming in F25, which was not expected in Feb. So how are they going to use that? Are they going to use that by increasing the housing PMAY schemes? Are they going to use that by increasing capex in certain fields? Or are they going to use that by increasing subsidy under the fields? I think this is the first important question the budget has to give us. Second is reforms as usual. Are we expecting anything on the taxation front? People are wondering whether, you're going to increase the gamut of taxation, reduce taxes at some part. So I think these are the two big comments which people are looking forward from the budget. First is it business as usual? And second is, are you going to make it a lot more interesting by changing the tax structure, albeit, getting it lower as against getting it higher?
Hi, Vinay. Good afternoon. Good to see you. And Vinay, what about the Indian markets? We continue to chug along 50, 100 points on a day-to-day basis. Do you think we're getting ahead of ourselves? Or do you believe that we're in a sweet spot? Growth is coming about, inflation under control, and earnings as well are looking up. So we deserve to trade at these valuations.
So I come from the latter camp. Nigel, you said it better than I would, right? The word sweet spot, comes with the current account deficit. We'll start seeing analysts talking about the deficit going to a surplus in the next 3 to 4 years. We'll talk about the forex reserves go from $650, $660 billion to even close to $1 trillion in the next 3 to 4 years. We'll talk about the earnings growth now being a lot more broad-based. Earlier it was only about financials. Now we'll start talking about the Make in India themes, the capex structures which the government has done, which will increase the overall growth of the country. Now that's the background for India. But when you start looking at the rest of the world, they're still waiting for the big word called pivot, right? They're still waiting for the interest rates for US to start cutting it down. You're already seeing so much of pain on credit card companies. You're seeing so much of pain on mortgages in US. So at one end, you're seeing the rest of the world reducing or slowing down their overall GDP estimates. And here you're seeing India doing well. You did have a hiccup of what happened on the election day when you saw the market correcting. All we want to see in the sweet spot is policies, reforms as usual. let the companies do what they're going to do. The increasing free cash flows of the entire country is pretty amazing. And I think we are in a relative sweet spot. But yes, don't expect 2024 fiscal to be repeated in 2025, as far as the market's concerned.
Are there any spaces where you are a bit cautious now, Vinay?
We were grossly overweight in the capex sector. We were more than 3x overweight in the capex sector. Capex including industrials, capex including cap goods space. I'm adding power equipment out there. The valuations in some of them, I'm adding defense out there as well. The valuations in some of them have gone and hit the roof. So, we're getting out from them and looking at relatively safer havens, be it in the pharmaceutical space or be it in the private bank space, which have become a lot more lucrative. Also, we're trying to see if in the budget, if there's one thing which the government may announce on the housing part, how do we capture that? So, we're kind of just shifting a little bit, but our three legs, which is FinSum, Make in India and CapEx, the themes there are a lot more similar, just some tactical changes.
Capex needs cement. You all have been bang on in a couple of smaller cement counters, and we had a large deal that was announced last week. Out of nowhere, Pennar 10 million ton unit getting sold had a good sum of money, 11,000 crores. Do you all continue to like some of these mid-cap undervalued stocks, or are you all shifting now to the larger cap names because consolidation is going to drive pricing, and then the ones that have control on costing will actually do much better?
So again, Nigel, you've given the answer, right? So we continue to hold those companies which have less than $90 per ton as the weighted average price. We think now's a space where you can go closer to the larger cap names. Even companies like Grasim, where you've got, a bit of both. You've got a holding company discount and some paint business coming in. We're looking at that. Among the small caps, incrementally in terms of buying, we're keeping our eyes open, but we're thinking the prices are pretty much there, wherein it's going from a buy zone to a hold zone.
Okay. From a buy zone to a hold zone. Got it. Just one follow-up question on some of these consumption spaces like autos, right? We've had a fairly decent run here. Growth has been good, especially for some of the passenger vehicle names. Some of the two-wheeler names are coming back in a big way. But do you think that the cycle has peaked, or is there more to go?
So I think rural India spend, as that comes up, you will start looking at a lot more two-wheeler names, companies which will have one-off stories of theirs as well. Let's take the case of TVS. You will start seeing the margins which have already moved up, inch up further, 11, 12% going to 14, 15%. You'll see the EV story pan out there as well. So I think some two-wheeler names are pretty appealing. On the passenger names, I again think there are too many things going their way. Case in point, we've always liked Tata Motors. We still like it. The stock's done well. The deleveraging part of the story is playing out very well. Now they're talking about breaking the company up into two and listing that. That will be another big fillip on for the company. And again, the EV angle would help Tata Motors as well. So we are pretty, we like the auto story, and we are pretty much invested in them.
Okay, all right. Vinay, one theme that you all caught early was the defense pack. And I think HAL was one stock that you all got in early. I recall last month I asked you, I said, what's the view on HAL? And you're like, okay, you all prefer HAL in comparison to BEL, if I remember that correctly. In the last 1 month, the stock is up close to 10%. What do you do from here? Hold on to the stock, or do you think from a buy it comes now down to a hold because the stock is as it is run up so so steeply?
So, Nigel, this is a question we are asking ourselves virtually every hour because, it's not up 10, it's up more than 10%. And, there was a time we bought HAL, which was at 1 year for...
Vinay, yes. It's up 10% from the last time we chatted, 11% to be precise, from last month till now.
Yeah, exactly, right? So that's too much, so thanks, Nigel. So it's up like crazy. And that is obviously a concern for us. Having said that, we're very confident if there's one stock we want to keep on holding on to in the defense part, it is Hindustan Aeronautics, because we think at the end of the day, it has too many moats, moat being technical, the airline space is very difficult to replicate. Second is the maintenance part of it, which today it only has India as its business, through Tejas, but it'll start getting global orders also coming in. Come 2 years forward, you're seeing the earnings drivers also increase. So we like Hindustan Aeronautics. We're waiting for a correction to get in more. Currently, we are moved from the buy mode. I would say we are between the buy and the hold mode for the stock. We really like this name, but we're thinking of it like as an FMCG name, which will keep on giving you at least 10 to 15% returns, not in a month. I'm smiling, not in a month, but at least over, compounding over the next couple of years. It's just doing too well, We don't want to break the mode from our side.
Well, Vinay, just one final question from my end, right? Is there anything to suggest that this rally, this market rally that we've seen up until now could come to a halt? I mean, any risks on the horizon according to you?
So if you see the FII inflows and you compare that with the rest, the domestic inflows, the domestic inflows have been close to $12 billion in the last, give or take change, 2 months. And the FIIs have had an outflow of about $4 billion. So this number is, you add the two, it's yet a plus $8 billion. Clearly, promoters and the rest, have been selling. So the first thing which comes to your mind is investors may start wondering, why is the management of the promoters selling? I don't think that's bad. It's, at every level, everyone needs to make money. But I think what's interesting, and, to put your story the other way around, what's going to happen?
Oops, I think this...
If I start putting in money as they uttered in the last 2-3 days. So, today the FI ownership is I think sub 16% for India. That number can go to 20. On a 4% growth on a $5.2 trillion market cap country is as much as $200 to $220 billion. So you break that up by 4. I won't be surprised if FIs double, their investments in the country to as much as $50 billion. So I think that's a positive trigger, which is why, Nigel's first question, I think the market's in a sweet spot. Apart from, global pains, things look pretty good.
Yeah, it's like the biggest party animal who, 10 years ago has not been part of this party, because actually they've been selling, and the holding right now of FIs in the Indian markets, I think is 16.5% odd, which is a multi-year low. All right, Vinay, we appreciate you joining in, taking us through your take on the markets as well as a couple of stocks and sectors that we discussed. Well, Surbhi joins us as well on the show. Surbhi's been busy. She's been working the phone lines. Surbhi, I believe the finance ministry officials, they met with capital market participants. Tell us, what do you pick up on that interesting stuff?
So yeah, I was trying to just figure out what's going on behind closed doors and all the pictures that we're seeing on social media. And I kind of picked up 4 key takeaways or 4 key areas of conversation that seem very interesting. I mean, from a capital market standpoint. So number one, the PSU buzz did come up in this meeting, in this conversation. Because obviously the government is extremely happy with the moolah it's raking in, with the market going where it's going and PSU stocks doing what they're doing. Now, one suggestion that came in from industry was that when you start looking at divestment, which was the expectation after elections, and now that we have, Modi 3.0, please start looking at low-floating stocks first. And the rationale is very simple and clear, that it is here where sometimes valuations can go completely out of whack and maybe, even enter bubble territory in some stocks. So that was request number one, that look at divestment, particularly in the low-floating PSU stocks. Number 2, and this is a really hot subject, on F&O. So how can the F&O market be cooled down? Does it need to be cooled down? That was another point of debate. And industry participants did acknowledge that, yes, there is a need to ensure that retail investors don't get burned. So how do you do it? Now, one suggestion was, and of course, there's no unanimity on this, but these are deliberations that were sort of going around, that increase STT on the big whales, the big fish. And, what do I mean by that? The high-frequency traders, the algo-based hedge funds that are trading in large numbers, large quantities, and many of them are actually foreign funds or foreign-based funds. So set a threshold in terms of the turnover, and that's how you can segregate and filter out. So retail will probably be out of the purview. And, wherever trading volumes are extremely high with some of these hedge funds, there increase the rate of securities transaction tax. By the way, just a little bit of trivia, I was doing some research on it. India, by the way, accounted for 84% of all equity options contracts, not in value, in number of contracts that were traded globally in 2023. We were just at 15% a decade ago. Now it's 84%. That's the extent of increase in the F&O market. Quickly moving on, the mutual fund industry had its own ask. Now, the mutual fund industry wants the regulatory architecture to be overhauled in a way that they can start offering pension schemes. Remember, pension plans are governed by the PFRDA and, it's under the insurance regulator as well. But mutual funds also want the freedom to start launching diversified schemes, but ones that will focus specifically on retirement planning and some sort of a pension plan. So that was their ask. And last but not the least, this was something that was brought about by a lot of asset managers as well. A lot of Indian asset managers have global funds, offshore funds, which are being managed by Indians. They're being run by an Indian asset manager, but they could be domiciled in the US or let's say in Singapore. So the ask is that enable the regulatory framework to bring these funds onshore right here in India. And the way that needs to be done is perhaps overhauling the safe harbor rules and as well as some taxation aspects. So the request was that don't tax individual global foreign investors, tax this at the fund level, but not at the investor level, and also make compliances a little easier. So some of these funds which are located overseas right now can actually shift base and come here at home. So these were some of the discussions. But overall, Nigel, what I got was that it was a very holistic, wholesome conversation and a lot of exchange of good ideas. So I think a lot of participants, most of the participants came out quite happy with it.
Well, interesting, Surbhi. We'll have to keep an eye out and see what more in terms of action comes out of that. Well, let's move on then. NVIDIA, well, that's been the stock that's ascended to the topmost position in terms of most valuable company, unseating the long-time tech titan, that's Microsoft. The chipmaker stocks have surged close to around 3.5% on Tuesday, elevating its market capitalization to an unprecedented $3.34 trillion. CNBC-TV18 Shireen Ban caught up with Shankar Trivedi, the Senior Vice President of the Enterprise Business of NVIDIA, on their journey towards this triumph. Let's hear out what he had to say.
The shock and awe story of NVIDIA, Shankar. I mean, today the most valuable company in the world. For most of us, the big breakthrough moment as far as generative AI was the ChatGPT moment. But for you and for the folks at NVIDIA, I mean, when did you start to think that this was on the verge of an explosion?
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, where did NVIDIA come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and, major ISVs. It takes a long time to build a market.
All right, and catch the full conversation with NVIDIA only on CNBC TV18 at 7:30 p.m. and 9:30 p.m. later today.
Has picking up. The last year we had almost 6% of our turnover from the export. This year we are planning to almost almost increase our export to coming from the 2 times. Last year we have 70 crores. This time we are planning for 150 crores in the export market. Revenue growth last year, the way we have done crossed almost 23%. We have the revenue growth. We will maintain the same momentum this year also. Last year we had around 20% operating profit margin. Maybe it will be coming to around 25 in that range.
Of course, in the budget, the thing to watch out for would be how much of the money is left in the hands of the average household. So consumer durables, and consumption and consumer discretionary side of things, whether it be your two-wheelers or whether it be your health, pharma, and all of these things will see some sort of, extra attention than what these sectors have got so far.
Apologize for the grief that we have caused. And I want you to know we are totally committed in their memory to work and focus on safety for as long as we're employed by Boeing. So again, I'm sorry.
You said you've listened to the whistleblowers. Have you directly spoken to any of the whistleblowers?
I have not directly spoken to any of the whistleblowers.
Do you think that'd be a good idea to do that?
Yeah, I think it would.
I'd recommend it.
Yep.
You've got 32,000 machinists. These are American workers who work for you. These are Boeing employees in the Pacific Northwest. You're in contract negotiations with them right now. 32,000, that's a lot of them. The last time that they got a contract was 16 years ago. Do you remember the terms of that contract?
I don't. It was a very long contract.
Yeah, well, they got 1% wage increases over 8 years. 1% over 8 years. You got a 45% increase.
Welcome back. You're with us on Closing Bell. We've got, of course, Mitesh Thakkar back with us for some final trading calls and some ideas. Mitesh, so what would you work with now?
So, Swami, I think, the market is kind of sideways, not giving much of an action. I think probably supported by the Bank Nifty, and that is the point which I've been highlighting, that it's the Bank Nifty which is showing good strength. So maybe you look for some buying side ideas with national names. First of all, I have a buy on BTST on Biocon with a stop at about 337.5 and for a target of around 350 here. And the other one which I like is BTST on IndusInd Bank, which I would recommend taking a BTST with a stop at 1522 for targets of 1550.
All right. Mitesh, I wanted your view actually on Hero MotoCorp. Stock is down 2.5%. It's had a good run, and it's down 6% for this week itself. For the year, though, it's up 33%. Any levels you're looking at over there?
Hero Motors, I think, has done very well, Nigel. It's had a very good rally. I think there are first signs of a pullback coming in, but I think this is just a pullback. I would still recommend being on this one at lower levels. So the first support area which I'm looking at is around 5390 and then 5350. I think that zone should give it good support. So around those levels, I would want to see a reversal and then buy for this
one. Okay, all right. Thanks a lot, Mitesh, for that. Well, let's welcome Sudeep Bandyopadhyay from IndiTrade Capital, who joins us on the show. Hi, Sudeep. Good afternoon. Good to see you win. Well, the sector that's catching your eye actually today is this fertilizer theme. Smaller stocks, Madras Fertilizer, Paradeep Phosphates, Chambal Fertilizer, NFL, you name it. They're flying away. What's your view on these stocks? And some of them are coming out of nowhere. RCF has moved from 150 rupees to 220 rupees. All of this in a matter of a month.
Nigel, you're absolutely right. I think, first point I'll make is that fertilizer stocks were not really favored by the market, and they were languishing for a very, very long time. So some amount of pickup was warranted. Second, I think the one area where a lot of reform measures are still needed for streamlining operations as well as distribution is definitely fertilizer, and government is working on that. Some measures towards that are definitely expected in the near future, which should help the industry in a big way. So to an extent, excitement is warranted, I would say, because these measures are in the offing. The third point where I have my big question mark is the news going around that there will be some major GST relief for this industry. There are talks of GST being completely removed or significantly reduced. I am not very sure whether that's going to happen, and there may be some disappointment after Saturday, when the GST Council meets after 9 months, and these expectations are building around that GST Council meet. So I'll be a little cautious as things stand today. as far as fertilizer is concerned, because to a great extent, this GST rumor is pulling the stocks. But fundamentally, I think a better valuation was warranted, and that's probably has happened. Little bit of correction post-Saturday may happen. But again, if the correction is sharp, it will be an opportunity to buy some of the good quality performing fertilizer stocks.
Any view on Delta? Sudeep, 4,000 crore market cap, 500 crores of cash in the books, a business which is okay, even with the headwind of the higher GST going ahead. The problem was retrospectively they had imposed that 20,000 crores of potential liability, which there could be some relief on that front. At 150 rupees, would you look at buying the stock, or do you say no, you just buy for clarity? You can buy it at higher levels, but you don't want to buy it now?
Nigel, I go with the second portion of your comments. I think I'll wait. There are a significant uncertainty, and to an extent, probably it's not fair to have this retrospective thing. But now that it has come, for it to go away in the system, through the system, it will take quite some time. That's our belief. So at this stage, I would think that it is better to wait and watch rather than try to pick the stock at this stage. And yes, if things go away, maybe it will be good to pick up at a later date at a higher valuation also.
Okay, that is a Delta Corp. Sudeep, just to talk about the moves that we are seeing in a lot of metal names. I mean, I think prices themselves have been moving higher, particularly on some of the base metals side. Do you like anything here? Any trades, even if it's a short term, maybe not a long term idea, but even from a short term perspective, tactical perspective, any ideas?
So my favorite stock has been Vedanta. People may laugh because of the multiple things around Vedanta, but the fact is, I think they are present in pretty much all the relevant metals and oil as well. Look at copper, look at zinc, they're at all-time highs, and they have very large copper mining facilities. They are in steel. And of course, on top of that, that demerger, that corporate action which they are doing, I think it will be a means of value unlocking significantly. So if somebody is willing to be a little aggressive, I think metals is a good place to be in. And in metals, Vedanta probably is the best place to be in. It has moved up. Price has moved up quite a bit from, let's say, what it was a few months back. But still, I think considering the way the metal rally continues unabated, it is good to be in Vedanta. Also, the value unlocking opportunity, which is going to happen because now the process has moved quite a bit. I think it's good to be there.
Okay, got it. So that's Vedanta, your favorite stock, and also a stock in a company on which we got lots of inputs today because of Nigel's interview with Mr. Anil Agarwal himself. So that's definitely a name in focus. Well, on that note, let's just move on and bring you some more snippets, voices from the Valley. A day after the US government filed a lawsuit against Adobe, the company's chairman and CEO, Shantanu Narayan, spoke exclusively to CNBC-TV18. He termed the US government's case as misguided and promised to fight it in court. Speaking to Shireen at the Adobe headquarters, Narayan said the world has entered the era of artificial intelligence and acknowledged that it will be disruptive, while also adding that AI can be a massive enabler and a tailwind.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts. And the reality is that it was the government's case is misguided. And so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription. Yeah. We have open and flexible policies where some people can pay for it up front and get a discount and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
And you're making $33 million. You think maybe these folks deserve a raise?
Oh, they will definitely get a raise.
Good. Good.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person, either owning a team or at least supporting a friend's team.
And so it's a passion, and I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, whether it's Satya or me, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League, cricket here. And, I'm part of the San Francisco Unicorn team. And so it's fun.
So the Hyderabad market is not...
Welcome back. Well, let's get you some more perspective on the market. We caught up with Krishna Sangvi of Mahindra Manulife, who believes that financials is now the natural call for investors and expects CapEx to expand in the coming years. Let's listen in to what he had to say.
Financials would have been a natural port of call considering the ownership, pattern. So that's where some money gets taken out to invest somewhere else. See, let's look at macro picture of economy. I think all sectors are interlinked. We have, this concept of profitable participation, where some sectors lead the earning growth, some sectors, lag it, but net, economy keeps on growing. A lot of capex announcements which would have happened earlier are possibly likely to continue. So it's going to be more of a valuation call, and that's where the thought process comes in, is that as and when some of those capex cycles which was initiated sometime back starts getting played out. See, what's the end game of capex cycle, right? End game of capex cycle is higher manufacturing, which creates income for people who are employed. So it's job creation. It's some Indian factors of production being paid out as a part of this cycle.
Okay, all right. Well, Mitesh, I want to come across to you. Vedanta has come back to life today, and we've already spoken about the fundamentals of the company and the exposure it gives to all metals. And the only problem was, what is the promoter intent, which for the time being seems under check. What's your view at around 470 rupees? This is the same stock that a few months ago was 250 rupees.
Man, it's actually surprised me. It's done much better than Hindalco, the other ferrous companies, barring maybe to a certain extent. That's why the chart pattern still remains strong. There is no sign of weakness. So the way one should approach is that wait for the stock to clear the early price. The highest closing got is 479 on the 21st. They have 419. By some about 480, take a stop of about 12-13 points, and once it crosses 494, 495, which is the all-time high, add more until your stop request.
Okay. Well, we just have a couple of minutes to go before we close out for the day. Sudeep, the talk has really been about banks coming of age and Bank Nifty finally firing up here and there. We spoke with the SBI just this morning. Obviously, the bank is extremely confident about credit growth, about maintaining margins. It's just absolutely perfect commentary, so to speak. But incrementally, if you want to invest money in a large bank, would it be the bigger PSUs, or would you go back to basics with the private sector names?
Absolutely. At this stage, I will prefer the private sector banks. Look, what's happening is we have seen the asset quality improvement cycle and the valuation improving and all that. And I think asset quality has reached a stage where I think there's very little left to improve. So now the question comes is credit growth, and that is definitely going to happen with the economy on a roll. So now the credit growth needs to be fueled by funds. Now these needs to be mobilized. So deposit growth is going to become the key factor and the battleground for the banks. So under the circumstances, if deposit growth is going to be the biggest challenge for the banks, I will probably veer towards the efficient private sector large banks, where they have a large branch network. They have the capability and the expertise of mobilizing large amount of deposits at a reasonable cost so that the margins don't get affected when they do incremental lending. Under these circumstances, at this stage, I will veer towards an ICICI Bank or an HDFC Bank. We will have to watch carefully because they have been performing very well. All the parameters are good. Let's see how they can continue to grow their deposit and fund the credit growth.
Final question, Sudeep, before we let you go. Interglobe Aviation, on a day-to-day basis, sometimes you get to see the stock down 1%, 2% odd, but by the end of the day, it recovers all of its losses. Similar is the case that happened today as well. We know the kind of market share that they're gaining, and they have a lot of tailwinds in store. The problem is ATF prices could start creeping up. Do you think that's a concern? Or do you think it's par for the course, and given their size, given the scalability, you'll continue to remain invested?
I'm a little cautious on Interglobe at this stage. I think they've done splendidly well, and of course, you talked about market share. It's an all-time high, and probably will keep inching upwards for some time. But competition is in the way offing, and at some point of time, we don't know whether it's 3 months, 6 months, or 1 year, competition will start biting into their market share. Yes, ATF is a matter of concern. It can go up anytime and can change all the calculations in just a few days itself if ATF goes up. So under the circumstances, and if you look at the track record of airlines world over, consistently, growing, consistently performing well is a rarity. Maybe a Singapore Airlines, that's about it. And you don't have any track record otherwise of a continuously growing airline. So I will be, and Interglobe has done fantastic in terms of performance. So can they keep doing it for a very, very long time? I will be cautious there. And I will probably advise investors to be cautious as well as far as Interglobe aviation is concerned at this stage.
Okay, got it. So be a bit careful, caution advised on Interglobe Aviation. Got it. Sudeep, thanks very much for being with us and taking us through the final leg of today's trading action. I think we're down to the last 2 minutes. So let's start winding up. What's been another good day for the market? And actually, it's been a better day than yesterday. Though the Bank Nifty hasn't done as well as yesterday, the reason I say it's a better day is that it was a market with wider participation, both on the large cap screen as well as in the mid cap arena. So if you look at the Nifty, for instance, lots of stocks firing today. A lot of the metal names have done well. Hindalco is leading the charts, 2.5% up on that stock. JSW Steel has done a reasonable sort of up move with about a 2% gain coming through. You have Reliance, which has fired up 1% higher. A couple of these consumer stocks, HUL, Britannia, Nestle, all of them up between 0.5% to about 1% or so. And then, of course, no denying that banks were definitely the big support areas for the market. ICICI Bank, Kotak Mahindra Bank, Axis Bank, most of them on the upside of the screen. Even HDFC Bank putting in about 0.5%. The area which was losing some ground was the auto space, Hero Moto, M&M. These are some of the names on the downside. And then, of course, there's Sun Pharma. They have some adverse US FDA action for one of their plants. They have to deal with that. And therefore, that stock was down 2%.
Okay, all right. Well, the pockets of strength actually from the broader market, just going to name 2 of them. Fertilizer stocks, you name any of them actually, they were up between 10, 15, 20%, whether it was Madras Fertilizer, Chambal Fertilizer, GNFC, GSFC. Just pull up the list, all of them did well. And the flip side, you also had the other one that was giving company on the upside. Intraday, you had stocks like IGL, MGL, and Gujarat Gas. All of them did pretty well in trade. So both those 2 pockets of strength for today's session. Well, on that note, though, we'll wrap up on closing bell. You stay with us because markets forward when we return.
It's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, I mean, rather than, in this case, the mafia, this is all about a passion, and cricket's a global sport. And actually, the funny thing about sport just brings together people like no other activity. And, just the amount of excitement but now we have to go win it all, right? I mean, we've just got to the, Super 8s and unfortunately, the India-Australia match, I have a board meeting on that day. So it's going to be...
Big conflict.
No, the board meeting is going to take priority. But, I'm going to perhaps sneak a look now and then at what's happening.
I would imagine. The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts. And the reality is that it was the government's case is misguided. And so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly.
This is India's election headquarters.
As the verdict emerges, the markets will react.
Bringing market movements into sharper focus with the most authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things are not looking very good for the ruling regime at this juncture.
Of course,
for the market, the Nifty holds steady above the 23,500 mark. The broader market outperforms. Metals, banks, realty, they lead the charge, while pharma and auto lag in trade.
SBI Chairman Dinesh Khara tells CNBC-TV18 that there are many new entrants in the unsecured credit segment without evaluating the risks. This even as there is ample demand in the corporate segment. Vedanta's founder and non-executive chairman Anil Agarwal tells CNBC-TV18 that he aims for Vedanta to clock $10 billion in EBITDA and has no plans to dilute his holdings in the company. He's also hopeful of the demerger being completed this year.
And regulatory trouble for Sun Pharma as the US FDA issues a warning letter for its Darda unit, which was expected to make the bulk drug for Revlimid generic. From the mid-cap space, stocks of CE Info Systems locked in upper circuit as brokerage firm Goldman Sachs initiates coverage, says the company is well poised to benefit from leadership position in the automotive navigation space. Hello and welcome to Markets Forward, your go-to show. We aim to get you updated with regard to what went on today and get you set for tomorrow's trading session as well. I'm Nigel D'Souza and joining me, Surbhi Upadhyay. Well, Surbhi, another session in the green.
Another session in the green and maybe a better one than yesterday because the broader market was doing well. And along with the banks, we had, other parts of the market that were firing as well.
Well, that's right. The Nifty continued to end in the green and you had the Nifty Bank that was outperforming yet again. And in the last few sessions, the Nifty Bank has found its form. Last 3 sessions to be precise, that's been the one that's outperforming the Nifty as well. But your portfolio will be feeling good because as Surbhi mentioned, if you look at the mid-cap space, you look at the small-cap space as well, both those two indices actually outperformed what the headline index did. And that's why a lot of stocks in the broader markets are doing well. But, I want to just highlight 2 themes that did very well today. One was the fertilizer pack. Well, you had a lot of those stocks that were up and about in today's trading session. And the other pocket of strength was the metal space. You had stock-specific action on Vedanta Limited because of what Mr. Agarwal had to tell me here on CNBC-TV18 with regard to the EBITDA target, with regard to their deleveraging plans and also expansion. But the pocket on the whole did well. Both the ferrous and non-ferrous space did pretty well in today's trading session. It goes down, Surbhi, as a good trading session, no negatives coming in overnight because US markets were shut. And then the bulls took everything in their stride and we ended higher.
Oh, absolutely. And if you look at the contribution chart on the Nifty, that's the point that we are making, that it wasn't like yesterday when it was 4-5 bank stocks and nothing else. Today, there was more vibrancy on that screen on the large cap space itself. So you look at that. There's a fair amount of smatter of green here and there. Reliance was contributing. You had a lot of the consumer names like Lever, a couple of other names from the technology side like LTI, Mindtree. They were up and about. And then, of course, the banks. No denying. Again, a great day. Good follow through for banks. The Bank Nifty put on about 400 points as well. And all your major leaders, ICICI Bank, Kotak, HDFC Bank, all of them were up and about. On the flip side, there was some more profit taking in auto names, second day running. So there's a bit of a cool off going on in the auto side of the market. And of course, we'll talk more about Sun Pharma as we go along. I mean, this company-specific issue there with the US FDA, which pulled down that stock, and we'll get to it as we go on. But to look at the mid-cap index, and that was really heartening. Nifty was up 0.2%. Mid-cap index up almost 1%. And the breadth of the market was absolutely beautiful. I mean, look at this. 1,570 stocks advancing, just about 840 declining stocks. So all in all, a good market. Well, let's get started and tell you what we have lined up on the show for you today. Of course, all the top movers and shakers coming up with Vivek in just a bit. Stock of the day was Sun Pharma, like I was saying. Ekta will join in to tell us what the exact issue is on the FDA front with Sun Pharma and why that stock was down. Then, of course, we dive into all the important events that you need to watch out for tomorrow. But first up, let's get some more color into today's trading action. And that color was definitely green, Vivek.
Well, that's right. The color of the day was green, especially if you're
part of the banking pack. It's the second straight session where you're actually seeing quite a bit of a strong up move. Today, you also had a couple of brokerages, especially Macquarie, that went ahead and upgraded quite a few stocks within the banking pack. And even domestic brokerages also went ahead and upgraded quite a few mid-cap banks as well. The back of that, have a look at some of the moves that you're seeing. The City Union Bank up over 6%, DCB Bank up 4%. Both of them saw upgrades. And Kotak Mahindra Bank saw an upgrade today, up over 1%. The next set of stocks, especially these stocks, in the last couple of trading sessions have actually seen moves in the range of 30 to 35%, and very strong moves seen in the entire fertilizer pack. Have a look at names like FACT, RCF, GSFC, Chambal Fertilizers, all of them almost 20% higher in a single trading session that was today. The other set of stocks that did quite well after a while was the entire metal pack. Now, of course, led by Vedanta, up almost 5%, and even some of the other names, aluminium names like Nalco, Hindalco too, up doing quite well in today's trading session. The next stock on our radar was Bharat Forge. Overall, the auto pack today was under a bit of pressure, but especially in the second half of the trading session, Bharat Forge saw quite a bit of buying activity, the top gainer in the Nifty auto pack. The next stock, of course, was CE Infosystems or MapMyIndia. An initiating coverage note coming in from Goldman Sachs. They forecast very strong earnings growth for this particular name. Stock ended at the upper circuit, in the first couple of hours itself. But on the other hand, one stock that you'll discuss a lot more later on in the show is Sun Pharma. Warning letter for one of the key facilities. Stock down by almost 2%. Like I mentioned earlier, the auto and auto ancillary pack today saw quite a bit of selling pressure. This is for the second or third trade session where there has been profit booking at all levels. So names like Hero, M&M, Bosch, TVS, all of these stocks saw quite a bit of selling pressure today. And lastly, PNB Housing, a very large block deal happened in this particular name. What was surprising was that the lock-up period for selling of shares, after the last block deal wasn't yet done. But despite that, you saw another block deal in today's trading session. Stock ended lower by almost 6% today.
Okay, all right. Thanks a lot for that, Vivek. Well, let's welcome our guest on the show. We have Sudeep Bandyopadhyay of IndiTrade Capital and Shilpa Rao of Prabhudas Lilladher, who joins us on the show. Hi, ladies and gentlemen. Thanks a lot for joining in. Shilpa, you go first. You tell us what are the levels you're looking at on the Nifty itself. Until what level on the downside will you maintain this positive stance? In the sense, is it 23,200, 23,300? What is the level you're looking at on the downside?
Nigel, on a broader term, I would require, I would think about 20,200 to act as a crucial support zones. Till those levels are held, I believe on a little longer time frame, you are, somewhat okay, and you can see levels of 24,000 to 24,300 also coming in. So 23,200, any declines towards those zones should be ideal to go long for a little, positional play. Talking about Bank Nifty now looks like, if you're holding above 50,500, which was a resistance, and from there we have seen a spring effect, and you have almost tested, 52,000 mark. So this is where, any declines, if you find towards 50,500, as long we are holding, I believe that levels of 53,000 to 53,500 can also be achieved.
Okay, all right. Hold on to that thought. Well, the finance ministry officials, they met with capital market participants ahead of the budget. Surbhi, tell us more with regard to details that transpired in that meeting.
Well, yes, I did manage to speak to a couple of people who participated in this high-profile meeting. And I think most participants came out feeling quite good because the interactions are very open, transparent, and it seemed that, finance ministry officials were very receptive to a lot of the suggestions that were being made. The overarching demand, I think, by most capital market participants was continuity. Don't change anything. Things are going well for the market. So in terms of taxation as well, I think the request is that don't tinker with at least the equity market taxation on the capital gains front. But 4 specific issues that really stood out. So I want to sort of flag these off. Number 1, divestment of PSU stocks. One request that came in from industry was, whenever the government is looking at the next leg of divestment, please look at stocks that have low float, because the rationale given, and it seems absolutely fair to look at it this way, is that some of these stocks which are very low float, there the risk of speculation could be much higher. There the valuations could be going out of whack, and in some cases maybe there's even a bubble forming. So it's better that the government releases more stock in the market so that we don't have these valuation issues with PSU stocks. Number 2, the hot new subject, which is taxing the F&O side of the market. Now, there was an acknowledgement that yes, both SEBI and the government, it would sort of be in their interest to ensure that retail investors are protected and that there is no excessive speculation or big losses that they suffer. So how do you do this? One suggestion was, from the tax perspective, that look at taxing the big fish more. I mean, the giant whales who come in with these high-frequency trades and these, big algo-based hedge funds, their trading volumes are far bigger, so their capacity of absorbing losses would be bigger. So you increase the securities transaction tax on this category of traders by putting thresholds on the turnover. So, for example, this was just a suggestion that maybe make a threshold of 1,000 crores of turnover, and a higher STT rate should be applicable to traders or hedge funds above this turnover, and retail will be kept out of it. So that's on the F&O front. It's a moving piece, so let's watch what happens with respect to regulation around the F&O market. Number 3, coming to mutual funds, and their specific ask is to overhaul the regulatory framework to allow mutual funds to also offer pension products. Life insurance companies offer pension plans, and of course you have the NPS, which is governed by the PFRDA. Mutual funds also want the regulatory ambit so that they can offer specific products, which could be diversified funds, but at least the marketing around them, the wrapper could be in the form of some sort of a retirement saving or a pension scheme. Last but not the least, there was an ask by Indian asset managers that get Indian-run funds. These are global funds. They're not run in India, but they could be run in, let's say, a jurisdiction like Singapore or US. Get them back home. Get them onshore here in India. Because they are being managed by Indian asset managers. So what needs to be done to do this? 2 things. One request from the industry was that the safe harbor regulations, which have been sort of in place for many number of years now, they need to be overhauled and compliances need to be lowered so that these global investors can actually come in and these funds can be set up here in India as well. And the second issue is really taxation. The funds which are right now being managed out of Singapore and US, individual investors don't need to deal with taxation issues. Taxation is at the fund level, and that's what Indian managers are asking, that allow us that same framework here in India. So, as they say, it's all about make in India. So, invest in India, invest from India. That seems to be an ask as well. Overall, very happy takeaways that the finance ministry and officials there and the minister gave a very patient hearing to some of these suggestions.
Okay, all right. Surabhi, thanks a lot for joining us and, in fact, filling us in with that neat piece. Well, let's focus on a couple of stocks then. Sun Pharma, that stock was underperforming today. It was down close to 2% in trade after the US FDA issued a warning letter for its Dardha unit. Ekta joins us to run us through a quick analysis on that front. Ekta?
Well, yes, Sun Pharma's Dadra unit was in focus today because they have received a warning letter for that particular facility. Now, why is this important? Is because it is a facility which supplies to the US. It contributes around single digit in terms of revenue, but the news was largely expected. Why is that? Because in December of 2023, when this plant got inspected, they received 6 observations which were, which concerned the street at that point in time. Then they received an official action indicated status for this plant, which was issued in April of 2024, and then now it's escalated to a warning letter. So the street was anticipating some kind of regulatory action from December onwards, just based on what they saw when they came to the observations. But it's not an import alert. However, we don't know whether it can eventually turn into an import alert. But as of now, the street is anticipating that because there hasn't been any kind of escalation to an import alert, things could probably be limited to a warning letter. Warning letter, production doesn't stop as of now for their current drugs. Only the new approvals stop. So that means that business continues as per usual. We will have to see the impact of the new pipeline of drugs from this particular facility, which could get impacted. And separately, remember that Revlimid generic is also manufactured from this particular plant, and hence the earnings impact could be on account of that, but is expected to be limited.
Okay, all right. Take that. Thanks for that. Sudeep, quick comment on this one. Sun Pharma underperforming in today's trading session, a quality franchise. Will you look to buy into it?
Not really. In fact, there are a lot of issues as far as generic pricing is concerned, and that pressure is real on the prices. So I'll wait and watch as far as this entire, the large pharma is concerned, who have significant presence in US and business in US. So I'll probably avoid at this stage. Of course, I think this particular issue may not be so serious as what the market is perceiving it to be. It's just a warning and doesn't affect anything as things stand today. So that's pretty much what it is. If I have to look at pharma, I will look at pharma companies which are focused in domestic market, and Mankind Pharma is the first name which comes to my mind, with about 95-98% exposure in India, and that's a great space to be in.
Okay, got it, Sudeep. Well, with that, let's move on and talk about one of the stocks of the days. Mass Financial was buzzing in trade. The stock surged in today's trading action. We learned from sources that the company plans to raise up to 500 crore rupees via the QIP route. Abhishek has more details. Abhishek?
Well, to begin with, sources tell CNBC-TV18 that Mass Financial is looking to raise funds via QIP, and the company was looking to raise about 400 crore with an upsize option of about 500 crores. And the issue has been well subscribed. Now, sources do tell us that it might have been subscribed 8 to 10 times with respect to the demand that has come in. Indicative size was about 1.75 crore shares. Offer price was about 286 per share, which is at a discount of 8.4% to yesterday's closing price and about 5% to SEBI floor price. The book running lead managers are Motilal Oswal as well as Equirus. Now, calculation shows that the equity dilution would be around 10.65%. Net worth will increase by more than 28%. So the book value accretion kind of a raise. This is book value will increase by 16% to close to 125 per share. Now, capital adequacy ratio at the end of FY24 was about 24%. With this fundraise, it can cross 30%, and it may increase by 650 to 700 basis points based on the calculation. In the near term, the net interest margin can expand given the fact that you have free cost of funds coming in. However, ROE may get dented until and unless the leverage plays out. Back to you.
Okay, thanks for that, Abhishek. Shilpa, final question before we let you go. Any individual stock that you're looking at which is looking good on the charts?
I believe, Nigel, for tomorrow's session, one can look at Indian Hotels yet again. The stock has been showing very strong strength. This robust move up, towards all-time highs today at around 639 in futures. I believe, the stock is very well placed to even see a little more up move for 660 to 680 zones with a stop loss of 625 from here.
All right. Okay, Shilpa and Sudeep, thank you very much, both of you, for being with us and answering all our questions today. We do have to take a very quick break. We'll come back on the other side and then, of course, get you all the key events to watch out for tomorrow and, then, of course, all the big corporate voices that we picked up today.
It looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 20.
Welcome back. You're with us on Market Forward. So let's take a look at some of the corporate commentary that we picked up during the course of the day. Vedanta gained over 4% after founder and non-executive chairman Anil Agarwal told us in an exclusive interaction that he is quite optimistic on the demerger getting completed this fiscal year itself. He also expects a valuation of $1.2 billion per million ton of for the company's steel assets.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally takes 3-4 months time, but sometimes they can take 1 or 2 months more also. Steel, we are one of the best prime location of a steel asset, which is in Jharkhand, near Bokaro, is in the Bokaro. We have a proximity of all the raw material, iron ore and the coal. We are proximity of all the railways. We are proximity of all the gas. We have put this asset on the basis that if we get 1.2 billion per million ton, we have a 3.5 million ton of plant, which at the moment we are producing close to 2 million. 3.5 will be by end of this year. Total debt on the Vedanta Resources. Vedanta Limited is the subsidiary of Vedanta Resources. All put it together, the total debt in the company is $12.5 billion, which is not even 1.5 time or 1.2 time of the profit what we made. As far as the total debt on the top is concerned, we have the trophy asset on the top, which is we own the largest copper deposit of the world called Kankola Copper Mine, which is on the top, and people are looking forward from us. Would you like to dilute some equity into the KCM? We haven't thought anything so far.
Well, the street listened very, very closely to what Mr. Agarwal had to say, and the stock ended high with a gain of around 5%. But SBI slumped close to around 1% in trade. Their chairman, Dinesh Kara, told us that he expects 14 to 16% credit growth in FY25, with margins being steady at around 3.4%. He also added that the excess provisions will help meet ECL norms when they kick in. He is seeing a positive trend in the rural market.
We are hoping to see the credit growth in the range of about 14 to 16%. And we expect to see very broad-based growth in credit, right from SME, agriculture, retail, and also in the corporate. As far as we are concerned, our domestic NIM last year was 3.43. So I expect our domestic NIM should be around the same number. See, as far as ECL is concerned, first and foremost, I would say that over the period of time, the loan book of the banking system has improved significantly. So if the ECL comes, perhaps whatever competition was done, maybe about a year back, banking system would be much better. And we are certainly much better as compared to where we were last year. So I think from that point of view, we don't expect any kind of an impact on us as far as the ECL is concerned. MFIs are concerned, well, of course, I think the rural went through some challenges at some point of time, but now we are seeing positive trends. But yes, of course, we do hear from MFIs who are having a loan book that there were some challenges. But I think as far as we are concerned, we don't see any kind of a stress.
All right, so that was the SBI chairman talking about the business outlook. We also caught up with the management of Quick Heal Technologies. Now, they're guiding for faster than industry growth in the enterprise business. And they say that the segment will be over 50% of sales this year and up to 70% over the next couple of years.
Well, before we wrap up on this edition of Markets Forward, let's get you all the key events you need to track for tomorrow's session. Abhishek joins us to run us through that list. Abhishek?
Well, Nigel, for tomorrow, India HSBC manufacturing PMI will come out. It was at 57.5% last time around. Watch out for RBI data with respect to banks deposit as well as advances growth. Last time the deposit growth was at 25 fortnight low with respect to the growth rate. Forex reserves will also come out from RBI. So last time it was at record high of $656 billion. In terms of USA, S&P Global Manufacturing PMI is expected to come out tomorrow. It is estimated to come at 51% versus 51.3% last time. With respect to stocks going ex-dividend, Bajaj Finserv, Bajaj Finance, BPCL, Care Ratings, HDFC Life, Kansai, Nerolac, PNB, Tata Steel, Torrent Pharma, as well as Supreme Industries. Watch out for bonus issue which will impact the stock price tomorrow. HPCL 1:2. EGM and AGM which will be held tomorrow. HUL, Mindspace Business Parks, Adani Ports and Special Economic Zone, Adani Enterprises, as well as Tata Motors. Back to you.
All right, Abhishek, thanks for that. Well, on that note, we'll wrap up on this edition of Markets Forward. You stay tuned. More news and updates on the other side.
action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles.
Hello and welcome to Business 360. I am Ashmit Kumar and here are the headlines that we're tracking this evening. Positive end to a range-bound session on Dalal Street. Nifty posts record close and mid-cap index recovers yesterday's losses to end near record highs. Buying momentum in the banking sector continues.
Pursuit of business growth is important, but it should never come at the expense of taking on unacceptable risks.
Do not pursue growth at the expense of unacceptable risks, says the RBI Governor to India Inc. Also calls for stronger compliance culture within the banking industry, saying that perfunctory compliance with regulations will be self-defeating. Top capital market executives meet Finance Minister Nirmala Sitharaman ahead of the union budget, call for fiscal discipline, consistent tax policy and removal of tax arbitrage. SEBI clears Ola Electric's proposed 5,500 crore rupee IPO. The IPO, a mix of fresh issue and an offer for sale, would be the first by an Indian EV startup. Government cancels the University Grants Commission's national eligibility test just a day after 9 lakh candidates appeared for it across 300 cities. As the student protests intensify, government claims the integrity of the examination may have been compromised. The union government announces minimum support price for 14 Kharif crops. The MSP for paddy is fixed at 117 rupees higher per quintal. However, the percentage hike of 5.36% is lower than the 7% hike last year. Pulses and oilseeds see a sharper MSP hike. Anil Agarwal has no plans to dilute his stake in Vedanta, says the company is aiming to clock $10 billion in EBITDA, hopeful of the demerger being completed this fiscal. That's an exclusive.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform.
Valuation is just a score, says Shankar Trivedi, a senior executive at NVIDIA, days after it became the most valuable public company in the world. Umesh Sachdev of Uni4 says AI is now a boardroom topic across all companies. That's a CNBC-TV18 exclusive. At least 38 people are dead and 100 others hospitalized after drinking spurious liquor in Tamil Nadu's Kalakuruchi. 4 people have been arrested so far, facing severe criticism. Chief Minister Stalin promises to hold officials accountable for this tragedy. At least 9 people waiting for food assistance allegedly killed by Israeli forces in Rafah. Israel's Prime Minister Netanyahu rebukes the army spokesperson for saying that Hamas cannot be eliminated. Well, let's begin with a quick look at the day's market action. Now, the market posted a record close after a range-bound session. Sensex gained over 140 points and the Nifty gained about 50 points. The mid-cap index recovered yesterday's losses and ended the day at near record highs. Well, from Dalal Street to Mint Street, RBI Governor Shaktikanta Das has called for stronger compliance culture within the banking industry. Speaking at an event in Mumbai, Das said that perfunctory compliance with regulations will turn out to be self-defeating. He also had a word of caution for India Inc. Das said that growth should not be pursued at the expense of unacceptable risks.
Both regulated entities and supervisors need to be vigilant to risks, if any, in the business models of organizations. While business models may be designed to drive profitability and growth, they sometimes contain vulnerabilities that may not be apparent. Pursuit of business growth is important, but it should never come at the expense of taking on unacceptable risks. Robust risk mitigants are essential for ensuring long-term success and resilience of a regulated entity as well as the overall financial system. Perfunctory compliance with regulations would actually be self-defeating. I am happy to note that at the systemic level, there has been significant progress and improvement in compliance culture in our financial system. The heads of risk management, internal audit and compliance functions are the conscience keepers of a financial institution.
Well, news now from the national capital. Representatives from banks, NBFCs and asset management companies met Finance Minister Nirmala Sitharaman today to express their wish list weeks ahead of the union budget. The requests include a consistent tax policy and the removal of tax arbitrage. This meeting follows a day after Sitharaman met top economists to decide on the budget agenda.
There were some suggestions which many of us gave. Mutual fund, maybe I was president of the Association of Gold Loan Companies. We also gave good suggestions. I'm sure they said we'll definitely look at it. No, there is nothing that top ask. We have given to them.
What are the broad suggestions?
Yeah, broad suggestions for improving the capital market, improving the funding to the retail sector. We do the last mile funding. Association of Gold Loan Companies, we do the last mile funding. They are very happy with that. So I'm sure they will support us in that.
I think our main request is to keep on that path. Fiscal discipline is absolutely critical, and so is the effective inflation targeting. I think the main thing is these policies need to be stable and they need to be long-term oriented. What you cannot have is too many changes happening every year, every second year. So the suggestion from the industry was try to keep consistency in the tax policy. And yes, there might be some areas where there is some arbitrage and which the ministry should take into account as they think about the long-term policy.
And Ola Electric has received SEBI's approval for its initial public offering. The electric two-wheeler maker is proposing to raise up to 5,500 crore rupees through a fresh issue. The IPO includes an offer for sale component of 95.2 million shares. The company had filed its draft red herring prospectus with SEBI on December 22nd. The Union Cabinet has hiked a minimum support price for 14 Kharif crops for the year 2024-25 crop season that runs from July to June. The government said that farmers will now get 2 lakh crore rupees as MSP, which is 35,000 crore rupees rise from what they received in the previous season. Lata Venkatesh joining us now with more details. Lata, give us a sense of the impact that this will have on inflationary tendencies.
Well, the MSP is always analysed, I mean, the minimum support price is always analysed to see its impact on CPI. This time, of course, more closely because there was this expectation that maybe there was farmer disapproval of the BJP's policies and therefore whether there would be higher increases. But actually the biggest weightage, cereals, and therefore in this case paddy, since wheat is a rabi crop, the MSP, the increase for paddy is 5.36. Last year it was 7%. So clearly that is not showing any indication of populism. Likewise, dal, arhar, which is what, tur dal. Tur dal is up 7.86% versus 6% last year, but that's also because there has been some double-digit pulses inflation, and therefore this is an incentive for people to grow more of pulses, and therefore that is a little higher. But the point is, the MSP itself doesn't enter the CPI. If the minimum support price is high, then market prices rise because traders have to pay even higher to get it from farmers, and therefore the expected price increase of the market rates is higher. However, at the moment when the MSP was being announced, already the paddy and tur dal prices are higher than the MSP price. So this is not going to have any impact on the CPI. The net impact, according to economists, is about 40 to 45 basis points. Actually, 40 basis points on the CPI. And last year it was over 60 basis points. So clearly, when economists are calculating the CPI forecasts, they factor in some MSP impact. This time it is not more than what they had anticipated. There is a slight higher increase in oil seeds, but that's more to spur production, and not much crop is procured, oilseed crop. So it won't have too much of an impact on the CPI. The short point, no economist has raised their CPI forecast after looking at the minimum support price. The other question people were asking is, will the higher MSP indicate a more populist budget? Now people are not making that connect anymore, because you may not want to give a higher MSP because you don't want inflation to rise. After all, food inflation is pretty high. You could still have a controlled inflation MSP policy and still have a populist budget. So people are not making that connect just yet.
Right, Lata, thanks a lot for that. Valuation is just the score. We are all about playing the game of accelerated computing. That's the word coming in from NVIDIA's Senior Vice President of Enterprise Business. In an exclusive conversation with Shireen Bhan, Shankar Trivedi said that generative AI is the killer app among many others in computing, and NVIDIA has been working on it for many years now. Another AI player, Unifor, believes that no company can ignore not having AI.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So in no overnight success, which is what people sort of suddenly, like, where did NVIDIA come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Unifor, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Unifor?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with Gen AI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company. Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application. Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make this all happen?
Well, you can catch that entire conversation, exclusive conversation, at 7:30 and 9:30 p.m. right here on CNBC TV18. And speaking of exclusives, Vedanta chairman Anil Agarwal has no plans to dilute his stake in the company. In an exclusive conversation with Nigel D'Souza, Agarwal said that the company is aiming to clock $10 billion in EBITDA. Speaking about the demerger of its business, Agarwal said he's hopeful of completing it in this financial year.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand. It is in the hand of NCLT. NCLT normally takes 3-4 months time, but sometimes they can take 1 or 2 months more also. Total debt on the Vedanta Resources. Vedanta Limited is the subsidiary of Vedanta Resources. All put it together, the total debt in the company is $12.5 billion, which is not even 1.5 time or 1.2 time of the profit what we made. As far as the total debt on the top is concerned, we have the trophy asset on the top, which is we own the largest copper deposit of the world called Kankula Copper Mine, which is on the top, and we are looking, people are looking forward from us. Would you like to dilute some equity into the KCM? We haven't thought anything so far.
With that, it's time now for slipping into a very short break. But coming up, the government cancels the University Grants Commission's national eligibility test just a day after 9 lakh candidates appeared for it across 300 cities. More details when we come back.
Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity, and low self-esteem.
In India, you see a lot of gum disease, which is also promoted by things like tobacco and supari.
Poor oral health is linked to serious systemic issues like heart disease, Alzheimer's, digestive problems, bacterial pneumonia, preterm delivery, and cancer.
If your teeth, the way they meet, what we call occlusion, is not proper,
it can lead to other damage to the joints, to the gums. We have bone loss around the teeth.
Use a soft brush, destroy your brush, don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
Has picking up. The last year we had almost 6% of our turnover from the export. This year we are planning to almost almost increase our export to coming from the 2 times. Last year we have 70 crores. This time we are planning for 150 crores in the export market. Revenue growth last year, the way we have done crossed almost 23%. We have the revenue growth. We will maintain the same momentum this year also. Last year we had around 20% operating profit margin. Maybe it will be coming to around 25 in that range.
Of course, in the budget, the thing to watch out for would be how much of the money is left in the hands of the average household. So consumer durables, and consumption and consumer discretionary.
Welcome back. Now, here's the big national story. 9 lakh candidates across 317 Indian cities will now have to retake the University Grants Commission National Eligibility Test, or the NET test as it's commonly known. Now, this after the Education Ministry decided to cancel this examination that was held on June 18th following inputs that its integrity may have been compromised. The matter now has been handed over to the CBI for an investigation. This is the first centrally conducted public examination to be scrapped after the centre introduced a new anti-paper leak law. The National Test Agency, or the NTA, which is in charge of conducting the examination, is already facing heat for alleged irregularities with relation to the NEET undergraduate program, which is a single window entrance test to all MBBS programs in India. Now remember, the UGC NET determines the eligibility for junior research fellowship for the post of assistant professors and PhD admission in universities, and comprises of 2 papers. However, the issue has already transformed into a major political slugfest. Several student unions, including Congress's student wing, that's NSUI, held protests outside the Education Ministry in Delhi over the cancellation of NET exams. Shivani Bazaz is getting us more from the protest site.
Well, the alleged paper leak issue that started with the NEET medical entrance exam has now reached the UGC NET exam and has led to full-blown political protests across the country. Students are protesting outside the Ministry of Education here in Shastri Bhavan in New Delhi. As you can see behind me, a lot of students are sitting on protesting against the cancellation of exams and the alleged paper leaks. They're also demanding the resignation of the Minister for Education, Dharmendra Pradhan, and also attacking the NTA, the body responsible for conducting exams. We have some protesting students over here with me. Ma'am, what is your name?
My name is Bushra.
Bushra, did you take the UGC or NEET exam?
No, I teach for UGC NET Commerce and Management examination. We are over here representing the students, demanding the resignation of NTA chairman, and we want a few answers from the NTA officials. कैसे कल शाम में 7 बजे अराउंड NTA ने एक नोटिफिकेशन दिया जहां पे उसने बोला कि सक्सेसफुली कंडक्टिंग दी UGC NET एग्जामिनेशन. उसके अराउंड 4 आवर्स के बाद में मिनिस्ट्री ऑफ एजुकेशन के द्वारा एक नोटिस रिलीज होता है कि एग्जामिनेशन को उसने कैंसिल कर दिया. तो ऑल ऑफ अ सडन 4 आवर्स में ऐसा क्या हुआ? और जब हमने नीट के इश्यूज इतने टाइम से आ रहे थे तो व्हाई वाजंट द एग्जामिनेशन पोस्टपोन्ड? So I believe that many of the students they were saying कि भाई उनको जो OMR थी उसको फिल करने के बाद they have not received a copy of the OMR as well. उसके अलावा whatever scams have been happening, as ma'am mentioned as well, that they have not, the seal was open, there were no facilities as such in the examination hall as well. If they are delaying for 4 minutes, students were not even given entry into the examination hall, and such big scam, you are not taking any responsibility.
Well, as you can see, a lot of anger amid students, especially after what happened with the NEET examination. examinations. 1,500 students with grace marks. The grace marks were cancelled and they were asked to take the examination again. So clearly full-blown protests on. Congress has also announced that there will be a nationwide protest on Friday. At the moment, the matter is being handled by the CBI now. That's what the Ministry of Education is saying. We'll have to wait and watch for what happens in this matter. Back to you.
Well, amidst these allegations of a paper leak in NEET UG, an aspirant from Bihar has admitted to acquiring the question paper a night before the examination and memorizing the answers. In a confession letter, Anurag Yadav said that the same questions were asked in the examination the very next day. Bihar police, meanwhile, has arrested Yadav, his uncle, and 2 others who reportedly sold the leaked paper for over 30 lakh rupees. Meanwhile, the Supreme Court has paused all cases on the alleged leaks and malpractices pertaining to the NEET UG in high courts. The top court has issued a notice to the centre and the NTA on petitions seeking cancellation of NEET and a court-monitored probe. It has sought a response from them by July 8th. Well, to Delhi now, water shortage in the national capital continues to worsen. Residents are seen queuing up near water tankers. A report by Central Groundwater Board has highlighted that Delhi has already extracted 99% of groundwater. This comes a day after the Delhi Minister Atashi said that she will go on a hunger strike if the central government does not provide water as soon as possible. Danish Anand is bringing us this ground report from Delhi's Sangam Vihar.
Delhi has a water demand of over 1,000 MGD, that is over 1,300 million gallons per day. But the Delhi government has accused that Haryana government is not releasing Delhi's fair share of water, while Haryana government is supposed to release almost 630 MGDs of water.
अब क्या करें, हम यहाँ की पब्लिक है, बहुत परेशान है भाई साहब. 15-15 दिन से हम लोग नहाए नहीं हैं. मुँह धो लेते हैं, खाली 20 रुपए की बोतल लेके आते हैं, तब अपना घर का गुजारा कर रहे हैं. और हम प्रसाद बांट रहे हैं, पानी नहीं मिल रहा. 30 रुपए बोतल तक पानी नहीं मिल रहा. टेंट लगा हुआ है सामने.
बूढ़े पुराने आदमी कहाँ जाए? जिसका बच्चा 10,000 कमा रहा है वो 1,500 का टैंक लेगा, बच्चन को कहाँ भेज देगा?
After the orders of the Supreme Court, the upper Yamuna body meeting took place in which the Delhi government and Haryana government sat together, and the Delhi government requested Haryana government to release extra water on humanitarian grounds. But Haryana government said that they will be unable to do so. Considering this this issue, we saw that Delhi's water minister Atashi, she wrote to PM Narendra Modi yesterday and she requested PM Modi to intervene in this situation. She said that Haryana government is releasing 100 MGDs less water, and she said that 100 MGDs less water will affect at least 28 lakh people in the national capital. And she has said to PM Modi that if PM Modi doesn't intervene and by 21st June, if the water crisis situation in the national capital is not solved, then she will be sitting on an indefinite hunger strike.
Well, the cabinet has approved the development of an all-weather deep-water port at Vadhavan near Dhanau in Maharashtra. The port will cater to large container vessels and will be jointly constructed by the Jawaharlal Nehru Port Authority and the Maharashtra Maritime Board. The JNPA chairman has said that construction of this port is critical as the JNPA and Mundra port will be reaching maximum capacity soon. Rachna Dhanrajani is here with us on the specifics of the Vadhavan port. Rachna, tell us about this project. When is it likely to be completed?
Well, it is the Vadhavan port that will be constructed in Dahanu near Palghar. It will be a joint venture, like you said, between JNPA with a 74% stake and the Maharashtra Maritime Board with 26% equity. The total project cost is set at about 76,220 crore rupees. The project will be developed in 2 phases. First will be ready by 2029 and second by 2037. It will be designed to hold 23 million 20-foot equivalent TEUs, which no other port in India can due to natural limitations. With 9 container terminals, each about 1,000 meters in length, the port will be equipped to harbour the largest vessel in the world that carries about 24,000 TEUs, which up until now, no other port in India has the capacity to. And so if the containers on the vessel now have to come to India, they now have to first go to either UAE, Colombo or Singapore, shift to a smaller vessel and then make their way to India again. But with Vadhavan, that won't be the case anymore. In fact, because Vadhavan will be able to accommodate large vessels like Singapore and Colombo, for other smaller ports, this would open up an additional revenue stream. This is also a mega green port. Mega because of its size and green because it's going to be carbon neutral. The port is also expected to aid trade flow through India, Middle East, Europe corridor, the IMEC, and International North-South Transportation Corridor, the INSTC. It will also be the first state-owned port to be developed in 2 decades after Kamarajar Port was built in 2001. Although the proposition for Vadhavan started in 1991, the project was always engulfed with challenges that came in form of approvals, protests from local fishermen, the village community. So now the promises made by JNPA are that not a single tree would be chopped down, and 90% of the 12 lakh jobs that the port will create will be reserved for the localites. I spoke to the chairman of JNPA, Unmesh Wagh, asking him about the challenges faced and how they overcame those. Here's what he said.
We will have that environmental impact assessment, and accordingly a plan will be put up so that it will be a minimum. And we did that. That's why we got all the clearances. We did more than 30 studies with various agencies. So that is a full fruit case. Then another aspect of the social aspect, most of the aspect, because initial plans were having some flooding or some rehabilitation issues, we just changed the plan, took it inside sea. Do you believe that this size of project is coming and we are not touching one mangrove tree?
Well, with that, it's a wrap on Business 360. But as we go, here's a quick note. A daily wrap of the top headlines will hit your inbox every day before you call it a night. CNBC-TV18's daily newsletter on LinkedIn featuring the top 10 stories on markets, corporate updates, economic insights, and financial highlights. So subscribe now and get the CNBC-TV18 edge. The news and updates will continue right here after this short break.
Whether it be your two-wheelers or whether it be your health, pharma, and all of these things will see some sort of, extra attention than what these sectors have got so far.
I apologize for the grief that we have caused. And I want you to know we are totally committed in their memory to work and focus on safety for as long as we're employed by Boeing. So again, I'm sorry.
You said you've listened to the whistleblowers. Have you directly spoken to any of the whistleblowers?
I have not directly spoken to any of the whistleblowers.
Do you think that'd be a good idea to do that?
Yeah, I think it would.
I'd recommend it.
Yep.
You've got 32,000 machinists. These are American workers who work for you. These are Boeing employees in the Pacific Northwest. You're in contract negotiations with them right now. 32,000, that's a lot of them. The last time that they got a contract was 16 years ago. Do you remember the terms of that contract?
I don't. It was a very long contract.
Yeah, well, they got 1% wage increases over 8 years. 1% over 8 years. You got a 45% increase just last year, and you're making $33 million. Do you think maybe these folks deserve a raise?
Oh, they will definitely get a raise.
Good, good.
love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person, either owning a team or at least supporting a friend's team.
And so it's a passion, and I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. Yeah. So you had passionate fans, like we have passionate fans in team.
Hello and welcome to Big Deal. Now let's decode small and medium REIT, a mini version of real estate investment trusts, an asset class which is newly regulated by SEBI, and action has really picked up in this particular space as newer form of real estate investment, and the first listings of SM REIT is likely in a few months. Now, apart from new listings, it enables also the existing companies engaged in acquiring and management of real estate assets through fractional ownership platforms or FOPs to transition their existing business model into SM REIT platform. Now, REITs are in the listed space now, and SM REIT is also making the way, expanding the scope and size of this sector. Let's understand with experts who have their skin in the game. Let me welcome on the show Anshul Jain of Cushman & Wakefield, Kunal Mokhtan, who's from Property Share, and Katie Chandy from EY India. Gentlemen, so good to have you on CNBC TV18. Now, Kunal, since you're a player in this particular segment, I want to first begin with you on how does the SEBI regulation change the game for you, and what are your plans for listing on the platform?
Thank you for having me. So until now, we were operating as a non-regulated tech platform offering rented real estate assets through our tech platform to retail investors. What the SM REIT regulations has meant is now we are under the regulatory framework of SEBI, which means that the product is now fully regulated. It can be marketed to a wider audience. The ticket size has reduced from 25 lakhs, which was up till now the prerogative of the platform, to a regulated 10 lakhs. So, being a regulated product is always very helpful for anyone in the fintech space. So this is something that we are very excited about. And it obviously brings a large number of players or large number of retail investors into the growing investor fold of FOPs.
Right. I'm glad that you mentioned the retail participation, because REITs have been listed now for 5 years in the country, and retail participation has been growing, but at a slower pace. In fact, the traction over there can be far higher. Now, Anshul is right here with me. Anshul, now you've seen the space. Let's talk about REIT on the whole, because SM REIT is essentially a subset of the REIT ecosystem. How have you seen the growth of REIT on the whole, and then the retail investor participation and interest in this asset class?
Look, as a product, it's a very exciting product, REIT, right? Because it gives you a stable income stream which is backed against some real assets, right? And these real assets are managed by professional managers, right? And I think what they're meant to do in terms of providing you a rental yield return, even through one of the worst periods for commercial real estate, which was the year 2020-2021, which is through COVID, I think was very good. And that's because it's kind of backed by real assets, which has real blue chip companies working in it, and therefore the quality of the leases are very good, right? Now, of course, from a capital appreciation perspective, there's been a little bit of an up and down on REIT, and I think Partially, it was a perception issue around return to office and whether the office as a sector will survive or not. But I think all of that's kind of going away,
behind us.
right? And and I do think that the REIT offers a very good yield product to the investors. And I think as retail investors understand this sector a little bit more, I think there'll be more investment into it.
Yes, and actually SM REIT can have a fairly good contribution in making retail participation more emphatic in this particular space. Now, Katie Chandy, SEBI guidelines have come which are akin to what the REIT guidelines have been, with changes as per the small and medium category of REITs. But there have been also FAQs where clarifications have come from the market regulator SEBI just yesterday. What are the key market moving or needle moving aspects and clarifications in those FAQs which stand out and make a difference?
I think, the FAQ is a really good, a good sign of SEBI listening to the market, and topical issues such as 10 lakhs is minimum, what happens to the stub, the stub investment in an old asset that has to be migrated. Now, SEBI has prescribed what one can do. Whether that will go through how you do that is one part. The second point is, again, on migration. A lot of the issues are on migration because, as you know, without a regulatory framework, people were putting these FOP platforms together. So now a lot of these FOP platforms had debt instruments and CCDs. And there is a prescription on the quantum of leverage that real estate REIT, SM REIT can have. It has been clarified that, if there is a debt instrument under the old scheme, that is not deemed to be leverage. So that's a huge benefit. There were also questions on, the economics to the manager and how does, how does the property get managed. That has been clarified quite succinctly. On what can happen. There were points about existing investments and the manager's stake, which is 15%. Now, again, for migrated assets, that is not required. So that's also a very big amendment or very big clarification. It was there in the provisions. It's been clarified as well. So these are, I would think, 3 or 4 big changes that makes it that much more viable and giving liquidity to, in some ways, an illiquid asset.
Right. So you enumerated what all clarifications came in and what it means. But Kunal, a few things on this which could be restrictive, given that the business models are not really compliant with how SEBI has now structured the regulations. Like a few of those points could be also the lot size, and on the other hand, 200 investors, 1 property. How do you see the challenge in terms of the migration?
Right. So there are 2 parts of the SM REIT listing process, like Chandy just pointed out. One is the migration, which is all the properties that FOP platforms have already funded and listed on their platforms and they currently manage, and all the new listings that are going to happen. So your question on all these lot sizes and 1 SPV and so on is sort of only relevant to the migration part, because going forward, all the ticket sizes will be 10 lakhs, only 1 SPV will own the asset and so on. That has now been completely clarified by the regulator. As far as the migration is concerned, the regulator has said that it's optional. So you need to go and ask the investors if they really want to migrate their investments into a listed trust vehicle. And there are some issues there. For example, the minimum investment has been 25 lakhs, which is something that PropShare started back in 2015, and which has then been followed by several other platforms. But what that means is that now you have, if you want to migrate that and someone owns 25 lakhs worth of shares, then he will have 2 shares of 10 lakhs each and 1 share of 5 lakhs. And till now, we didn't know how exactly this is now going to be migrated. In the FAQs, SEBI has clarified that there are 2-3 options that you can use. You can buy and sell between investors to make it 10, and you could put it in a trust and so on. So there are these issues particularly in migration, which I think will exist for some time. The regulator has given an extra 6 months for platforms to migrate, and it's not compulsory. So I think this is more question of working closely with the regulator and trying to see how we can migrate as much as we can to the new framework, because it is definitely something that's helpful for existing investors of these properties.
Right. Katie Chandi, on that particular point, one more aspect is that the investment manager should have at least 10 crores of net worth. Is that going to be a challenging aspect in this space?
I think the size of, and you have to think of where SEBI is coming from. They want investment managers of repute, of substance, and they have prescribed qualification conditions as well. So this 10 crores of liquid, 20 crores of net worth, and 10 crores of liquid asset, while it seems it seems large, but given the size of properties that they will manage, a type of size of schemes up to 500 crores, I would think the really serious investment managers will get this going.
Okay, all right. So these are the various, clarifications that have come in, which now, Anshul, makes this particular space ready to take off. And I was speaking to one of the players who's ready to list, and probably Kunal is also getting ready with his company as well. Now, looking at the different aspects, how do you compare SM REIT to REIT?
Well, I would say it's not comparable in many ways, apart from the fact that it's, both are listed and you have multiple owners.
And in the same space, and it's a subset.
In the same space. And I'll tell you why it's not comparable, because I think if you look at the large REITs, it provides a lot of diversification of properties within the portfolio.
Yes.
Right? So that's, I think, a very important part, right? And not only diversification across the size and the number of buildings, but also between geographies, between the type of building, sometimes IT, sometimes commercial, right?
Yes.
So, and second is the REITs either are managed by large global institutional professional managers who have many years of experience doing that, or large Indian institutions, and people who kind of developed and owned properties and leased properties over years, right?
Yes.
So it's a very different game.
Yes.
It's but of course, the yields would be less.
Yes.
Because the risk is lower than SM REIT. Now, SM REIT, I think, from a regulator's perspective, is a great idea, because you're basically trying to build in a protection layer to the great Indian love of buying commercial properties, right? So, and which is kind of fantastic, right? The issue will remain as to, the size of each listing is going to be small, right? The cost of actually managing those regulations is usually high, so proportionate. So you need to have multiple listed vehicles to be able to manage it. And then the quality of the asset manager, right? So if 20 SM REITs are going to emerge in the next sort of, let's say 2 years or 1 year, right? What is the quality of those managers? What's their ability to lease? What's their ability to understand the changing nature of corporate requirements, who are ultimately going to be in that space and pay the rentals, which will then pay the yield, right? So I think that area is getting really complex. And an asset manager needs to have a very deep understanding of how the demand's changing and how the asset needs to be managed. And therefore, selection of that asset manager when one is investing into SM REIT becomes really important.
Right. So many points that you made, Anshul, and yes, there are many differences between REIT and SM REIT. Kunal, help us understand, especially on corporate governance. Now, there are investment managers or sponsors, but with the fact that RPT, related party transaction, is not allowed, which is the cornerstone of REITs per se, but they also have many global investors, which also takes care of the corporate governance standards in the mind of the investors. What is the comfort on corporate governance that SM REITs will provide?
That's a very interesting question. So, like Anshul pointed out, all the 4 REITs have large international funds as sponsors. One of them, of course, Blackstone, where I myself started my career and worked in buying some of those assets. So there is a sense of security that an investor gets when they know that a Brookfield or a Blackstone is part of the shareholding team or sponsor group in terms of corporate governance. However, if we look at the track record of REITs, like Anshul pointed out initially, in terms of the price per share and the dividends, they've not really performed. They are still sub 6%. The stock prices are still around the 300, early 300 mark for example, Embassy Office Parks, which listed 4 or 5 years ago at the same price. So investors have not really made any returns. And the corporate governance bit, look, I mean, every one of these REITs have also a developer who is a sponsor. And many times we see the REIT buying buildings of the developer. And increasing their portfolio, which in a way is sort of a related party transaction, which the regulator seems to have allowed in the REIT. But maybe in the SM REIT, they feel like this is something that we need to not do at the time, which is great because, you wouldn't want to really be in a related party situation buying your own assets when you are a minority shareholder in a REIT, which is what's kind of happening on the REIT section. So I would say that for SM REITs, this is not an issue at all. Related party is not allowed. It's completely independent professional manager who decides what to buy. And then, what's kind of the important differentiation between a REIT and an SM REIT is that an SM REIT allows a one-on-one investment straight into an asset versus a basket of investment properties like the REITs do. And in a way, that's diversification, yes. But an investor can always diversify by buying more of similar SM REITs, because an SM REIT is allowed to launch multiple schemes versus a REIT, which only has one trust that is listed. So one could invest 10 lakhs in an office property in Bombay, 10 lakhs in a retail property in Bangalore, and still be well diversified. And the corporate governance bit, of course, is under regulation itself. A related party is not allowed. So it's much better on the SM REIT part of the business.
Right. And Kunal, here I must also mention that you've seen this particular space since its inception. You're part of Blackstone Real Estate, and which developed and listed the first REIT in the country. So you know this particular sector from the very inception. But these were the technical details of how this listing and the platform development for SM REITs will happen. But what's in it for the investors? We'll discuss more on that with our experts right after this very short break on Big Deal. Stay tuned.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to... Welcome back. You're watching Big Deal, and we are discussing SM REIT as an asset class, a new asset class, which is going to see the first few new listings in a few months from now. Now, Anshul, we were talking about the technical details of how SM REIT will work and what are the differences. Now, when we talk about the performance assessment, what is in it for the investors?
Yeah, so maybe I'll start with the bigger REITs and come back to what sort of Kunal was kind of pointing out. I think the REITs, the markets have been a little bit harsh with the REITs, right? So that's sort of the main big office REITs. I think if you think about their collection, even through the worst period, the collection of rents were almost at 98, 99%, right? Initially, the REITs did really well. The capital values really shot up. And then the perception of the REITs kind of, push the capital values all the way down. So while the rental yields would, the yield distribution is, let's say, 5.5%, 6%, I think if you combine the capital appreciation, which I think is waiting to happen as the perception improves, your total returns will be very, very healthy.
Right.
From an assessment perspective and what's in it for investors, clearly the SM REITs have the yield will be a lot better, or should be a lot better, because your risk is higher because your diversification is lower and your manager is kind of unknown.
Yes.
My view on this is anybody investing in it, like anything, it's buyers beware kind of stuff, right? So you need to have a really good view on the quality of properties, because ultimately, please bear in mind that if the property is not, it may be leased today, right? But the reality is the flight to quality is a global phenomenon. It's not an Indian phenomenon, right? And it's also an Indian phenomenon. So people are moving from poorer quality or even older buildings into newer buildings, right? So ultimately, the assessment should be, one of the biggest criteria of assessment should be what's the quality of that property, and is a corporate likely to stay? And is a blue chip and a good quality corporate likely to stay in those offices, right? And I think that's the most important thing. And that then, it really depends on the quality of the manager and their ability to continuously lease the property, their ability to maintain the property at a very high, high standards effectively.
All right.
Yeah, so those are very important things from an assessment perspective.
Right. So you gave a good sense on how, according to you, REITs have a much bigger potential. But SM REITs, Kunal, being a player, what will be your pitch point to capture the same retail audience and investors, which now REITs are also trying to capture to increase their traction? Because they have also opened an IRA, the association, and they are also educating the retail participants. So it's the same pool of investors that SM REITs as well as REITs would be trying to get investments from. How will you make a pitch point and add to that the yield dynamics, where the investors have not been very happy with the listed REITs yield performance?
Right. So, look, as far as the pitch is concerned, this is not a new pitch. We've been making this pitch for the last 8 years, and of which 6 years have been where there has been a REIT also listed on the market. So clearly, the fact that we manage amongst all the platforms close to 4,000-5,000 crores means that there's already a validation of these particular products, and that's why the regulator has now said that this is something they want to bring into the regulatory sort of fold. And the pitch is quite simple, really. I mean, the yield, for example, which is the number one determinant of value, is much higher in an SM REIT, because an SM REIT has a focused single asset investment approach, and therefore it is able to get investments into properties which are a lot more likely to give long-term returns to investors than a very diversified approach which a REIT has, right? A REIT is, the reason the REITs came into being was the fact that funds like Blackstone and Brookfield had a large portfolio, and they needed to monetize this portfolio by selling the units to the investors. Whereas the way the SM REITs have been formalized is you find the asset and then present it to the investor. In a way, you are the investment manager. And SEBI has said that the investment manager himself needs to put in 5% capital into every investment.
So you have the skin in the game. Yeah, you have your skin in the game. Right.
Absolutely.
Right. Katie Chandi, very quickly, are these kind of yields really sustainable for SM REIT? Being an expert, what do you say? Also, because the compliance cost for smaller REITs with 50 to 500 crores, and also the whole process and cost of staying in a listed space, does that make sense and also make it viable?
Yeah. So let me, Anisha, answer that question by just touching on the two aspects that Anshul and Kunal spoke about. And one can look back and say that SEBI has introduced SM REITs with the restrictions that it has put in. Learning from REIT, right? Single asset. So therefore, no dilution of income earning, no related party transactions. All matters that could have diffused value for investors, they are focusing in an SM REIT. And then it goes back to how the manager's credentials really on how they select the properties, A-class properties. And as Kunal said, one has to first identify the property and offer. So you will get, people whose specific interests are in particular assets and they understand that asset, and you need only 50 crores. So I think SM REIT has the kind of restrictions has highlighted what SEBI thinks of some of the areas of improvement for a REIT itself. Now, the cost, when it's 50 crores, I'm sure all the managers will be able to manage the cost. The cost.
So all the managers will be able to manage that cost. They will incorporate that and bake it in their entire business model. But definitely SM REIT is going to expand the scope of REIT culture in the country. And I would also make one more observation that probably it could add to the inception of first residential REITs in the country through SM REITs, because we don't have any such property developed in the REIT area or by the sponsors or the big global investors who have come in the REIT space till now. All right, Anshul, Kunal, as well as Katie, thanks so much for joining us. With that, it's a wrap on Big Deal.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment. Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube.
Hello and welcome to News Center. I'm Parikshit Luthra. Over 9 lakh candidates across 317 Indian state seats had appeared for the first part of the University Grants Commission's National Eligibility Test on Tuesday. The examination determines the eligibility for junior research fellowship, PhD programs and assistant professor posts. Little these candidates know that a day later, the Education Ministry would scrap the exam. The government's rationale: the exam's integrity may have been compromised. A CBI probe has been ordered. This is the first centrally conducted public exam to be scrapped after the centre introduced a new anti-paper leak law. The National Test Agency, which is in charge of conducting the exam, is already facing heat for alleged irregularities with relation to NEET, which is a single-window entrance test to all MBBS programs in India. The issue has already transformed into a major political slugfest. Several student wings of political parties staged protests outside the Education Ministry in Delhi. Shivani Bazaz gets us more from the protest site.
Well, the alleged paper leak issue that started with the NEET medical entrance exam has now reached the UGC NET exam and has led to full-blown political protests across the country. Students are protesting outside the Ministry of Education here in Shastri Bhavan in New Delhi. As you can see behind me, a lot of students are sitting on protesting against the cancellation of exams and the alleged paper leaks. They're also demanding the resignation of the Minister for Education, Dharmendra Pradhan, and also attacking the NTA, the body responsible for conducting exams. Well, as you can see, a lot of anger amid students, especially after what happened with the NEET examinations. 1,500 students with grace marks. The grace marks were cancelled and they were asked to take their examination again. So clearly full-blown protests on. Congress has also announced that there will be a nationwide protest on Friday. At the moment, the matter is being handled by the CBI now. That's what the Ministry of Education is saying. We'll have to wait and watch for what happens in this matter. Back to you.
लगभग 9 लाख बच्चों ने पार्टिसिपेट किया था. 19 जून को यूजीसी को मिनिस्ट्री ऑफ होम अफेयर के इंडियन साइबर क्राइम सेंटर कोऑर्डिनेशन सेंटर I4C से कुछ इनपुट मिले. उस इनपुट को प्राइमा फेसी देखने से मिनिस्ट्री को ये अपीयर हुआ कि देयर इज अ चांसेस दैट एग्जामिनेशन हैज बीन कॉम्प्रोमाइज्ड. टू टेकिंग अ वेरी प्रॉम्प्ट एक्शन एंड विथ अ एम टू इंश्योर स्टूडेंट इंटरेस्ट, the ministry has decided to cancel the examination. Next day of examination जल्दी ही कन्वे कर दी जाएगी और इसके साथ ही मैटर को CBI को भी रिफर कर दिया गया है ताकि जो भी पॉसिबल अगर कोई ऐसा इन्वॉल्वमेंट है तो सभी लोगों को उनको खिलाफ कार्रवाई की जा सके.
Let me now go across to R. Subramaniam, former Secretary of Higher Education. We're also joined by Mr. Abhayanand, Bihar's former Director General of Police, somebody who was the founder of Super 30 and has done a lot of work in mentoring people from underprivileged communities prepare for competitive exams across the country. Mr. Subramaniam, if I can begin with you, do you think the root cause of all of this, be it NET or NEET, is the fact that you're holding an exam of this scale with pen and paper?
Sorry. Yeah.
Mr. Subramaniam, if you can hear us, do you think the root cause of all of this is that these exams, be it NET or NEET, are being held with pen and paper?
Absolutely. I think, this particular issue has been debated several times in the past, as early as in 2017. And having assessed the relative risks of both this examination, NTA, in fact, the Union Cabinet has approved NTA to conduct only online examinations. This particular decision has been taken after assessing the high risk that is associated with the pen and paper examination. So now it's, of course, as far as NEET is concerned, the ministry, which is the owning department, Ministry of Health, they refused to go for an online examination for reasons which are, of course, best known to them. And I'm sure they have taken a very considered decision. As a result, the threat of leakage in this very, very crucial examination clearly looms large every time you conduct an examination. In fact, we used to say that the NEET is a Ram Bharosa exam because you don't know what would happen because there are so many leakages. It's just waiting for anybody to just hack into the system. And what is most saddening is to see that the NET, UGC NET, which has always been an online examination, I was told that this year they have taken a decision to convert it into a pen and paper examination. So this really, really sort of saddening because fully knowing the risks involved in this, a decision has been taken to go to a pen and paper examination, and I think it's not good.
Right. Very important points there. Mr. Abhinand, could you give us a sense, because police forces across the country, even in Bihar, have investigated previous cases of paper leaks. So when you have a competitive exam of this scale, when you've got 24 lakh students across the country appearing for a NEET-like exam, 11 lakh appearing for a NET exam, what are the points where the exam paper can be leaked or a compromise can actually take place? And what do you think about the investigation that is now underway? One at the end of Bihar police in the NEET case and one at the end of CBI in the NET case.
As a policeman, when I say it, although I must admit my inability to understand things from the education point of view, because I've never been in that field, except while I was teaching students, poor students. But the way I see it is an interaction between man and machine. There is a human element and there is a machine element in the whole process. Whichever way it is, even when we were students and we were appearing at competitive exams, there used to be less of machine and more of men. Even then, we would hear, not so brazenly, but we would hear paper leaks and offenses, irregularities, not as brazen as this, but yes, to some extent. So the thing that comes to my mind is offenses are being committed, whether you have in the mix, you have more of machine and less of men, or other way around. Offenses are being committed. Whenever offenses are committed, the approach of the state should be get hold of the offenses, investigate them very fast, and punish the offenders very ruthlessly and very fast, so that the impact is such that nobody dares to commit that offense. Otherwise, you can, as the cliche goes, change the system or improve upon the system. And I've been hearing for, now that I have retired 10 years ago, so 47 years now, I've been hearing this in the system and out of the system. It doesn't really work. You keep changing the system and the system finds ways and means of creating holes in it. So the answer that I take it as a policeman with that experience is an offense gets committed, get hold of the offender, prove the offense against him, and punish him exemplarily so that the others don't feel like committing of similar offenses. That's how I look at it.
Right. So set a strong example with the justice delivery system, something you had focused on in your tenure as well. Speedy trials, speedy convictions, and strong punishment. Mr. Subramaniam, coming to you. Now, over here, you've got students protesting outside the education ministry. In the NEET case, there is a question mark, uncertainty being faced by 24 lakh students. In the NET case, 11 lakh students are facing uncertainty, and these are difficult exams. There are students who are preparing for a year. These are not very easy exams. These are not procedural exams. It's difficult to get ready for them, and it's a mental setback as well. What is the immediate relief that can come from the side of the Union Health Ministry and the central government?
I think they have to really look at the system. You know, the current system is completely of pen and paper, is a thing of the past. Across the world, everybody has switched over to a very, very foolproof, fraud-proof online system. And I think we should not look back. We are talking about digital India, and we are pioneers in it. Across the world, we have constructed. We have got great softwares which are completely tamper-proof. I think we should just adopt that and not let any scope for miscreants to get into the system, because all the time people are trying to tamper with the system. So our system should be one step ahead, and then have a very, very and it is possible. It is not that I'm making a statement. It is possible. It has happened. You look at JEE. I think it's extremely well done, and there are no complaints whatsoever. So we can further better on this. So I look at that the solution lies in reforming the system rather than, of course, punishment should happen. But more importantly, the system should be such that it should not allow any offense to be committed.
Right. Mr. Abhinand, if I can come to you, you've been dealing with students, you've been teaching students for a long time now. Of course, there are culprits in the system, people who benefit through unfair means. But how does this deal a setback to students who are from underprivileged communities, their preparation, their economic resources? How does this affect the youth of the country, according to you?
Complete demoralization. Because I have been dealing only with students 15 years into my service and then after service. That is 15 plus 10, almost 25 years. These children do not have any money with them. They have sharp mind. They know their mathematics. They can do physics and chemistry as well. So that is why I don't pick up students from the NEET area. One, I do not know biology. But the second part is, there is a lot I have heard about NEET. I do not know why it is happening. NEET, when it was called AI